climate envoys continue their meetings to find common ground on combating rising world temperatures. For the U.S.'s part, Congress has authorized billions to develop carbon removal plants, and one company tasked with developing one of those facilities is already up and running in Iceland. And that's where we find our Diana Olick with an exclusive, up close, and a very personal look. Diana, good morning. Over to you.
Good morning, Frank. This is Mammoth. It's the newest and largest direct air capture plant in the world, and it's from Zurich-based Climeworks. It's about 10 times the size of its previous model. 1/6 of it is now operational, but it will be complete by the end of this year. Now, this plant will eventually remove roughly 30,000 tons of carbon per year, or the annual emissions of about 7,000 gas-powered cars. Huge fans suck air into containers where steam is used to separate out the carbon dioxide. That CO2 is then pumped into water like a giant soda stream and piped into the ground, where it eventually becomes rock. And this is just the beginning.
Every 3 years, we've built a plant which is at least 10 times larger than we've been building before. Like, just go ahead and extrapolate that. We will be quickly at millions of tons and then tens and hundreds of millions of tons. So, I mean, if we look at how other industries have scaled up, we can reach billions of tons by 2050.
Climeworks just entered the U.S. market thanks to $500 million from the U.S. Department of Energy. It is one of 78 companies in the U.S. direct air capture space, from small startups to names like ExxonMobil. And Climeworks' client roster is wide. These companies are purchasing carbon removal at about $1,000 per ton. The expectation is that will eventually drop to around $300 per ton. Mammoth has already sold 1/3 of its capacity before it's even finished.
Capital for these companies so they can scale up, and when they scale up, they bring down the cost. That's what makes it affordable more broadly.
Congress appropriated $3.5 billion for regional DAC hubs in the U.S. That's direct air capture through the infrastructure law. Millions more are coming from funds like the X Prize, Bill Gates' Breakthrough Energy, Lower Carbon Capital, and the Chan Zuckerberg Foundation. When you add in all the supply chain to this technology, Wurzbacher says once scaled, this could eventually be a $1 trillion industry. Frank?
So, Diana, very interesting story. I mean, just fascinating visuals and just all the big companies that are getting involved with this company. We know that this plan is designed to fight climate change, but I do want to ask you, how is it being powered?
Well, interesting you should ask, Frank. If you look over there, that big puff of smoke is actually geothermal, and there are massive pipes pumping in that geothermal energy. That is hot steam that comes into the plant and then is converted to energy to run this enormous facility. And of course, it's pretty easy to have geothermal in Iceland because essentially we're standing on a volcano, Frank.
You know, I was wondering why the facility was in Iceland. Now it all makes a lot more sense. Diana Olick, great reporting as always. Great to see you. Stay warm. It looks very cold there. All right, coming up here on Worldwide Exchange, some optimism around Airbnb and a new bullish call despite this morning's post-earnings pullback. We'll be right back after this break. All right, welcome back to Worldwide Exchange. Time now for your morning call sheet. We start with J.P. Morgan raising the price target on one of your morning's big money movers, Airbnb, moving it from $140 to $145 per share. It says third quarter revenue will accelerate after second quarter stability as the company lays the foundation to expand beyond its core business. Raymond James upgrading its rating on Cheesecake Factory to outperform. It cites outperforming comps, improving margins, and low valuation for that move. And JMP raising its rating on Shopify to market outperform on the back of what it calls solid Q1 results. JMP says it sees new merchants and subscription price increases helping to boost the company. Time now for your global briefing. The Bank of England is out with its latest monetary policy decision at 7 a.m. Eastern. The BOE kept interest rates unchanged at 5.25% last month, far from their lowest level of 0.1% in December of 2021. That was before the bank began raising rates. Chinese exports rising by 1.5%, beating expectations after contracting in the previous month. Imports also showing some signs of life, growing more than 8% compared to the estimate of just below 5%. And Spanish bank BBVA going hostile, taking its $13 billion takeover bid for its rival Sabadell directly to shareholders after Sabadell's board rejected the exact same proposal earlier this week. Sabadell says the unsolicited offer significantly undervalues its potential and its growth prospects, while BBVA argues the merger would create a bank with greater scale in one of the world's most important markets. All right, coming up here on Worldwide Exchange, the one word that every investor needs to know today, plus the mega cap tech stocks high on our next guest shopping list, including one fighting to crawl back after an earnings beatdown. We'll be right back after this break. All right, welcome back to Worldwide Exchange. It's time now for your WEX wrap-up. We begin with House Speaker Mike Johnson defeating a challenge by Georgia Congresswoman Marjorie Taylor Greene to oust him from that role. The final vote to vacate the Speaker's chair was 359 to 43, with just 10 Republicans joining Greene. Federal Reserve Governor Lisa Cook is warning that the surge in private credit or loans made by non-bank entities is an emerging vulnerability that regulators need to start paying attention to. She says the market is now comparable in size to the high-yield bond and institutional leveraged loan markets. Ahead of its Friday New York debut, Chinese EV maker Zeekr is closing its IPO books one day early, reportedly raising more than $367 million. This as EV rival NIO gets set to launch its lower-priced brand Envo on May 15th, with its first car aimed at challenging Tesla's Model Y. Shares of ARM Holdings falling ahead of the open after issuing a tepid forecast for the fiscal year, raising concerns the industry's AI spending spree will slow down. Disney and Warner Brothers Discovery are planning to offer their streaming services Disney Plus, Hulu, and Max in a bundle very similar to traditional cable TV. It will be available this summer, though there are no details on pricing. And the New York Times is reporting that if Sony Pictures and Apollo Global's $26 billion bid for Paramount succeeds, the two will be intent on breaking it up, including selling off the CBS broadcasting network along with its Paramount Plus streaming service. All right, here's what to watch today. We get initial jobless claims before the open. Also watching for earnings from Warner Brothers Discovery, Hyatt Hotels, and more. Also, a pair of Fed speeches today from Chicago Bank President Austin Goolsbee and San Francisco Bank President Mary Daly. And on the central bank front, we get the latest rate decision from the Bank of England. Let's get the final check on the markets with all three indices pointed towards the lower open right now. Take a look at futures, pretty close to the lows of the morning, pulling back just a bit. Looks like the Dow would open up about 85 points lower. Joining me now is Malcolm Etheridge, CIC Wealth Executive Vice President and a CNBC contributor. Malcolm, good morning from London. What's your WEX word of the day? How do you see today shaping up?
Yeah, morning, Frank. Good to see you, man. My WEX word of the day is rational. As in, I think that with the number of unknowns we have present in the markets right now, investors seem to actually be behaving pretty rationally, right? We're not seeing any panic selling because things have gotten too quiet, and we're not seeing any irrational run-up in stocks sort of in a no news is good news type of fashion. So I feel pretty good about how investors are responding right now.
All right, so you're feeling pretty good about how investors are responding. Investors are also responding quite a bit to any commentary from the Fed. So today we get a pair of Fed speakers, I should say, speaking later today, Goolsbee and Daly. Do you think these are market-moving speeches? And what are you looking for when it comes to this? We had Neil Kashkari talking just a bit earlier this week saying, maybe, just maybe, there might be a hike on the table.
I think that's very improbable. I think the Fed chair did a good job of coming out last week and sort of putting fears over additional rate increases to bed. There's not even a possibility of rate cuts until July, right? So nothing's really going to change here, unlikely to happen before September at best. So there's also no earnings to report for another 2 months. There's no real catalyst in the markets right now pushing beyond Fed speak. And so I just don't think that there's a lot that's going to change between now and maybe the back half of the summer. I think we're in a pretty good spot right now as long as nothing unforeseen jumps out there and grabs us.
I want to bounce something off of you, Malcolm. I got some new data from Morningstar, and it's showing in part that the correlation between large cap stocks and treasury performance is at its highest level since 1997. How are you thinking about asset allocation in your portfolio?
Yeah, so I think it's good in the sense that equities and fixed income have started to initially started to uncouple and move in opposite directions. I think it's unfortunate that we're starting to look at a similar situation to 2022, where anything that was moving was all moving in the same direction. It brings that challenge to the 60-40 portfolio that we were talking about for so much during that year back into our attention. I do think it's really important for investors, though, from a long-term perspective, to recognize the disparity between fixed income and equities and expect that relationship will stay intact long-term.
So specifically when it comes to bonds, you've heard a lot of people come on the show and say they're looking at the short end of the curve. They're looking at short-term treasuries to really try to capture that yield. Overall, I know you're saying that it's kind of changed, the landscape's changed for the 60-40 portfolio, but how are you looking at bonds? Do you want to lock in longer, or do you want to take advantage of the higher yield on the short end?
Yeah, so right now we are still taking advantage of the higher yield on the short end. For the last couple of years, we've been buying way more brokered CDs than I've ever seen before in my career. And I think that trend is going to continue at least through the remainder of this year, because we can still see something like a 5+% risk-free rate of return on those brokered CDs, similar to the 2-year Treasury. Why would we want to take the additional risk with interest rates if we know for sure that's what we can get for the next 12 months and then see what happens?
All right, I want to get to some of your picks. You know, interestingly enough, you didn't know this, but you're kind of with one of the themes that we're looking at today, the AI trade, whether it's kind of reached its peak or not. Your two picks today are Meta and Amazon. Give me a sense, why these two names in particular out of the Mag 7?
Yeah, so to that end, I think our love affair as investors with AI is nowhere near over. I think it's a mistake to think that AI is cooling off at this point. I do think, though, investors are starting to look for places that AI is going to show immediate profitability, not 2 or 3 years from now. But I bought those shares of Meta when it sold off following their earnings because I think the market reacted nonsensically. I know there were concerns over Mark's plans to spend 25% or so of their annual revenue on R&D, but I think that's exactly what they should be doing. I support that plan because what we'll find is that AI actually improves ad targeting pretty soon here, and I guarantee you advertisers are going to be willing to pay up pretty well for that additional enhanced targeting.
One other thing you like about Amazon is the ad business. It's something we've talked quite a bit about here on the show. So you actually think it could reach a run rate very similar to the cloud business as well?
Yeah, so we're having conversation on a regular basis about how AWS is ceding ground to Microsoft and Azure and potentially Google Cloud as well, and who knows who else comes up behind them. But what I think is being understated here is the fact that digital advertising very well could become the new AWS for Amazon in the sense that it carries the water for the rest of the company. The margins there are so significant that they don't have to have it be their main driving force like e-commerce or even cloud today, but at a 50-ish% estimated margin, that business did something like $47 billion in 2023 alone. I have a feeling they're going to blow that out of the water this year, and that's going to really carry the business regardless of what happens with that cloud unit and e-commerce.
All right, Malcolm Etheridge, always great to see you. Your picks today, Amazon and Meta. Thank you very much. All right, that's going to do it for us. Thank you so much for watching Worldwide Exchange. Squawk Box starts right now.
Good morning, House Speaker Mike Johnson surviving a vote to remove him from power, and the Speaker will join us live from Washington. President Biden says the U.S. cutting off some weapon shipments to Israel if its military fully invades Rafah in southern Gaza. Details straight ahead. And Google employees want to know, why aren't wages rising in concert with the company's strong revenue growth? Thursday, May 9th, 2024, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And this morning, we are looking at a little bit of pressure on the equity markets. Dow futures down by about 80 points, but this comes after the Dow closed up yesterday for the 6th session in a row. S&P was down just barely yesterday, so was the NASDAQ. The Dow coming off its 6th positive session, the longest winning streak of the year. It rose 172 points. It's now up about 1% for the week to date. The S&P 500 closed lower just by a fraction of a point yesterday. The NASDAQ was down by 0.2%. And then if you check out Treasury yields this morning, we are still looking at the 10 years at 4.51 and the 2-year at 4.85.
Meantime, President Biden saying the U.S. would not supply Israel with certain weapons and artillery shells. That is, if its military invades Rafah, a city in southern Gaza where more than 1 million people are sheltering. He made the comments in an interview with CNN. The move would mark a big shift in U.S. policy towards the war, though the president said the U.S. would continue to make sure Israel is secure in terms of what he described as the Iron Dome and their ability to respond to attacks. But the political attacks starting almost immediately based on that interview all over the country and the world. There's a lot of criticism on one side and praise on the other, and it's getting complicated very, very quickly.
Some in Israel, I think some of the Israeli more far-right elements who are pushing back and saying Hamas loves Biden after some of the things.
There's people saying Hamas loves Biden. There are people saying Michigan over Israel. There's a whole lot of critique of this right now.
You really think any of that is inaccurate? I mean, I don't want to weigh in on it because I look at it, I know exactly what's going on, and I think it's just horrific. I think it's horrific. when you, right at the very beginning, it was clear what Israel had to do, and it was going to be hard. And now it's come to the point where one of our greatest allies and the most stable ally we have in that region of the world, which is such an important region of the world, we're basically pulling the rug out.
I agree with
from
you.
under. You do?
I do.
In this case?
I do.
It's just,
and I think it goes very much to actually what we showed that clip yesterday of General Mark Milley saying, which is the great conundrum of war today is all about you have to do it quickly, you have to get in and out, because the politics of doing it, and I mean, and he was making also a moral argument too, because he said, he said all of this is questionable. I mean, by the way, he showed videos and saying we've done things that are questionable, but I think that is the point in many ways, which is to say that if you feel like your entire existence is existentially at threat, there are things that you may have to do, and they may not be pleasant things. The question, of course, is look, I have great empathy for the innocent people in Gaza. I like everybody else does. The question is how do you do this?
They send you the same pictures they send me on Twitter. And war is hell, and no one wants to see that. No one wants that to happen. With that said, we know how this started, and we know how really it needs to finish. I mean, I certainly don't want to talk about being the only country to ever use an atomic weapon, but at that point in the war, it was either U.S. lives or what happened. And, I'm sure on college campuses, if you ask, 90% would say that should have never happened. But there's a whole contingent of people in this country that still think that was the right thing to do when Truman did it.
And by the way, you have to put yourself back in that particular time when they were making decisions to send their husbands, their sons, their brothers.
It would have dragged out another, we would have lost theoretically, another 50 or 100,000 Americans. Right. I mean, it all came home to roost in Oppenheimer when you saw him, Cillian Murphy, celebrating what happened, and you could see how much he was struggling with what the effects were. House Speaker Mike Johnson survived a challenge from Congresswoman Marjorie Taylor Greene, who tried to oust him from power. The vote to kill Greene's motion to vacate the Speaker's chair was 359 to 43, and just 10 Republicans voted with Greene. But think about before the Democrats were helping, it wouldn't have taken 10. With Kevin McCarthy, how many did it take? Just a handful. They call them the Crazy Eight, Matt Gaetz and the Crazy Eight. After the vote, Speaker Johnson said he appreciated the show of confidence from his colleagues, and the Speaker will join us in the next hour live from Washington.
I was thinking through some of this. I think Marjorie Taylor Greene brought this because he cooperated with the Democrats to pass something.
To pass the Israeli aid, which they're not getting anyway.
But for her vote, she had 43 votes. Only 10 of them were Republicans. 77% of the people who voted with her were Democrats.
Right.
So,
it's all strange bedfellows, but
she's cooperating with
cynically. I think if you go, there's how many members in the House? 450, whatever it is. But there's a lot of them, and they can labor in obscurity for years, or they can do stuff like this and become household names. But self-aggrandizement versus why you're sent there. But I guarantee you, she'd say, self-aggrandizement, this has nothing to do with me. This is what he allowed to happen with the Democrats is just outrageous, blah, blah, blah. But it really is self-aggrandizement when it comes down to it, right?
Yeah, it is a big fly. You think about some of the ones that you know.
Well,
Matt Gaetz,
right?
George Santos. The names that pop out are the ones who.
Did you see the press conference with the squad?
Yeah, exactly.
Yesterday?
That's what I mean. That's how you get attention.
It's like, where am I? But it did show, wow, that is a wacky place, the House. I mean, you got factions that are so.
But those are the names you know, not the ones who are voting in the Senate.
Did you see what they were saying? Is it Cory Bush and
Let's talk about some of the data from China overnight. The country's exports rising by 1.5% in April, matching expectations, but imports surging 8.4%. That was well above the 4.8% that economists had been expecting. And thanks to the jump of 9% in China's imports from the U.S. Among the categories that saw that jump, China's imports of crude oil and natural gas, also steel, plastics, and medicine, also automatic data processing machines and some parts. Meantime, I want to talk to you about this Chinese EV maker, NIO. It said overnight that it will launch its lower-priced brand on May 15th, so mark your calendar for next week. The brand is called Onvo, which stands for On Voyage. The launch coming ahead of a similar new line from rival XPeng expected in the next 2 or 3 months. NIO saying the first Onvo model, the L60, will be family-centric, a vehicle priced around $34,000 in the same segment as Tesla's Model Y. And Elon Musk has been very outspoken about how he thinks that some of these Chinese cars, Chinese electric vehicles, are better, with the exception of Tesla, he says, than all the American-made cars right now. And therefore, we need tariffs.
Right, and that's been the argument that's come from the big three, too. Right. If you talk to Ford or any of them, they are all kind of looking for the same thing, some protections from what might be coming. Shares of Airbnb are lower this morning. Earnings came in at 41 cents a share. That was compared to estimates of 24 cents. Revenue and bookings also beat expectations, but the current quarter revenue that was forecast came in lower than expected. Now, the company did say that it expects revenue to accelerate in the third quarter compared to the current quarter, in part because its summer travel backlog will kick in at that point. But right now, those shares are off by about 8.7%.
Meantime, Robinhood supporting its second straight quarterly profit, earnings of 18 cents per share, beating estimates of 6 cents, revenue of $618 million, also beating the average revenue per user, climbed 35% year over year to $104. And here's the CEO, Vlad Tenev, last night on Last Call.
We're focused on 3 things: winning the active trader market, growing wallet share with our customers, and expanding internationally. We also had the largest net deposits in the history of the company. So that's net cash and assets moving into Robinhood of over $11 billion, which is the highest ever.
Shares of Robinhood have doubled in the last year, obviously, having come down some before that.
Shares of ARM Holdings are falling. The chip designer reported earnings of 36 cents a share. Estimates were just 30 cents. Revenue is also above expectations. The company's current quarter guidance came in much stronger than expected. None of that would explain what's happening. It was the forecast for the fiscal year, which was on the lower side of expectations. But despite the drop, the stock is up more than 28% year to date. Coming up, we're going to talk about the money pouring into artificial intelligence companies like NVIDIA and Mistral AI. That's next. And then later, former Fed Vice Chair Roger Ferguson joins us with some new survey data on CEO optimism. Coming right back.
Look, we're going through the single greatest platform shift in the computer history. You know, computing hasn't really changed since the IBM System 360 invented central processing units. And now we're going through two at the same time.
That was NVIDIA CEO Jensen Huang speaking to John Ford about the future of AI. Meantime, French startup Mistral AI is reportedly nearing a deal to raise funds at a $6 billion valuation. Join us now to talk tech. Paul Meeks, co-CIO at Harvest Portfolio Management and a partner at Wall Street Beats. I don't know of anyone that doesn't see the long-term promise, I guess, Paul, in AI, but there are some smart investors that do think, thinking about Stan Druckenmiller the other day, who did at least sell some of his NVIDIA. He bought other AI stocks, but do you think we're in a period here where it might not be the perfect time to buy? Maybe we'll get cheaper prices down the road?
Well, some of these stocks, particularly the infrastructure builders like NVIDIA, you know, what I call the picks and shovels of the AI gold rush, you know, some of them have come a long way. However, you know, NVIDIA is our front man, so let's talk about that. The stock has risen several fold, but so have the earnings and the earnings forecasts. Extraordinarily growth. If you take a look at NVIDIA, it has a fiscal year that's not a calendar year, but if you take a look at calendar 25, you know, the stock's traded about 27, 28 times earnings. That's not egregious for its growth profile. So what I try to do, Joe, is I separate the companies in the AI space that I believe in, which are the infrastructure plays, because I think that'll be the dominant theme for a couple years, longer than people think. And then I am not in at all on the end product, which will be the AI product companies. I will have to believe that when I see it, because there, sure, all these products will be ubiquitous. However, will they be money makers? I don't know. Will they really move the financials of said companies? I don't know. So even though it sounds like a boring, uncreative way to look at AI, I'm sticking with the infrastructure plays. And NVIDIA, of course, is near the top of my list.
Do you think there's parallels with the way the internet played out back in the 90s, Paul? And you think about it, like I was thinking about, you could theoretically be buying, I don't know, Caterpillar, because they have this AI, drug company. Pick whatever you want. You can not only pick the company developing the tools to do the AI and then the AI itself, but you could pick major companies like we did with the internet that benefited from B2B or whatever it was the internet did for them. So this could be, you could look at the entire Russell 2000 to try to figure out who to buy that AI is going to help.
Excellent question, Joe. We were both around during that period. You know, back then I ran all the tech money for Merrill, and when the internet bubble popped, you know, I still have the lashes on my back to prove it. So I learned a lot of lessons. Yeah, I'm very cautious because coming out of the AI boom, you will have some absolute superstars. Now, some of them are established companies. Some are companies that we don't even know yet. But most of them, yes, they're going to lever the product. Yes, they'll see some productivity enhancements. Yes, they will see some cost efficiencies, but will it drive their top line? I don't know. So I actually think it's going to be not the 80-20 rule. It's going to be the 90-10 rule where, yeah, 10% heroes, 90% no go.
The Magnificent Seven, there are preeminent tech companies. Which ones do you think win here in terms of either utilizing AI, developing AI? Which ones are in the best position?
I say the ones that are in the best position are Microsoft, Alphabet, Amazon, Meta, down the road. But of course, right now, NVIDIA. I am not playing Apple, not playing Tesla.
So, okay, so you got 5 out of 7. So you might as well, you could be wrong. You might as well buy them all, I guess. But obviously, we wouldn't be calling them Magnificent Seven if they hadn't moved so much already.
Yeah, no, I actually think, again, that valuations are not unreasonable. We don't have valuations yet, Joe, that kind of match some of the lofty ratios that we had in the full inflation of the internet bubble. So yes, I think they're going to go higher, but I try to be very careful and rifle shoot rather than shotgun shoot. And for a long time, I've been off Apple, and of course, Apple is one of America's and the world's most popular companies, and I've been short with Tesla for quite a while.
Is there anything in the macro backdrop that do you concern yourself with that? You're talking about earnings doubling. Obviously, you're not talking about multiples, but I don't know if you're counting on any cuts. That would help, obviously, the NASDAQ. I don't know which administration would be friendly. No one knows exactly how that would play out in terms of regulations and antitrust in November. But what do you think of either of those two issues?
Yeah, very, very important. We talk a lot about AI and other fundamental drivers, but of course, the biggest driver for tech and other aggressive growth stocks is the discount factor in the discounted cash flow calculation, which is essentially the level of rates today. And so, yes, if we continue to fret about inflation, we can't get it down to the 2% handle, and maybe we don't lower rates for quite some time. Maybe, God forbid, we crank them up again. Look what happened to tech stocks in October of last year when the yield on the risk-free rate, the 10-year Treasury note, very briefly got to 5%. That caused an absolutely bloodletting. And of course, tech stocks rebounded pretty quickly. But yes, that is the biggest scare. And of course, we started this year, Joe, with the belief that we're going to have 5, 6, 7 cuts. Now we may not have one. And so, yes, that is very big. And on the regulatory side, yeah, there's newfound aggressiveness. Take a look at TikTok. We're going to go to the U.S. Supreme Court with a First Amendment free speech case. And we'll probably at some point repeal or adjust Section 230, which has protected these social media companies since the law was enacted in 1996. So, yes, the regulatory threat is true. Not just in the United States, but even more so in the European Union.
5, 6, 7 cuts. We're at maybe none, but we're not yet at 5, 6, 7 hikes. Although Jim Grant said 200 basis points, and if it was a quarter apiece, that'd be 8.
Yep.
So that's above 7. You never know. Anything can happen, Paul. We'll check back. Time's going to pass. I know that either way. And I know today's Thursday, which is like the best day of the week. Yeah. Thank you.
All right, Joe. Be well.
All right. See you. What?
It is the best.
It's the best day of the week.
All right, when we come back, we've got some new details on Google's employee morale problem. We will show you what workers were posting on an internal forum ahead of an all-hands meeting. And later, House Speaker Mike Johnson will join us live from Washington, D.C. Squawk Box will be right back. Google executives facing backlash about why Alphabet's strong growth performance hasn't translated into higher pay for employees. One worker comment on an internal forum ahead of an all-hands meeting said, "We've noticed a significant decline in morale, increased distrust, and a disconnect between leadership and the workforce." Another comment read, "Despite the company's stellar performance and record earnings, many Googlers have not received meaningful compensation increases." And asked whether the decision to keep wages lower was the result of a cooling employment market. At the all-hands meeting, CFO Ruth Porat said, "Our priority is to invest in growth. Revenue should be growing faster than expenses." She admitted that 2 years ago, the ratio had flipped and that the rate of spending wasn't sustainable. Porat announced last July that she would be leaving the CFO role to become Chief Investment Officer, but that transition hasn't yet happened. The CEO, Sundar Pichai, addressed layoffs. He said assuming current conditions, job cuts in the second half of the year would be much smaller in scale.
Coming up on the other side of this, smoking in casinos, ready for this? May soon be a thing of the past. I'm surprised. Contessa Brewer has that story. We're going to go to her next on that. And then later, quarterly results due from Warner Brothers Discovery, also Hyatt Hotels, and for those of you with kids, Roblox. We're coming right back after this.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Getting ready to light up a cigarette here in a second. Maybe not. Do people still smoke?
Not allowed. That's the point.
I know. We're gonna checking. It is. Who still smokes? It's like Do you not read? Do you not know anything? Do you live in a cave? Check the futures. Are you that weak? Down 54 points now, but then go over to France. Everybody's puffing away. Down 50 points on the Dow, 33 in the NASDAQ. They took a shot at you. You were going, oh.
Well, as an explanation for what Joe was even talking
We're
about.
getting to it. It's 2 seconds later.
I know, but people come back from the commercial, they don't know what's going on.
Well, now they're going to.
Well, now they're going to. That's what I was
Stay
trying
with
to.
us, folks.
Stick with us.
Yeah.
Advocates for pushing a smoking ban inside casinos have some new allies. Shareholders, in this case, and Contessa Brewer is at the table without a cigarette this morning. Good morning.
As I have been my entire life, but there are people who smoke and who still enjoy smoking, and in many places they can smoke inside casinos. But today, when Boyd Gaming shareholders cast their ballots at the annual meeting, they will vote on a proposal that would force the company to commission a study on whether banning smoking in casinos would save money, and then would be forced to publish the results. The same thing will happen when Bally's holds its annual meeting next week, and then Caesars as well. The shareholder proposals are backed by Trinity Health, which is a nonprofit healthcare network, and Americans for Non-Smokers' Rights. They point to research by C3 Gaming that concluded smoke-free casinos generate more revenue and outperform competitors that allow smoking. And they argue that shareholders should know how much casinos are actually paying in higher health insurance premiums for employees and greater maintenance costs, and whether it's keeping away customers who otherwise would go to the casinos, but they hate the smoke. The 3 casino companies tried to keep the information out of the proxy statements. The SEC denied those requests, and they are urging shareholders to vote against the proposals. We did reach out to all 3 casinos. Boyd pointed us, as did Bally's, to its proxy, arguing that it's seeing a negative impact in states that have banned indoor smoking altogether, and that these decisions are best left up to the properties to follow the local trends. And finally, they argue that if the shareholders succeed in implementing a ban, I mean, they think it's really, that's what they're after, they will lose customers to competitors who continue to allow smoking inside their casinos. So we're seeing this play out, in Nevada, in New Jersey, where they have tried to limit it. It's only 25% of the casino floor that is allowed to be smoking, but I've been there, and you can smell. I'm in the non-smoking section, and there's the guys smoking that were right there, like the old days in the restaurants when it was like, do you want smoking or not smoking?
I haven't been in a casino in a long time, but the last time I was, it's
Really?
like a throwback.
Oh, I haven't been. I just assumed that you couldn't smoke there.
It's been over a decade though since I've been in one. But
They
even then,
filter
it was a
the air a
shock.
little bit better, though. I was
Not that well.
They have
Pumping in oxygen to keep you awake.
They have super high-end filters, but there is no safe level. There just isn't. If you look
Oh, well,
at
I'm
all the
all for
modern,
getting rid of. I don't care.
But the smell that
I thought-
permeates everything.
right, it does.
I thought it would help get customers if you got rid of smoking. I thought it would. But
So
then again,
Parks Casinos, PARX, have gone smoke-free in Pennsylvania, and they said not only they think that they are even Steven in terms of what they've lost with smoking customers to the competitors versus what they've gained by being smoke-free. And they said, and also, how do you put a price on the health of our employees? That they've done surveys and said our employees are much happier being in a smoke-free environment. But if you go through and read the proxy statements for Bally's and for Boyd, they say, look, we want to work with our employees. They're going to work on some proposals that maybe you would not be forced to work in the smoking section. But if you talk to the employees, that they are very concerned about their health, knowing what we know about secondhand smoke.
I guess the other issue that you have with this, if you are also facing big competition from online gaming, if you decide to say you're not going to allow smoking anymore, that sends all the smokers to that alternative competitor, even if every casino has the same policy.
In fact, yesterday I was at a gaming conference and I was on stage with Caesars board member Jan Jones Blackhurst, and I asked her about this. And that's one thing she said. She said, but right now only 7 states have legalized online gaming. Yeah. But she says with online gaming, you don't have the issue of should you permit smoking or not.
What percentage of the people in the casino do you believe are smoking?
Well, for instance, in New Jersey, if you've got 25% of your casino floor devoted to smoking, that's it. It's 25% of your customers. But I've been there, and what you'll see is the smoking section is very crowded. They've got them all jammed in next to each other. And also, I see a difference when I'm in Las Vegas, and it depends on the property that you're on. If you go through Wynn Resorts, it's not that people aren't smoking, they are smoking. But it's a bigger property, it's maybe more spread out. If you go to some of the downtown properties, there's a lot of smoke.
If you are a compulsive person and you're in there gambling compulsively, you're probably a smoke addict too. So while you're at the table, you got to get up and go out. If you can't smoke, you got to go up and go outside. You have to take your chips and go.
There are states that have banned indoor smoking altogether and have not carved out casinos. Ohio, for instance. And then what you see is smokers still go to the casino, but they do the same thing that they have been doing in bars and restaurants for the last 20 years.
And are they less profitable?
No.
In Atlantic City, it was an issue where people didn't want to walk away from their seats to go to the bathroom.
They don't want to go
chairs.
And then you're out there with those things where you put this.
Yeah, but forget about that. I'm saying are they the real question is, are they less profitable? The casinos in Ohio, for example, less profitable because people are taking breaks every 20 minutes or half an hour to go get their cigarette or not.
It's hard to compare because you're not doing an apples to apples comparison. But again, with Parks Casino, where they're operating, where they could offer smoking, and Park MGM in Las Vegas on the Strip is the first non-smoking casino on the Strip.
The argument for the employees, I can't imagine. You know, like you have to sit here and work in this. I guess your option is go elsewhere, but that's a tough.
They're good. The dealer jobs are good jobs.
Yeah. Thanks,
Thank you.
Sure. When we come back, former Fed Vice Chair Roger Ferguson will join us with some new survey data on CEO optimism. Right now, though, as we head to a break, let's check out the currency trade. So right now, Squawk Box will be right back.
competition.
Welcome back, everybody. New data shows some cautious optimism among CEOs despite a complicated economic landscape. These results are part of this quarter's Conference Board measure of CEO confidence survey that was done in collaboration with the Business Council. For more on this, we want to bring in former Fed Vice Chairman Roger Ferguson. Roger, of course, is the Vice Chairman of the Business Council and a trustee with the Conference Board, also a CNBC contributor. And Roger, this is pretty different. This is the highest level of CEO optimism you've seen in about 2 years.
Yeah, that's absolutely correct. But the other side of it is, as you pointed out in the opening, I would describe this as cautious optimism, not wild enthusiasm. The other thing I found very interesting is their expectations for the next 6 months really are for no major change. So I think it feels like, from the standpoint of CEOs, things are sort of moving sideways, not up, fortunately not down as well, but no great enthusiasm.
Their concerns about recession have faded pretty drastically, though.
Concerns about recession have faded drastically, for sure. They, like everybody else, have moved to the expectations perhaps of fewer rate cuts, if any. So I think they're reflecting the market. But they also aren't expecting to go on a hiring binge. They think that they'll hold jobs roughly where they are, and they think they have to pay wage increases of somewhere between 3% and 4%, most of them. So it feels like, compared to the market, which has been very enthusiastic, it feels like CEOs are really much more in a holding pattern, waiting to see what happens.
What are they worried about if it's not a recession?
Oh, there's a series of concerns, and one of the things that's going on here is that, in fact, their degree of concern about risk has gone up. So, cyber is certainly number one. Regulatory risk is another one. They are worried about what they call economic and financial conditions, and all of these risk factors and concerns have been going up steadily over the last several surveys. So I think part of what's going on here from the standpoint of a CEO is, even if the macro situation is no longer having recession on the horizon, there are a number of other things on their inboxes that are really causing them trouble.
Like a break, potentially, some sort of a break or a mismatch in the financial system?
I think they're worried a little bit about that. I think, like many others, they are observing that the possibilities in the federal government are much more limited now, even as we need more headroom. So I think they're observing a number of things. They also, like everyone else, are focused on geopolitical risks, which obviously have gone up. Haven't spilled over to the U.S. economy yet, but not impossible. So I think they see some of the same things that we see in the macroeconomic environment.
Hey, Roger, we did a story just a little bit ago, maybe in the last 10 minutes, about how at Google some of the employees there are voicing their discontent over the idea that even though Google is reporting great earnings and revenues up, that hasn't translated into the sort of pay increases that they might anticipate. What can you say just about how CEOs are feeling about the labor market? Who might have the upper hand at this point?
Well, I'm not going to comment specifically on Google, but for CEOs overall, I think right now they're finding it's a little easier to find jobs. As I said, they expect to increase wages roughly around 3%. And so it feels as though the labor market is easing up from the CEO surveys. I can't speak to the Google situation directly, but I think it feels, as Powell has said, that labor markets are coming into better balance.
I mean, that's a big part of what we worry about with inflation. If wages continue to climb, inflation will continue to climb. 3 to 4% doesn't sound crazy. And if CEOs feel like, okay, the labor market is starting to ease a bit, it's not as difficult to keep employees, it's not as difficult to find new ones, that could be a significant shift.
Well, it absolutely could be. I mean, it may well be one of the reasons that the Fed is still, in some ways, expecting to cut rates this year. But it's not a done deal yet. I think we've been surprised, as we've talked about several times, on how sticky inflation was in the first quarter this year. So I think this notion of caution, all around is really important. And it's obviously clear that we don't fully understand inflation dynamics just yet in the post-pandemic world. So that may be another thing that's going on, both in the heads of monetary policymakers and in the heads of CEOs.
Hey, Roger, I don't know if you saw Druckenmiller on the other day, but the stuff he was saying, I think if I got you out to a bar with a couple of cocktails, I think you would say the same. I do. I think you're always very, sort of reasonable and guarded about when you criticize the current Fed, but he kind of said what you were saying, only on steroids, what you've been saying. Did you see any of that?
Look, I saw a little bit of it, and I have a high regard for Stan. I am, as you say, I'm cautious about criticizing anybody. It's a tough job. Look, the inflation problem here in the United States, I think, caught the Fed, wrong-footed at the very beginning. They moved very quickly to get things under control. But, the last mile, as we're calling it, has proven to be really pretty challenging. And, one of the things that they did, I think, wisely was move away from forward guidance. But when they're in the world of being data dependent, it makes it very, very difficult to know exactly what they're going to do because they themselves don't know what they're going to do until they see the data.
You never really understood the rationale for all the hope for this huge easing cycle of 5 or 6 cuts. You never saw that. And what did they see that you didn't see to even think we were going to do that? It's like wishful thinking.
Well, it's wishful thinking. You know better than I do, as well as I do, that markets are looking for any hope that will keep driving equity valuations up. Not surprising. And also, I think markets are underestimating how serious the Fed is around the 2%. Every time we get a slightly weaker GDP report, the notion is, oh, the Fed's going to cut to offset a slight weakness in GDP. A slight weakness in GDP may be the natural outcome of restrictive policy. It may be what they're really hoping for. And so I think there's a little bit of an intellectual misunderstanding with market participants thinking the Fed will do anything to avoid weakness, when in fact the Fed's mandate has everything to do at this stage around getting inflation under control.
And by the way, Roger just did it again when I brought up the idea of inflation coming down because of, and the hiring situation easing up a bit.
Right.
Just did it again, kind of shut it down.
Yeah.
Roger, thank you. We appreciate your straight talk all the time. Roger Ferguson.
Straight, but
He says it nicer.
he does. I want to really let it all out. Let it tear down. Coming up, it's the first thing I thought. It's like, I have a cable bundle. You're going to give me a streaming bundle. I mean, we're going to talk about the new package deal for streaming services from Disney and Warner Brothers Discovery. We're going to put them all together just like a cable. And then later, House Speaker Mike Johnson is going to join us live from Washington. Squawk Box is coming right back.
50% off.
Bundle is back. Disney and Warner Brothers Discovery are planning to offer their streaming services, Disney Plus, Hulu, and Max, in a bundle which mirrors the traditional cable TV package. It will be available this summer, both for ad-supported and ad-free tiers. Pricing hasn't been disclosed. Disney's going to be the distributor and will collect subscription fees and pay a percentage of those fees to Warner Brothers Discovery. Who would we be missing? We'd be missing a lot.
Yeah.
A whole bunch of folks, sure.
So then you need a couple of bundles.
More.
You might need 3 or 4 bundles.
Or 5 to get back to where you were with cable box.
Yeah, but the point is, you're hopefully not going to pay as much as cable
And then
box.
it's not going to be as profitable for each of these entities either.
Hello, it's 2024. That's what's happening here.
Nobody's going to ever make money in this business.
Analog dollars
or
or digital
digital
pennies, or nickels, whatever you want to call them.
I still don't understand why it's so different just depending on the pipes and why the margins get squeezed so much more than traditional.
What do you mean you don't?
I just don't understand if you're basically paying to get the same amount of content, it ought to cost the same. It shouldn't matter how you get
Because
the
there
content.
are free forms of content now. If you've got YouTube, if you've got TikTok, if you've got X, if you have any of these other free forms of content, that's where people are spending a lot of time too.
So I'm not even taking that piece on. I'm taking on the other piece, which is just people are going to buy it a la carte. That's been the whole point. And once you break it up, and if you buy it a la carte, and you're not going to buy all the channels, there's less channels.
A la carte is going to mean you'd also have to buy Netflix for this. You'd also
if you
have to
wanted to buy, if you wanted to own everything, but most Americans don't need to own and see.
That's why
all 5 or 6 or 7 of these
That's
things.
why when Peacock had an
that's why
NFL game, and you had to sign up to see that.
And Prime, a lot of people are already paying for because they like the free shipments from
But think about all the people who don't, there are people in America, unfortunately or fortunately, who don't care about either basketball or football or whatever it is, and so they're not getting the service at all.
I need every single thing.
You do. You are unique.
I need every single thing that's available, and there's still nothing.
I know. Coming up on the other side of this, a warning on phantom debt. We're going to talk about the buy now, pay later debt that Americans are taking on that isn't reported in credit data. And later, House Speaker Mike Johnson is going to join us live from Washington, D.C. this morning. You don't want to miss that interview. Squawk Box returns with 2 big Welcome back to Squawk Box this morning. Buy now, pay later company Affirm reporting a surge in transaction volume in the third quarter. That's up 36% from a year ago. Our next guest says credit racked up through buy now, pay later programs is hard to measure, and this, quote, phantom debt could eventually create trouble in the broader economy. Joining us right now is senior economist and managing director at Wells Fargo, Tim Quinlan. Good morning to you. You call it phantom debt. You say it's not really calculated in the total numbers. Tell us sort of how it is calculated and how worried we should or should not be.
Yeah, it's scary and you can't see it. What else do you call it? And it's tricky to kind of corral the data around it. A Federal Reserve paper lamented this in a long footnote saying how difficult it was to accumulate the data because firms understandably want to kind of protect the proprietary value of what they've got. So when the Consumer Financial Protection Bureau a few years ago kind of compelled a bunch of the providers to disclose data, we were able to use that as kind of a starting point and then holding one of the firms constant that does disclose its data back into some really rough estimates. But you know, the bottom line here is we need a better environment around this to understand what it is we're dealing with.
So from your estimate / guesstimate, what are we dealing with and what percentage of the credit market is this buy now, pay later business?
Yeah. So it's kind of a tricky thing to think about, right? Because they usually paid off in 4 or 6 equal payments. So the people in the space tend to think about it in the context of transaction volume rather than a traditional credit analysis that might look at it in the context of balances, for example. So what you can kind of do is look at the transaction volume in a given year and compare that to the growth in, say, revolving credit or consumer credit card debt. And if you do it by that measure, your kind of average growth rate for consumer credit card debt is round numbers, $125, $150 billion a year. Our back of the envelope estimates put the BNPL market at somewhere in the neighborhood of 50 billion. So you're talking comfortably a third of the transaction increase in credit card volume. If that's actually what it is, that's a really big piece of kind of this shadow credit market or phantom debt.
So, but who's on the hook here?
Policymakers and
If something goes badly wrong,
it varies by the provider.
Who's holding the bag?
Yeah. In the early days of it, it was the buy now pay later firm, whoever that happened to be. And the way they're structuring a lot of these deals now, they're shifting a little bit of that. Sometimes the merchant shares a piece of it. But that's problematic for, one of the merits or the good things about this is that it helps people who are unbanked or don't otherwise have access to credit. And that's wonderful if you can take a large payment and break it up into small payments. Who would get on the other side of that? But, as they worry about who's on the hook and these late fees and stuff can add up.
Of the buy now, pay later companies that are out there, is there one or two that you think actually operate more carefully than another? Is there one that you think is more dangerous?
I don't hold any comparative value assessments of these firms, but Affirm is one of the providers that does disclose their transaction volume on a regular basis. And so that's what we were able to do is say, what share did they comprise as a total in 2021 when the CFPB kind of ordered this disclosure? And then if you kind of hold them constant and solve for X, that's why I say it's not very scientific, but it's at least putting some guardrails and giving us a rough estimate of what we're dealing with.
Okay, final question. If somebody from the CFPB or the SEC or the Treasury Department is watching us now, you would be telling them what from a regulatory perspective about this?
Yeah, I would say, there's an incentive for the people who this is serving, right? For the consumers, the C in CFPB is consumers, right? From their perspective, you don't want them tied into a situation where a litany of small payments kind of traps them into one really big problem. But also, what about policymakers in Washington? What about the Federal Reserve? What about economists who are trying to look at the outstanding debt and make some contexts around where we are? It'd be useful to have. The more data, the better.
Tim, I want to thank you for joining us and bringing this important issue to our viewers' attention. It is just past 7 a.m. right here on the East Coast. You're watching Squawk Box on a Thursday morning right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. And we've got a whole lot of things going on, including Speaker Mike Johnson, who's going to be joining us in just a moment to comment on a whole bunch of news out of Washington and around the world. But right now, let's tell you some of the other top stories that are moving markets. Bloomberg reporting the valuation for Elon Musk's artificial intelligence startup now nearing $18 billion as XAI set to close its latest funding round. Those folks who thought, by the way, that investors early on with Elon Musk in X wouldn't make their money back, they're going to get a piece of this, and they may make it through this, if nothing else. Meantime, President Biden saying the U.S. would not supply Israel with certain weapons and artillery shells if its military invades Rafah, a city in southern Gaza where more than 1 million people are sheltering. We'll talk about that in just a little bit because we've got House Speaker Mike Johnson, who's now survived a challenge from Congresswoman Marjorie Taylor Greene, who tried to oust him from power. He's going to be joining us literally in the next 20 minutes at 7:20 Eastern Time. We'll talk to him about that, the comments from President Biden, and so much more.
We've got some breaking news for you out of the UK. The Bank of England holding interest rates steady. That is as expected. As early as next month, the bank is expected to potentially cut rates. Same story with the ECB, and at that point, things could get interesting from a currency perspective. We'll see what happens if the Fed continues to maintain its rates if these other banks cut. But right now, Bank of England maintaining its rates. If you take a look at the futures this morning, you'll see that at least at this point, it looks like we are still in the red. Dow futures off by about 67 points. S&P indicated down by 12. The NASDAQ off by 51. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. Good morning, Dom.
Good morning, Becky. Andrew, Jill. We'll start off our Thursday morning movers with a check on computer chips. ARM holding shares are taking a bigger hit. They're down roughly 8.5% or so, about 200,000 shares of trading volume. The semiconductor design company reported generally positive results. Earnings still being parsed through for comparability to analyst consensus estimates, but revenues beat expectations after growing by 47% year over year, and that was thanks in large part to what else? Demand for artificial intelligence-related products. But ARM's full-year revenue guidance came in short of estimates, which is likely driving that downside move for a stock that, as you can see here, is already up about 41% just over the course of the past year-to-date period in 2024. Next up, you got shares of Airbnb, which are down just about 8.5% as well, around 60,000 shares of volume. This is the online vacation homes and travel experiences booking platform. It also reported better quarterly results, top and bottom line beats, driven in part by more robust demand for bookings, especially in places like Latin America and the Asia Pacific region. Also, gains in average daily rates for room nights compared to last year, but its current quarter revenue guidance came in lighter than expected. Airbnb does say it expects to see better revenue growth in the next quarter after that because of demand tied to events like the Summer Olympics in Paris and the Euro Cup soccer, which is being hosted in Germany this year. And we'll end with a check on Shopify, which is up just about maybe a percent or so, around 75,000 shares of volume, stabilizing just a little bit after a dismal 18% drop yesterday, tied to a disappointing forecast, even with a better quarterly report. The enterprise e-commerce merchant platform is getting some help today after analysts at JMP Securities and Piper Sandler both upgraded that stock, JMP to a market outperform and Piper to neutral. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers there can get more detail and analysis on those stories, Becky, and others. I'll send things back over to you.
Just a little bit of help today. Just a less than 1% gain after that drop yesterday.
Right. I mean, it was big. I mean, so many of these companies had pretty bad days yesterday. We'll see if whether or not those expectations of this market mean that things are just about as good as they can be, and they need to get a lot better for these guys to go even further.
Okay. Thanks, Tom.
I want to talk to you about other things, but I'll read it. In a recent article on CNBC.com, our next guest writes that the S&P 500 is increasingly dominated by tech, and therefore questions whether it's still the best benchmark for investors. Carrie Firestone is executive chairman and co-founder of RES Asset Management, as well as a CNBC contributor. What I want to really ask you about, I mean, benchmarks are nice, but you got to decide whether you want to be long the market and go all in, or whether you maybe aren't as aggressive. So I kind of wanted to talk macro. You can talk about why you think maybe there's other ways to play it, but that's just assuming that you want to play it and that you're long. Here's what my point is. 2023 was much better than people thought. I think 2024, given the backdrop with the Fed and inflation and, I mean, real near-term worries about how we handle this, I think you need to really, I think the risks have increased beginning of 2023, no one was bullish. Everybody hated
Right.
it, but it was a great year.
We were bullish.
Yeah, you were bullish. Is it the same? Is it going to repeat in 2024, or are there some significant headwinds like 34 trillion in debt and stubborn inflation? Maybe no rate cuts. Is this a time you want to be in the market?
Yes. So I think you do want to be in the market.
You always want to be in.
It's the degree to which one be in the market. And in fact, we're up 9% roughly so far this year. The market's up 26% since the end of October. So the market has moved forward despite really the hawks about interest rates. They've been right. If you listen to someone like Roger Ferguson, he's the person who said, no cuts now, no cuts. You know, that's been correct, but the market has continued to power higher because earnings have been good. Okay. Now, I agree, there are risks. There are more risks this year than last year, 100%. But that doesn't mean you can't have a decent market, and we're having a decent market. The question is whether the market is the same as what we used to call the market. What's really powered this market are 4 or 5 names. It's not the whole market. They talk about how good earnings are. The earnings for the big tech names are up about 40% in the first quarter, and the rest of the market is negative a couple of percent. And that's going to be true throughout the year. The estimates keep going up for the tech names, and estimates are not going up for the rest of the market. So you have to be careful what you think of as the market.
So the S&P 500 is more like the NASDAQ used to be?
Correct. 43% is in tech, communication services, and Amazon. That's 43% of the market. And I've looked at this for years because I find it fascinating. I used to say, I still say, Apple and Microsoft, the 2 top names, are 14% of the market, 13.5% of the market. The bottom 300 names in the S&P 500, the same size. And that was not true. If you look back in history, the 2 top names would be 6%, 7%.
Does that make you nervous?
Yeah.
Just the tech itself?
It makes me nervous that we are so exposed. It's not that it doesn't represent the market. Of course, the S&P 500, it's true. It's identified as the biggest public companies that are profitable in the United States. And so what you buy is truly those companies. However, those companies are more concentrated and those industry sectors are more concentrated. Maybe everybody doesn't want that much exposure. I'm not talking about what we discuss as the S&P. I'm saying people in their 401k, when investors in our business make these choices.
9% is more than the average stock return in a year.
Correct. Yes,
So
7% is.
So we already have 9.
We already have 9. So if you wanted to be cautious and sell, I understand that. But for most people, if they've owned the big tech names, they have gains. They have big gains. Do they really want to take those capital gains?
Well, yes, if you think the capital gains rates are going to go up next year.
Yeah, and if you're Stan Druckenmiller and you're looking at your gains from NVIDIA, yes. If you're Warren Buffett and you're looking at the gains from Apple, yes.
Yes, because those guys, they think about the whole big picture, and they're in the market actively. But most people who get out don't necessarily get back in. The average mutual fund does much better than its average investor because the fund continues and the investor sells at the wrong time and buys at the wrong time.
Well, we might not get any help from the Fed, and inflation might stay sticky, and 9% is above the long-term average anyway, but then the wild card is AI. Maybe we get another, I don't know how many points of percentage gain, because AI is transformative, so maybe that gives it to us.
Of course, but as we know, NVIDIA is the only one who's really making any money in AI. Everybody else is spending money on AI. If you looked at what is the biggest change from what we expected in the first quarter, it is how many billions, tens of billions of dollars the big companies are spending on AI. 40 billion here this year, 50 billion here. It's really unbelievable, the size of those numbers when you think about those tens of billions that are just in capital spending on AI technology and research. What I also think is fascinating right now is that if you were to say, let's invest some money in an equal-weighted S&P index, equal-weighted S&P 500, and the tech names were to come down 10%, 20% to take some risk off the table, you can have lots of companies that can start to perform better than...
It might be a different way of looking at it. We tried to ask Buffett this question over the weekend. He didn't exactly answer it. He's long been a proponent of the S&P 500. The question is, would you look at a different way of measuring that doesn't take tech so much into account?
What's good for
you leave gains on the table
sure
when tech takes off.
Correct. Yeah. But Warren Buffett has the only stock in the top 10 that is basically, financial insurance. I mean, he has been able to command a spot there because of how well he's run his business, but also because of technology, because of Apple, more than anything else.
Carrie, thank you.
Thank you.
In studio. Okay, coming up, a breakdown of Robinhood earnings and the state of the retail investor. Plus, House Speaker Mike Johnson on the failed motion to remove him as Speaker. We'll also talk about Israel-Hamas war, protests on campus, and so much more. Do not go anywhere. Squawk Box, coming right back. Welcome back to Squawk Box. Robinhood reporting its second consecutive quarterly profit, boosted by increased revenue from higher interest rates and cryptocurrency trading. Here is the company's CEO, Vlad Tenev, on Last Call discussing the health of the company.
We also had the largest net deposits in the history of the company. So that's net cash and assets moving into Robinhood of over $11 billion, which is the highest ever.
Joining us right now is Dan Dolev, Mizuho senior analyst. Good morning to you. Let's talk about this company, but also let's talk about sort of broadly how you think of these platforms and where you stack rank a Robinhood.
Andrew, good morning. Look, I mean, this was an epic quarter for them, right? I kind of agree with everything Vlad said. The growth in deposits, the growth in those gold customers, they're now gaining share from Schwab and the Schwabs of the world, right? People are actually moving their retirement assets to Robinhood. So it's becoming more than just sort of a meme stock trading platform. And I think that's kind of the future of Robinhood. So I stack it like really, really high up on my list.
And you think that this is sustainable? I mean, if we were to take this chart back farther, obviously, it's been on a nice run, but you know, life is relative. There was a period before this; it was a different story.
Yeah, look, I mean, the beginning 2021, there was a lot of names out there that were I would say like overpriced. But if you look at the fundamentals, like what they've accomplished, like the jump in monthly average users, the jump in deposits, the jump in assets, they're executing and they're firing on all cylinders. And this is sustainable. Let me tell you why. Because they're expanding into Europe, and then down the road they're going to go into Asia. And there's a lot of people who like small time day trading in those countries, and that's what's going to get sort of the next leg to the story. So it's absolutely sustainable.
How much do you think this is tied to crypto, though?
Look, crypto was a huge part of it, and as you may know, I'm kind of not a big fan of crypto. I think crypto is probably the one thing that's not, as sustainable as the other revenue streams. It brings people into the platform, right? And they're actually gaining share from, other platforms like Coinbase. So they're doing really well. In my model, I'm not assuming crypto stays at the levels that it has been, that $126 million of revenue. I don't think this stays at these levels, and I'm still getting a pretty high number. So I'm being very, very conservative on the crypto revenue because I don't think it's as sustainable.
I'm curious, when you model out the crypto piece of this, do you also model out the price of crypto? Meaning, so we're looking right now at Bitcoin, for example, at $60,000. Does part of the calculus in your mind have to be that crypto, if it's going to be less, that it doesn't go up as much as you would expect, or that it comes down? I mean, what's the thinking?
Yeah, absolutely right. Look, it's the greater fool, right? So when crypto prices go up, volatility goes up, more people buy it. When it goes down, or when it's at the 60,000 level, what we're seeing in April right now or in May, volumes come down. So you have to kind of have a view on, you almost have to have a view on Bitcoin and where you think it's headed to understand where crypto is going. So what we do just out of conservatism is we just assume the revenue from crypto is a fraction of what it was in the first quarter, because this was really nuts, right?
Okay, so Dan, real quick, we got to run, but price of, if you're doing that modeling, tell us what you think. Bitcoin is $60,000 right now. 12 months from now, in your model, it is blank. What is it?
Yeah, I mean, look, I'm negatively biased. I don't have an official view on Bitcoin, but I'm assuming it just doesn't go in either direction, just kind of stays where it is.
Okay.
But I'm not a fan of Bitcoin, so period.
Dan, nice to see you. It's a fascinating analysis, and we look forward to talking again soon. Thanks.
Up next, House Speaker Mike Johnson on the failed motion to remove him as the Speaker, the Israel-Hamas war, protests on campus, and much more. That interview is right after this break.
Time now for today's Aflac trivia question. What musician owns 20% of Lionel trains? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What musician owns 20% of Lionel Trains? The answer, Neil Young. Guggenheim Partners owns the other 80% of the toy train maker.
Righty then. He's back on Spotify. In a 359 to 43 vote, the House shot down efforts by Representative Marjorie Taylor Greene to oust House Speaker Mike Johnson. And Speaker Johnson joins us now. We are, I don't know why we're thrilled to have you on. Whenever you come on, I guess we get intoxicated by power, Speaker Johnson. That might be it. If we can't have the president or the vice president, then majority leader or speaker is next in line. Welcome. Thank you. It's good to have you on.
No, it's great to be with you as always.
Power is so fleeting. No, isn't it? You're in there again. I don't know. This is what you said. I appreciate the show of confidence from my colleagues to defeat this misguided effort. Hopefully, it's the end of the personality politics, frivolous character assassination that has defined the 118th Congress. It's regrettable. It's not who we are as Americans. We need to get beyond it. It could happen again at the drop of a hat, right? Is that still possible that it can happen at any time? Do you think this makes that less likely?
Well, I think it does. It was an overwhelming vote, and I think what everyone here, frankly, on both sides of the aisle, were trying to demonstrate is that we live in very serious times. This is a dangerous time in history, world history, and certainly here on our own shores, and we cannot afford to be playing petty politics here. This country needs a functioning Congress, and if you remove a Speaker of the House closes down. I mean, it's a constitutional office, and so you cannot open the doors of the House. I mean, it literally is not operable, and we cannot afford to do that right now. We have hot wars around the globe. We've got massive challenges on our hands, and so everyone here, I think on both sides of the aisles, recognizes that we've just got to move forward and do our job, and that's what I do every day. I'm doing my job. I do what I know to be the right thing, and what I'm trying to do particularly is advance our conservative policies and principles, which I believe to be right for the country, as far as I can every day up the field, in spite of the fact that everyone knows we have the smallest majority in U.S. history. I'm at a one-vote margin right now, so not a lot of room for error, but we'll keep moving ahead.
And I guess it wouldn't have taken, I mean, you had 10. I mean, that was worse than Speaker McCarthy. I mean, he could only lose a couple. The crazy 8 is what was there. So there were actually more, maybe, that were ready to throw you under the bus. But the Democrats, in this case, decided that it's better to have you there than to go back into what we would be facing if that happened. But it doesn't seem like for you to prevent it from happening, you need to play ball with them. And I think that's what some conservatives would say, that you're not in a position to buck what the Democrats want.
Well, let me say this. The handful of people, the 10 people, the Republicans that joined Marjorie Taylor Greene in voting against the motion to table, I don't think would have gone the next step and voted to vacate the chair. Several of them told me that. So it was sort of a symbolic sort of show there. But look, we move forward. I have to lead. Newt Gingrich posted an op-ed last week and said, Johnson has the most challenging speakership since the Civil War over 150 years ago. Maybe it's true because there's a lot of interesting factors going on here, but we are undeterred in our challenge. What we have to do is fight for the things that we know to be right, to fix the country. We have the greatest collection of challenges right now, arguably, than we've had collectively maybe since World War II, maybe the Civil War. But we've got to get through this. And so this is the modern Congress. This is the age of social media. Everybody has their own media platform. They can go online every 2 minutes and say what they're disgruntled about. But we have to manage that and go forward, and that's what I do here every day.
I think Speaker McCarthy was doing what he thought was right, too, and we saw what happened there. You, on the other hand, were doing what you thought was right, and that's what you always got to do, and it worked out for you. Do you see any irony that what you did for Israel and maybe bringing on the wrath of some of your colleagues after going through all that? And now President Biden, to win Michigan, is not sending the weapons that country needs to do what it needs to do. You see any irony in that?
I do see irony in it, but greater than that, I see great danger. I mean, what the president is doing here is not only defying the will of Congress, to your point, we just voted on this several days ago, but he's also trying to dictate, I guess, and micromanage the war, the defense effort in Israel, as a condition of supplying the weapons that we all know that they desperately need. I spoke with Prime Minister Netanyahu myself less than 48 hours ago about this situation because I wanted to hear it directly from him. And what they're withholding is precision weapons that are desperately needed. Here's another irony. The precision weapons are needed to try to protect civilian lives in Rafah. These are the things that they need to do the job that must be done to eradicate the threat of Hamas, who is still lurking there. And so for Joe Biden to do this, he is going against what he told Congress, what his top officials in the White House specifically told me that they would do, and it's just catastrophic policy.
Speaker, do you think that President Biden's position is a moral one, meaning that he doesn't want to provide these munitions because he's worried about civilian casualties and believes morally that he doesn't want that to happen and thinks that he can somehow prevent it? Or do you think fundamentally it's a political calculus? Joe mentioned Michigan.
I believe it's 100% a political calculation. I think we can all see that. It's the same reason that he's making the political calculation not to call out anti-Semitism on the campuses, not to call out and bespeak without equivocation about the good versus evil here, the right versus the wrong. I mean, he has the largest bully pulpit in America. He's the commander-in-chief. He's the top elected official in our country. We desperately need him to look right into the camera and say, to speak with moral clarity, to say what is right and what is wrong. And he is unable and unwilling to do that because he doesn't want to offend a big segment of his base, his party. There's an actual pro-Hamas, pro-Palestinian wing in the Democratic Party.
I was going to say he was dragged, but Speaker,
oh man, did I have that thing?
Anti-Semitism very recently in that Holocaust remembrance speech.
Okay.
Yeah, and it was too little too late. I was sitting right, 10 feet away from him at Holocaust Memorial, and someone wrote that for him, and I'm glad he delivered it as he did. The speech that I gave a few minutes before he arrived actually at the event, was much more clear and much more direct. And look, he needs to do that consistently. He needs to do it every day. This is a problem that is growing across the country. It is not being diminished. And we're looking for moral leadership. The country needs moral leadership from both parties and from the top leaders. And he is the top leader in the country. I think he needs to act like it.
Mr. Speaker, could a bill pass to defund?
Okay, enough of that. Good morning, retail traders. Sneaky snake trading strategy, where we talk about chart patterns, moving averages, and being in the nower. Being in the now. Wish everybody a good morning. Looks to me like we're holding up that support channel. This is inverse head and shoulders, right shoulder, right shoulder. So if we keep, and then we've created a new one right here. So that's two bullish things going on. But we got to keep that 515 in mind. We could stop below it, but this is a major support right here, I think, right around 516. And I'm in AMC, and we're going down on it. I sold some of mine a few days back. I don't know about it now. Earnings were okay, better. It reminds me of AOL a lot. And I brought this lady in, and she was going to change the world. She broke the glass ceiling, and everybody was really pumping her up, and then she ended up tanking the stock. Same thing with IBM. I went through this revolution where everybody wanted to be politically correct and just hire what you want. I don't know. The women are very qualified. That's for sure. I mean, I would rather work for I think a lady than a man any day when it comes to the workplace. It depends, though. It ain't no Fannie Willis. I'd be okay. That's a lie. That's a lie. And I got Carvana put. Got to break below this 68, this 112.62 before I get out of it. And about thing about traders is they have a short attention span. Mara. What was that here? That's what I thought. $20-day, 1 hour. Oh yeah, we're at the support level. If it drops, we have a 1, 2, 3 down here. Inverse head and shoulders right around 36.75. SMCI, MSTR. Now, what was that other one? LI. Apple. Yeah, everything's at resistance still. I'd rather buy a sale. That's got the 51. I did a video yesterday and I was looking at my chart and I said, man, there's a moving average missing on here. And the guy says, it's the 50 SMA of my chart. I said, damn, you're right. I noticed something was different about it because I only had 4 lines up there. And I said, what the heck? I'm missing a moving average on here. I was kind of puzzled. I stopped in the middle of the video there and I was going, something ain't right. I want to be using that 2 minute a little bit more, I think. I just want to watch it and see if I can see my patterns still and not be able to trade. I got the 3 minute. The 2 minute. And the 1 minute. I still love my 1 minute. And the 5 minute, which most traders like to use. Now that's pretty clean. Slash SPY slash ES. The Obama administration slash Hillary puppet Biden, I think, bought oil at a high price to put it back in the reserves. He couldn't wait for it to be cheap and get into it and buy it for our oil reserves. He had to buy it at the highest price. And this is supposed to be an anti-hate oil company man. So he probably gave him $10 billion extra. sure you get your water. Heard Becky click. Excuse my language, quick. Oh boy, I slept when slept. Carbon capture projects. There's something about some plant that sucks air, sucks something out of the air. I've never heard of that. It says the next one's going to be bigger and the next one's going to be bigger. Oh boy. Stick foot in mouth sometimes. Carvana confirms federal legality is an e-signature on odometer disclosure documents with letter of interpretation. A closer look at Carvana's option market dynamics shows growth potential of used EV market. I don't know about that. If they put a new battery in these cars and sell them used, I'll go ahead and go for it. But I ain't gonna buy a used EV car ever until they get them batteries situated. I won't do it. It has to be brand new. If I get one, if I move to an island, I won't need one. I sure in the hell ain't gonna drive in Jamaica. Them people are crazy.
Welcome back, everybody. Bank of America Institute is out with its latest consumer checkpoint for April. And joining us right now to talk about it is Liz Everett-Crisper. She's the head of the Bank of America Institute.
Yeah.
Liz, it looks like spending was up 1% year over year in April, up 0.3% year over year in March. Explain to me what this means. What are you seeing?
So, good morning.
Bad news?
Great to be here. I think what it means is the consumer momentum is continuing. But the big takeaway, really what stood out to me in April data is what we didn't see. And that was evidence of a lower income consumer pullback or slowdown, because that's what we've been hearing about. Yesterday, you guys were talking here on the show with the CEO of Uber, and Dara said they were looking for signs of a slowdown. They weren't seeing it. Neither were we. On the lower income consumer, what we are seeing is strengthening fundamentals. So.
Another lie. I was doing a job this morning and I went to clean the door on this outside and I opened up the door and bam, man, a metal door hit this guy right in the head. He was sleeping in the back and I said, what the hell? And I apologized, but that's the first time I've ever seen any homeless guy sitting at one of my job sites. Maybe the second time, but I was more worried about theft then. Yeah, I remember that other time. The cops showed up at one of my jobs. He had a cart, nice cushioned bed there, and I said, what the heck, man, you can't stay here. In my mind, I didn't tell him that. I just let him sleep.
Fed is going to have to
Becky's in red.
maintain, if not eventually
It's a bad
raise
choice.
Right.
We are continuing to see the spending, so that underlying fundamental is certainly something that we should all be aware of. I think the one thing to think about, though, is are we missing something? Is there...
I don't know if I believe her or not. We're spending. We got money. But you can't argue with these people. I hear different conflicting stories all the time. Okay, well, Jimmy will be back. Shop at the 200. Bubba. That's a 50 on the 1 hour. SPY at the 63 on the 1 hour. That's how we took the trade yesterday, off the 63. We came back and nailed it again. Google. Apple at 63 on the hour. Reddit at the 63 on the hour. TSM could pull back and hit the 63 on the hour. Now I gave somebody, I figure we probably get up to 146 to 148. Meta. That's a good call at the bottom on Meta, on that knife. AI investment. They'll look at that and go, fat cats will go, well, they're just investing in AI, so this is great news, Mike Santelli. I'll do my Mike Santelli impersonation. Oh, everything's just fine. It's just... And Disney. So I got a 3-day rule on Disney. Now, you know, they've been pumping the crap out of Disney. Again, so on the rumor on news, Disney's nothing but a crappy company that hasn't been able to change with society. And when they did, they thought they had it right. They decided to go with the bottom 0.1% of people that are woke, instead of the just like Budweiser. You know, they bashed Budweiser's drinkers for ages and said that we got to get away from you frat boys. And I don't think I was ever a frat boy. We drank Budweiser because we liked it and it was cheap. We get it in kegs. It was always, you know, get a 6-pack of Bud, and it was a stronger beer than Busch. But I'm out of touch. So I quit drinking. Yeah, I totally quit drinking after that. I mean, I didn't drink a lot. I just poolside, you know, maybe. But as you get older, your body can't handle it. It's the same thing with Disney. Once they recognize what they've got themselves into, Disney's for children, not for transsexuals. SMCI. Probably another 10 years from now, they'll have naked men walking down the streets of Disney and dressing up with wigs. Goldman Sachs, to me, felt like it was way overbought. I mean, way overbought. This is ridiculous. But it has 3 gapping white soldiers breaked out of a bear flag, and we pulled back to the bottom of that bear flag, and then we broke out again with a double top. So I think it's really irrational, and I'm tempting to go Putsville. Up in a, this is a weekly, so it's up how many percent here? On a 3-year time frame. So we had a double bottom at 290. It's up pretty good. Yeah, it's up real good. It's up $150. No, it's up what, 250? No. Hell, I can't even do my math anymore. I'm losing my mind. Minus 290. 150. Triple top, quad top break. So yeah, we're coming back down to the quad and hold that support level at 420. I think we could drop a good $20. We'll watch it. I'm gonna watch it. What the heck of a run. And they're not that good of a bank. They're fraudulent. But there. Okay, well, let's have a good day. Do.
Segment, we're going to speak to analyst Rich Greenfield. Straight ahead.
WBD. Ooh, gosh. Warner Brothers, what the heck? Woke and you go broke. I'm telling you. Jeez. Warner Brothers reports first quarter 2024 results. Lowering worse than expected first quarter results. Dang, I didn't even think about shorting this sucker during this crap. We've got a falling wedge with two-headed snake. So it's got to break this resistance before it becomes bullish. Right there. the 9. It's got to break the 9 on the weekly, daily, two-headed, three-headed snake. And it's a fallen wedge. So, I mean, we could get a bounce on this. I'll keep it on watch. Okay. I thought I had a video done of that drive through Jamaica. That was the scariest thing I ever. Well, I think second scariest is coming out of the airport in Las Vegas and getting in one of them shitty taxis. That was. Hey, I see your car's about to fall apart, mister.
Back to Squawk Box this morning. Warner Brothers Discovery shares, they're falling after quarterly results missed on the top and bottom line. Separately, the company and Disney plan to offer their streaming services, Disney Plus, Hulu, and Max, in a bundle which would mirror the traditional cable TV package, or at least a skinny bundle or version of it. Want to bring in Rich Greenfield, Lightshed Partners, talk about the earnings.
WBD, bye-bye.
Media. We've also got this Paramount potential transaction in the offing. I don't know, you want to start with the earnings? What did you make of them?
I mean, you got NBA rights too, Andrew. I mean, you got a lot of moving parts, right? We got a lot of things going on in this company, in this sector right now. And look, earnings are disappointing, obviously, but I mean, it's not shocking. I mean, when you think about what's happening, linear TV is in a lot of trouble. And, you know, I think it's one of the things that's certainly giving Adam Silver pause when he thinks about where the NBA rights are going to.
It's in a lot of trouble because we're tired of the propaganda and the politically correct and being preached to all the time.
Chip streaming service is going to go over the top. That's all going to be part of it. Amazon. But then do you choose NBC, which is, you know, yes, you have your challenges with your own linear TV business, but you've got broadcast, and you've also got the sort of financial fortitude of the Comcast cable business, that broadband business that Warner Brothers Discovery just doesn't have. And I think that's, you know, increasingly problematic for their chances of retaining the NBA.
Okay, so if they don't get the NBA, what would you think about this stock in the future and where it is even now?
Look, investors will panic in the short term. It doesn't mean that's the correct long-term decision. The investors are going to fear that, oh my God, they lose the NBA. Not only do they lose some subscription fees and some advertising, but they're going to fear that longer term, Charter, Comcast, others are not going to have to carry this portfolio of networks, because you can get HBO through Max directly. Do you need to carry the Turner and, you know, the Discovery Scripps networks that have been put together in this company? I think the answer is yes. It's a lot of channels to sort of give up. It's a lot of channel heft for these distributors to give up. But the knee-jerk reaction is going to be panic among investors if they don't get it. But again, overpaying, like let's just say you pay $2.5 to $3 billion to beat out Comcast. Right. That may not be a very good financial option either.
What do you think the earnings question? I mean, they are they've got cash, and they're paying down the debt, right? You keep seeing that.
He's doing exactly what he said in terms of cash generation.
That's where I was going to go with this. He is doing what he said, and shareholders don't seem to like that.
Because we're at a point now where it doesn't matter how much cash you can squeeze out of the existing company. Revenues are declining, EBITDA is declining, and this is what's affecting all of the companies in the sector. The fear is, right, that this legacy TV business is now in accelerating secular decline, and the streaming businesses aren't growing. I mean, you saw it at Disney, right? They're going to lose subs this quarter. The only reason they added subs was because they gave them away in part of a Charter deal. Like, the growth has stopped. Warner Brothers Discovery has lost subs over the last year domestically. Like, that sub story is gone. Yes, you've raised price. You're limiting the losses of these businesses, but the growth story is gone, and the core businesses are getting worse.
And are you a believer that any of these bundle programs, the one we just mentioned at the top of this with Disney now, between Max and Disney, is going to help the case? We obviously know about this sports bundle that includes.
We call it bundleitis. It is a disease, and it is something where you think that bundling these services together is going to save you. It's fixing the wrong problem. The problem is you have high churn. The reason you have high churn is that you're not creating a service that has enough daily engagement where people want to keep paying for it. And so they need to fix the root problem. The root problem they're suffering from is not enough usage, not enough great content to drive people to use it every single day.
But my question
Bundling is the wrong fix.
So here's the fundamental question, though. Do you believe that any of these streamers, from a value proposition, can actually create content at a reasonable cost that actually moves the needle to create that daily engagement? That is the fundamental question, with the exception of Netflix, which seems to be the only one that's actually truly managed to do that. Can anybody else do that without the scale that Netflix already has?
They could, but they'd have to do it, and they'd have to literally take a long-term approach of hurting the near term, not generating all of that free cash flow that you just mentioned, Andrew. They'd have to literally go through an investment cycle and be willing to tolerate the pain. And whether it's Disney, whether it's Paramount Global, whether it's WBD, you are seeing none of them have the tolerance to make that level of investment and sustain that level of investment. They just can't handle it with their investors.
Final question, Rich. Paramount Global. What do you think is going to happen here? We now obviously have this news about what Apollo and Sony would like to do if they could get their hands on it, which is effectively to break up the company. On the other hand, you have the Skydance deal, which is still sitting there. You've made the argument you think no deal happens before. I don't know if any of this changes the dynamic at this point.
I'm sticking to our guns. We think there is no deal. All the things that private equity would do, all the things that buyers would do, they can do a lot of these things on their own. There was Jeffrey Katzenberg was at the Milken conference, and I think he very much echoed what we've been talking about of, you can reduce cost, get out of Paramount, license a lot of the Paramount content to Peacock. Brian Roberts and your team would love to have it. License it to Zaslav. He would love, you're talking about scale and engagement. Paramount has a very important chess piece. And if they stop trying to be a streaming service and they start thinking about how they can create the most value from their content, I think there is a much better story that the new tri-headed, CEO group, I think they can execute a plan that creates more long-term value than just simply selling this thing right now. I think they could actually fix it over the next few years and then maybe try to sell it later down the road.
Provocative view. Rich Greenfield, thank you. Nice to see you.
Thank you.
It is 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin. And some of the top stories in business news today: the Bank of England holding interest rates steady, but two officials did support a cut at this meeting versus only one the last time around. Governor Andrew Bailey said he was, in his words, optimistic that things are moving in the right direction on inflation. Tesla is cutting more jobs in China as it also works to streamline its U.S. operations. This is the Bloomberg report, which says additional layoffs in China started earlier this week. And Reuters reports activist hedge fund Ancora Holdings has enough shareholder support to win at least some board seats at the railroad operator Norfolk Southern. Norfolk's annual investor meeting takes place today.
The futures this morning are still in the red. Dow futures down by about 80 points, so we've seen those losses increase there. The S&P down by about 11, the NASDAQ down by 41. Still, the Dow has had a 6-day winning streak, so we'll see where things end up. The Treasury market right now looks to be yielding for the 10-year 451, the 2 years at 484, and we want to get right over to Dom Chu. He's got a look at this morning's pre-market movers. Hi, Dom.
All right, so Becky, Joe, Andrew, good morning. Let's get you caught up on some of the earnings headliners so far today. The big one so far is ARM Holdings. Those shares are taking a bigger hit. They're down roughly 8.25%, just around 400,000 shares of trading volume pre-market. The semiconductor design company reporting generally positive results. Earnings, maybe questions about comparability to analyst consensus estimates, but the revenues were easily a beat. They beat expectations. They grew by 47% year over year, and that was thanks in large part to AI-related demand products. So ARM's full-year revenue guidance, though, is the issue. It came in short of estimates, which is likely driving the downside move there to the tune of 8%. Late breaking in just the last half hour or so are Planet Fitness shares. Those shares are down just about 8% right now, 25,000 shares of volume. This is the operator of fitness centers and gym facilities. It reported revenues that missed estimates, profits per share still being looked at for comparability to consensus. Planet Fitness is also lowering its full-year earnings and revenue guidance as well. The company sees what it calls, quote, a shift in consumer focus to saving. Planet Fitness gyms cater to more budget-conscious consumers, so that could be perhaps an indicator of some weakness in that part of the spending spectrum, so keep an eye on Planet Fitness. And then in the last hour, Becky, we told you about Shopify and how some analysts used the sell-off yesterday to upgrade the shares today. We are seeing a similar story playing out with buy now, pay later company Affirm, which is up 2.25%. It lost 10% of its value yesterday on the heels of its earnings reports. Those shares are up about 150,000 shares of volume. They're getting some help from analysts at JP Morgan, who upgrade that stock to an overweight from neutral. They also raised the target price to 43 bucks from 41. They're saying they're not letting a good sell-off go to waste. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers there get more analysis and detail behind some of those stories like that. So, Becky, kind of theme developing between the last 2 hours. I'll send things back over to you.
All right, Dom, thank you. A not so popular economic theory out there poses the idea that interest rate hikes may actually be boosting the economy instead of a recession, which many had been calling for and which has failed to materialize. Our next guest somewhat agrees with that theory. We'll talk to him about that. Bill Egan is the head of the absolute return and opportunistic fixed income team at JP Morgan Asset Management. And Bill, it's kind of a weird theory, the idea that higher rates are actually boosting things. A lot of people will say it's the Fed jawboning talking about rate cuts that have been boosting things, but you think the actual rate hikes themselves have helped in some arenas.
Well, I remember that article that came out, and I disagree with a large portion of it, but the part I do agree with is there's a lot more disposable income running through this economy than people want to actually realize. Like, for instance, I own a couple of small businesses, and one of the themes I see over and over again is particularly the over 55 crowd and people who've been saving, of which, according to the average economist, there are none, right? Everyone's over levered and maxed out their credit, and that's just not true. And these people have been collecting zero on their savings accounts for a decade or more, right? And now they have all this disposable income coming in the form of 5% plus money market yields. We're taking virtually no risk and collecting all this newfound income. And you're seeing it make its way into the economy. So that part of the equation, I definitely agree with.
Let's talk about how much you have in cash right now, because that kind of shocks me. I guess for this fund, you've had somewhere between 15 and 80% in cash over any given point in time. Right now, you are more than 50% cash. Why?
Okay. This whole mantra of cash is trash just makes me laugh. Do you know the 5-year return on the Barclays Aggregate Index, which is the S&P 500 of bonds, is negative? You've lost money in the bond market for 5 years. That means you lost your entire coupon and some of your principal, and yet people keep piling into this stuff. You know what the single best performing asset class is among traditional fixed income asset classes over the last 5 years? What you just said, cash. Okay, so if you haven't had any cash, you missed out.
Someplace else. I mean, that's
well, because as a fixed income manager, you know, you're limited in scope in terms of what you can do. You can't just go out and buy dividend-paying equities, some of which I think are very attractive here.
Right.
To be honest with you, you can create a 4% dividend yield with a portfolio of income-producing equities, including some money center banks, industrials, et cetera, and still have plenty of upside. But when you look at the investment-grade corporate bond market, spreads are at all-time tights, which means you're completely beholden to movements in interest rates when you own investment grade, when you own traditional mortgages, even when you own high yield to an extent. Because high yield bonds right now are trading at 295 basis points over treasuries, the tightest they've really
not
ever.
Worth the risk.
Right. So you're just taking rate risk over and over and over again when you buy these areas.
You think interest rates should be headed higher next? Do you think the Fed should raise rates? Forget about lowering rates.
Yeah, well, let's think about this just from a common sense standpoint, right? When you look at the checklist for Fed tightening right now, pretty much all the boxes are checked, right? You got inflation running way above target. You got the economy running, you know, well above where they thought it would be or anyone else thought it would be. Even this quarter, the Atlanta GDP Now index is at tracking at 4.1%, and we're already halfway through the quarter. You've got stock market at the highs, you got volatility at the lows, you got spreads at the tights. That's a checklist for Fed tightening, not Fed easing. And I'll bet if the Fed could go back to the fourth quarter and take back this whole easing bias, because the data's gone right in their face.
But they are.
Yeah, I know, exactly.
But they are easing. They're not with rate cuts, but with the balance sheet and everything. They're already doing it and jawboning it, even though we're...
Even though the market doesn't really want to listen, right? It's, the bond market doesn't. Like, for instance, you
seems like we're still pouring it on.
Yeah, well, it's interesting, right? Because you have a $7 trillion Fed balance sheet, which is,
never went down.
Right, really hardly ever went down. You've got an economy that's doing just fine. You've got a deficit that's at wartime levels.
How much would we need? How many? Jim Grant said 200 basis points of hikes before.
Yeah, I know Jim's pretty.
Yeah. Well, do we need? Do we need 2 hikes, 3 hikes?
I just think what the Fed's going to do here, when I look at it, sometimes the best trades are the ones you don't make, right? The Fed should probably just stand back and just do nothing, right? Because that's their safe bet. In reality, given the data, should they tighten? They probably should. Do I think they will in an election year? Probably not, right? But the big problem I'm looking at here is it is an election year, right? Everyone's pulling out all the stops. And what's that mean? That means the printing press is in full effect. That means tons of bonds are getting issued. You've got $7 trillion you've got to refund over, for the balance of the year, plus the bills to be paid. There's going to be so much issuance coming up, and I just wonder who's going to buy it all.
Bill, thank you.
Thank you.
Great. Billy.
Thank you. And coming up, an undercover investigation in New Mexico leads to the arrest of suspected child predators who allegedly use Meta's services for grooming and growth. We're going to speak with the New Mexico Attorney General after a break. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back to Squawk. Roblox just earnings report coming out, and the company posting a narrower loss per share than had been expected. Revenue also beat estimates, but the guidance is what seems to be weighing on the stock this morning, and you're seeing it down quite dramatically. If this is right, we're off about 28%, close to 30% this morning. The online gaming company sees second quarter revenue below analyst expectations, also cutting its full year revenue forecast. We're going to dig more into those numbers in just a little bit, but you're seeing a pretty dramatic sell-off right this moment in Roblox shares.
New Mexico's Attorney General Raul Torres announcing the arrest of 3 suspected online predators following an investigation in which the state's Department of Justice created online decoy accounts. The AG's office describes the so-called Operation Metafile as a months-long undercover investigation of child predators operating through Meta's platforms. In a statement, Torres said that prosecutors will continue to target predators, but, in their words, ultimately only Mark Zuckerberg and his executive team have the power to make these products safe to use. Attorney General Torres joins us right now, and boy, it's the same story, just a different method to accomplish these horrific ends. I think, Mr. AG, if it wasn't on Meta, they've done it other ways, but you think Zuckerberg needs to do something actively to stop it from happening on his platform?
Yeah, we've all seen the dog and pony show that happens on Capitol Hill whenever Mark Zuckerberg and other executives are taken to task for the way the algorithm operates. When they're challenged on why they don't have real age verification. And, from our perspective, enough is enough. Something has to change. And we are looking for accountability from this company, from its executives. And, yesterday's operation was, I think, conclusive proof that these platforms are not safe for children. And we need to start having a real conversation about how to change that.
It's, I don't know whether, if it's not Meta, it's going to be somewhere else. And it's really, law enforcement obviously needs to get involved. Is there any place that is safe besides Meta? I figure that if Meta were to stop it, these same individuals would just move to a different avenue of accomplishing the same thing.
Well, listen, we are always in law enforcement challenged by moving from one sort of orientation to another. When I started this 20 years ago as a prosecutor in this office, they were in totally different systems. We had to really look in dark corners of the web to try and find this information and identify these people. So we're always going to have to adapt and sort of evolve as our landscape changes. But that doesn't relieve the burden on corporate leaders to take a more active and focused role in making sure that they place as much energy on ensuring safety as they do user engagement, revenue targets and things of that nature. We have to do this in a balanced way. And for example, there are social media companies out there right now that don't allow adult strangers to direct message children. There are ways for Meta to change its business practices to actually just make this a safer product for people to use.
That sounds like it wouldn't be, so it would not be that difficult. It's been done and it wouldn't be that difficult. What is in it for Meta to not do that?
Well, I think there are reputational costs that come with maintaining a platform that I think is trying to place itself at the center of American life, of global conversations. But there's going to be a real drag on that company's reputation as long as we continue to have these stories, not only about mental health harms, addiction, anxiety, and those things, but really an emerging awareness of just how many predators are hunting in these spaces.
You just mentioned a lot of you take teenage girls and self-images and online bullying, and if I were Mark Zuckerberg, I would just close the whole thing down. It seems like a daunting task to try to address all these things. AG.
Well, listen, my perspective is that this has been a very successful company. It's obviously, it has tremendous resources and technical capability. My hope is that they would start using more of those resources and those technical capabilities on making their product as safe as possible. And, first we have to get through the legal process to demonstrate that they are responsible for the design features, for the way the algorithm works. I mean, one of the things that is a central component of our lawsuit is that it is too easy for people who have a sexual interest in children to find those children, in part because of the way the algorithm is designed. And so, it's really up to them to start opening up about how their technology operates and figuring out how to put in some safeguards that can keep people safe.
Would you trust Mark Zuckerberg to handle AI properly, seeing his record in all these other areas? And AI would make all these things, it would be like exponentially worse.
No, the short answer is no. I don't trust corporate leaders who have known about these kinds of harms for as long as they have. I mean, some of the things that have come to light in the early process, in just the preliminary stages of gathering, discovering information, reveal a real sense of awareness inside the company at the very highest levels, where we have these safety officers and people who are charged with identifying risks to certain users, and those concerns keep getting raised to the highest level and they get seemingly disregarded. We've had a number of whistleblowers coming forward who have identified these issues, and I don't, the proof of whether or not somebody can be trusted has got to be predicated on their past performance. And from my perspective, his past performance doesn't lend itself to any type of credibility when it comes to something as impactful as artificial intelligence.
Okay, we're going to have to leave it there. Thank you. New Mexico Attorney General Raul Torres. Thank you.
Okay. Coming up, North Island's Glenn Hutchins joins us for a wide-ranging conversation on the economy. But next, we're going to speak with the journalist behind the new piece, "A Year on Ozempic Taught Me We're Thinking About Obesity All Wrong." You do not want to miss this conversation. It is right after this. Welcome back to Squawk Box. An obesity treatment getting more popular. We talk about it all the time. A new op-ed in the New York Times tackles the legacy of judgment and morality in weight loss. The piece is titled "A Year on Ozempic Taught Me We're Thinking About Obesity All Wrong," and its author joins us now, journalist John Hari. He's got a new book out. It's called Magic Pill: The Extraordinary Benefits and Disturbing Risks of the New Weight Loss Drugs. So here we have you here to tell us. We all debate it. We're not on it, so we don't know.
No.
Tell us about this experience. What is your relationship with food like, and what is the biggest lesson of all this for you?
It's the strangest thing when you start taking these drugs. Obviously, I spent a year doing a really deep dive into the science all over the world, interviewing the leading experts on this to see how it's going to affect us and our economy and our society. But when you actually take it, I thought it'd be silly to write the book and not take it, and I was very overweight at the time. It's the weirdest feeling. I'll never forget, the second day I took it, I woke up, and I was lying in bed, and I thought, I feel something really strange. What am I feeling? I couldn't locate in my body what it was. And then I realized I had woken up and I wasn't hungry. That had never happened to me before, right? And I went to a diner just up the street from where I live, and I ordered what I used to order every morning, which was a huge brown chicken roll with loads of mayo in it and loads of chicken. And I had like 3 mouthfuls and I couldn't eat anymore. So what these drugs do, there are extraordinary benefits and disturbing risks to these drugs, but what they do is they give you a feeling of satiety that has been stolen from us by the kind of food I've been eating all my life, junk food.
Can I ask you a question though about this?
Sure.
Your relationship with food, do you still enjoy the food? Do you feel that it's changed your level of happiness around food?
So
in a good way, in a bad way? Because that's something we've all talked about, just
I love
living life.
I don't want to go to a diner.
Right.
No, you're right. I go through really big drawbacks to these drugs in the book. There are 12 big risks associated with them, some of which I'm very worried about, along with these incredible benefits. Lots of people just lose their pleasure in food. I actually had the opposite experience. I realized how much I ate to calm myself down and stuff myself, right? From when I was a small child, that a lot of people have that relationship with food. And you literally can't do that when you take these drugs, right? If you tried to kind of go to KFC and pig out, you would throw up. Right. So actually for me, because it's slowed down my eating, I actually take more pleasure in food now, but I'm unusual. Most people are more like, your concern is absolutely legitimate.
I've wondered if it would ruin what you feel, the pleasure you take in other things too. And the only thing I can liken it to, and I don't know if this is true, like probably once every year, every 2 years, I'll get pretty sick and I won't eat anything for 5 to 7 days because I just can't. You lose weight. I don't want to eat anything. When I feel better, I go back to eating and I go back to my normal size. Is it like that? Does it take the joy out of other things, or you haven't noticed any?
So a significant minority of people who take these drugs seem to be becoming depressed. There's even some concern about possible suicidal ideation. It's a huge debate about why that might be. We know these drugs primarily work on your brain, not on your gut. There's been a shift in the science. Interview the leading neuroscientists about this. So there's a concern that it may be dampening the reward systems in your brain in exactly the way you're worried about, although other scientists trying to contest that. But it's really interesting. When you look at the risks of the drugs like that, you'd think, well, it'd be crazy to take this. But what we have to do is weigh 2 very specific things. You have to weigh the risks of the drugs, which are real and significant. All the concerns you're raising are really important, against the risks of continuing to be obese. Realistically, I would have continued to be obese, right? This is the biggest killer in this country.
Everything bad.
It is.
Everything bad.
I have to say, I was embarrassed to say this because it will sound naive. I was stunned when I looked at the evidence of how bad for you obesity is. It causes 200 known diseases and complications. You're much more likely to get cancer, dementia, stroke, I mean, just across the board. So the really extraordinary benefit of this drug, this range of drugs, you lose 15 to 24% of your body weight. If you reverse your obesity, you dramatically improve your health. I'm older now than my grandfather ever got to be because he died of a heart attack when he was 44. This is quite possibly saving my life.
The holy grail, and you're right, microdosing with a pill. That's
and if you look at that, you're totally
that
right.
possible?
So there's a big debate about this, and there are now experiments going on with it. But if you look at Barclays Bank commissioned a very sober-minded financial analyst called Emily Field to look into these drugs to guide their investment decisions going forward.
Not related to Mrs. Fields. See, I'm always thinking about food. I'm always thinking about food.
But she came back and said, if you want a comparison for the effect this will have on the economy, you've got to look at the invention of the smartphone, right? 47% of Americans want to take this drug. This is the biggest, obesity is the biggest killer in the society. These drugs are going to be enormous.
Tell me, though, what it's done to you in terms of exercise. So the other issue is that people who do take these drugs, in some ways, some people exercise more because they actually now, they're not obese, so it's actually easier to exercise, but a lot of people don't because they say, look, I'm I'm really thin now, I don't need to exercise.
Yeah.
And then there's a big issue about, we were talking about muscles, even muscles in your face, we're talking about Ozempic face, and my understanding is part of that is that people don't eat enough, because they're not eating enough to begin with, you almost have to force feed yourself protein to actually keep any muscle strength.
Yeah, it's a really important point. So there's lots of things in what you just said, but if you think about one just in terms of muscle, so one of the big worries about these drugs is as you age, you naturally lose muscle mass, which is the soft tissue in your body you need to move, climb the stairs, get out of the chair or whatever. And actually, depressingly, you start to lose it at the age of 30, which I think is a very depressing thought for me. What these drugs do, like any other form of weight loss, is they really reduce your amount of muscle mass. So the danger is you're going into the aging process, which will
with less muscle mass.
And this is particularly an issue. So I would say
you believe it's so there's a debate about this, whether it's the drugs that's reducing the muscle mass itself, or the fact that people who are taking these drugs are no longer moving or exercising the same way, and or this protein issue.
Oh no, we know all forms of weight loss cause a loss of, you lose weight, so you lose both fat mass and muscle mass, almost everyone does. This is particularly risky, that risk of the 12 risks that I talk about in my book, Magic Pill. That one's particularly salient for people who are already thin, who are taking them to be super thin, right? Because they're going to have, and we've got to really distinguish a few different groups. There's people who are overweight and obese, who are taking them to come down to a healthy weight. They're still incurring lots of risks about thyroid cancer, risks about pregnancy. But I think there's a really strong case for that when you weigh the balance of risk, particularly if you started as severely obese. For people who are already thin, I would say you're incurring a lot of the risks for only an aesthetic benefit.
Eli Lilly is working on a pill version of this, but it doesn't work on both.
The gut hormones,
both hormones. It only works on one hormone. Do you think that just working on one hormone is going to be enough? Is that going to be the microdosed version? Because, for example, because it's not as extreme, is that going to be? How do you think about that?
So, as one of the leading scientists put it to me, we've cracked the code of what causes weight loss, gut hormones, and there are more than 70 gut hormones that affect weight loss and appetite, right? So now that we know tinkering with that is what changes, what can lead to weight loss, there's going to be an extraordinary range of development of these drugs. Some will be microdosing smaller ones, some will be bigger doses. We're going to discover more. But we've, as one leading scientist put it to me, we've found the holy grail. We've cracked the code,
I know we got to go downside, though. Do you feel like there's a downside to all of this?
Oh, there's a huge downside. I'm really worried about lots of risks. My biggest worry, not for me, but for many people, eating disorders. There are loads of young girls who, and unfortunately it's girls, trying to starve themselves. The worst case scenario is we could have an opioid-like scale of death toll of young girls who are able to amputate their appetite using these drugs in a way they wouldn't be. That's why we urgently need to regulate. You should only be able to get these drugs from an in-person, inpatient appointment with a doctor who is trained in detecting eating disorders. There's incredible benefits to these drugs. They're probably saving my life. There are incredible risks. We really need to take a beat and think deeply about
the book is called Magic Pill. This is an awesome conversation. I hope you come on back and we'll discuss it more. Thank you.
Cheers. Thanks so much.
Thank you.
All right, we're getting a new look at initial jobless claims. Rick Santelli is standing by at the CME in Chicago. Rick, what are the numbers?
Well, we see interest rates moving down, pre-opening equities moving up. That's because in this backwards world we live in, initial jobless claims came in hotter than expected. We're looking for a number around 210,000, 231,000. This happens to be the largest amount of initial claims since the last week in August, and last month had a very subtle revision from 208 to 209,000, so a rather big jump. And if we look at continuing claims, kind of the reverse image, 1,785,000, darn close to expectations. Last week got slightly revised to 1,768,000. And if you look at all four readings so far for the month of April, and that is the last week in April on continuing claims, always a week in arrears, they are really snug, very tight numbers, all basically slightly under 1.8 million. I've never really seen anything quite like it. All the volatility in continuing claims just seem to have diminished, but that initial claims number is big. We will have 25 billion 30-year auctions completing our May refunding, and I do point out that yesterday's 10-year auction really sparked a bit of a sell-off that pushed 10-year rates back over, at least temporarily, over 4.5%. Becky, back to you.
Okay, watching that closely. Thank you, Rick. When we come back, a can't-miss conversation with North Island Chairman Glenn Hutchins. Squawk Box will be right back. Welcome back to Squawk Box, everybody. Steve Leisman joins us on set. He's got some brand new data on the consumer. Hey, Steve.
Good morning, Becky. The CNBC NRF retail monitor showing consumer spending moderated in April, but much of the weakness looks concentrated in the restaurant and food sector, and some of it could be the result of seasonal factors like when Easter was. The retail monitor, it shows actual credit card spending from data gathered by Affinity Solutions, shows our headline index, which is ex-auto and gas, up to 0.3 compared to 0.4 in March. Headline year over year, down to minus 0.6. It had been up 2.7, 6 segments down, 6 segments were up. Looking at the core, we take out restaurants there. You can see the weakness was in restaurants because the core was up 0.4 versus 0.2 the prior month. Year over year, it was down 0.1 versus 2.9. Seasonal factors could be partly at work here. Easter was in April a year ago, March this year, and this April had 2 fewer weekend days. That could explain some of the weakness there. But it's worth being mindful here of whether consumers may be balking at higher prices when it comes to eating and drinking out, like at the diner. Building garden supplies up, electronics up, and furniture, home furnishings up. It's interesting to me because we've had that weakness in housing. Maybe finally we're getting a little bit of a rebound in those sectors there. But there's the restaurants and bars down 0.3 and food and beverage down 1.1%. Unemployment remains low following a period where they were negative for 2 years. Real or inflation-adjusted wages, you can see there, they've been positive since May 2023. So that's almost a year now of positive real wage gains. Consumers have the wherewithal to spend, but we hear executives on earnings calls talking about consumers shifting away from higher price choices towards those where consumers can find more value. The retail monitor, you can see, had been running in line with the census retail data, but didn't pick up the surge in government that the government reported in March. In general, the monitor, you can see there shows less volatility than the government, and it's not revised because we use real data to collect this data. We could be in the process maybe of a backlash by consumers when it comes to higher prices. At least that's the takeaway from those earnings calls from retailers, and especially in the restaurant sector. Could mean a fall off in sales, or we have to watch, Becky, the margin story, right? You can decide to keep market share, but perhaps compress your margins a little bit when it comes to some of these high prices for eating out.
I'm trying to think about it. I mean, maybe we should have expected it just because the numbers for people eating out, the increases that have fed into this point, maybe not a huge surprise to see a little bit of a pullback.
You don't reach new equilibriums in a calm way, right? You raise prices, and by the way, some of these retailers had to raise prices because what's happened to the minimum wage and just the general wages when it comes to labor. But you get there, you raise prices. Look, in economics, what's so fascinating, prices are seen as a conversation. Here's the price. Do you want it or not? Is it too high? Is it too low? And consumers might be talking back now and saying, you know what? Going out to the diner.
Yeah, no mas.
Maybe that's just maybe a little bit too much.
Maybe we need, seriously, Sorkin, short all the restaurant chains. I mean, if this really becomes...
Because of Ozempic and the trends for those things?
You're really not going to want to
Is that part of
go,
what plays
and
in?
prices.
Right, exactly.
There have been conversations in some earnings calls about whether restaurants, whether stores are seeing pushback, grocery stores, whether those numbers are coming down, and it hasn't been highly evidenced yet, but it's definitely something they're keeping an eye on.
It's something to watch. We've seen some of the what is it, the snack food folks have had their challenges. Look, if we're going to normalize that, and plus you get to the place where the prices are, and as Andrew was saying at the break, if you spend less eating food, maybe it offsets the cost of
the drugs
of the drug itself.
It may eventually. I mean, the question, of course, is what's going to also happen to all these food companies?
We have to go, but I have to tell you that tomorrow I'm going to be in Minneapolis. Actually, today I'll be in Minneapolis, but tomorrow I'll be talking live at 2 o'clock with Minneapolis Fed President Neil Kashkari and Chicago Fed President Austin Goolsbee. We're one short of having to officially announce a meeting of the FOMC, so we're going to have a twofer tomorrow.
What's Goolsbee going to Minneapolis for?
Kashkari invited Goolsbee to speak to his forum that he does in Minneapolis publicly, and he asked me to come moderate that forum.
Excellent.
So I'm going out there. I said, sure, I'll come talk to you, but you guys come on CNBC, and they agreed. So we're going to have a nice
You got to come
chat.
tell us what they say, because Kashkari is now saying maybe
A lot of lakes.
hike.
A lot of lakes.
What's that?
Kashkari didn't take a hike off.
I don't think a hike is off the table. You got a couple more bad months of inflation. We got to go, but you got a smart guy coming up to talk about that stuff.
We do. In fact, when we return, North Island Chairman Glenn Hutchins will join us to talk about the economy, the Fed, crypto. Oh yeah, he wants to talk about the Celtics too. Guess why? Stay tuned. You're watching Squawk Box. This is CNBC. Welcome back, everybody. Our next guest is here on set to talk about everything from the economy to the Fed to technology and the NBA playoffs. We want to welcome North Island co-founder and chairman Glenn Hutchins. Glenn, it's great to see you.
Happy he is, by the way.
Good morning. Happy to see you guys.
No,
it's been too long a time.
You're winning.
It's fun to be
You have
here.
a big fat ring on your finger.
Yes, they asked me to wear that.
Yeah,
Championship ring 2008. I got room on my hand for others.
Did you get that from Putin?
No, but I kept him from taking it.
We'll talk NBA playoffs and maybe some of these rights issues in just a little bit, but why don't we start off talking about the Fed and what we're hearing. We just had this conversation with Steve. He's going up to see Kashkari and Goolsbee. But the real question that starts to come up with these things is, what happens next? Kashkari this week made some news when he said he's not taking a rate hike off the table. Forget about rate cuts. A rate hike is not off the table. Stan Druckenmiller was here this week. He thinks the Fed should raise rates. What do you think?
Look, by the way, I thought your interview with Stan was terrific. Well done. I listened very carefully to that. So I've said pretty consistently, Becky, that don't expect the Fed to reduce interest rates until it gets to its 2% target, full stop. Any other forecast in the market that doesn't take that into account, I think it's just wrong. I don't listen to it. I've also been concerned about the last part of inflation being sticky. And that it might take longer to get to the 2% target than the market was seen to be forecasting. Right now, I think there are lots of issues for why it's sticky. You talked earlier today about the fiscal stance, which is important, but I think the real issue right now is very broadly described. Prices have gone up about 18 to 20% in this cycle, wages up about 13 to 15%. There's a 5% cost of living gap that's left, which continues to create a lot of wage pressure. Wages are increasing by 4% on a relatively consistent basis now. And until I think we've caught up with the increase in prices, there's going to continue to be that wage push inflation. I think it's the main thing going on right there, right now. Absent a reduction in inflation, you should not expect to see the Fed cut rates. And if inflation spikes up, I wouldn't be surprised to see them, with one exception. The only way I would see the Fed reducing rates without seeing inflation down was if there was a spike in unemployment. But that would have to be a real spike.
Something really bad.
Something really bad.
In the system.
Yeah. The interesting thing for me, the more interesting thing is how the economy has tolerated these higher rates, which we didn't expect. Economy's operation has been really good. Unemployment, consumer spending, capital spending, corporate earnings, stock prices, low VIX, the whole thing is pretty much of a Goldilocks scenario, even though we have these high rates.
Glenn,
and I think there are two kind of things going on, but go ahead, Joe.
I was just getting worried because 2% might be hard to actually get there. And to do the things necessary to get there, there's always the worry that you could do too much and overshoot and even be, the last thing we want is deflation or something like that after we saw Japan. Right. So, but to just nail that at exactly 2%, I mean, we could be waiting for 2 years before we get to 2%.
We could be, Joe, but it's a really good and important point. But if you think about the nature of the recession that might be in front of us as a consequence of overshooting a little bit, it looks more like 1999-2000, which was an interest rate cycle, rather than 2008, which was a balance sheet problem. And in those situations, reducing interest rates, turning the oxygen flow back onto the economy, historically has worked pretty quickly. So I think the dangers of overshooting in an interest rate cycle recession are different than a balance sheet recession.
You need to be willing to move your goalposts, and you say you're not.
Maybe.
But I don't think we're. When do you think, honest to God, that we actually get to 2%, a real 2%?
I don't make forecasts, but I said the issue, Joe, is think about how well the economy's doing. The pressure to reduce rates from a policy point of view, I can understand why market players might want to see rates reduced for the purposes of their portfolios. But from an economic performance point of view, there's no reason now.
Except
right?
that
that's the major issue.
Except that there's a question about young people who are trying to buy a home, all of those.
Well, there are issues.
Real issues, and by the way, it's impacting the political landscape in terms of how Americans feel about what they think is actually going on and not going on.
I think the feeling issue is more around this loss of purchasing power. But there are two things I think are really interesting to think about.
But by the way, that's a huge
but that's
thing. If everybody feels that they have lost their purchasing power.
But you can't fix it by lowering rates.
You can't fix it by lowering rates.
I agree.
That's exactly the point. But I think one thing we need to take into account is that the higher interest rates, these aren't really high interest rates by historical perspectives. And we're having, it produces a much healthier allocation of capital right now than we had at those low interest rates when money was basically free. And I think having a positive price for money is a really positive thing.
There's still liquidity out there.
Yeah, but you see capital being allocated to projects that are healthy and can generate a realistic rate of return. But the second thing I think is going on in this economy, which we're not taking account of, is I think we are seeing a productivity revolution, a pre-AI productivity revolution, which is one of the conundrums the last 10 years was why was all this technology investment companies were making not generating productivity gains? And I think what we're seeing is those technology investments now being paired with business processes that are really being used in companies. You see the CEO comes on this set and talks about what they're doing inside their companies.
Yeah.
And younger, tech-savvy, often digital native executives who are running those companies now and implementing those technologies rather than the older generation of the past. But I think we're seeing, before the widespread implementation of AI, a productivity revolution which is driving results in our economy, and which is part of it.
Let's just jump from what you said, where people are making more rational decisions about how they allocate capital. You have to see a profit and a way to profitability. You can't rely on this free money for forever. Right. I think that plays into the streaming wars and the lack of money that's being spent or allocated, or how all of these big companies are now looking at streaming differently, trying to figure out how to make it make sense. And that plays into the NBA rights. We've got.
There we go. That was a good transition.
Good segue.
Well done, Becky.
Well, it clicked in my brain at that moment.
Right.
The reason Wall Street no longer looks at this and says you can spend to the sky is because they want to see some return on these things. We're no longer willing to fund it with free dollars. So now you have the battle playing out for the NBA rights. It matters as a partial owner to the Celtics.
Right.
What do you think should happen here? Who do you want to see win this bid? What makes sense?
I don't have a dog in the hunt. I think having the best price with a company that can deliver the results over a longer period of time is the right answer. But to go back to the underlying question here, companies and industries have problems when two or three things come together, not just one thing. So what we have here is not just a sort of macroeconomic set of issues, or an issue around streaming, or an issue around the cost of capital for streaming, but you've also got this rapid decline in linear television, much more rapidly than any of us expected. Mm-hmm. And the collapse in values of anything other than news and sports in broadcast television. You were talking about earlier about breaking up the bundle. During this past year, I've been favoriting the channels that I watch on a regular basis. I've got 4. You're one of them, by the way.
Thank you.
Yeah, you're one of them. So I don't need the bundle. I've got 700 channels, of which I use 4. The 5th one is the NBA TV, which I can get on the NBA app.
Right.
So I don't see why I need that bundle anymore. That's the problem. That's the and these companies have been subsidizing the sports rights with those. And
this is actually, I didn't realize how much of a complicated question this may be for you, because you're on the board of AT&T. Mm-hmm. AT&T still has a big stake in Warner Media.
No, not in Warner Media.
None?
Spun. It was a spin. It was
spin
a spin
completely? I thought you still had something in it.
No, spun completely.
Okay, so do you care about what happens to that company when you look at their earnings this morning?
I watch it with interest, but I don't have an economic interest in it, or a fiduciary interest. But I think, again, you've got this rapid decline in ad-supported linear television that is significant. And also the companies that, like you see what's going on with Paramount. The studios, during the free money for streaming era, were the factories for content.
Right.
And so less money for content and more economic rationality around that means less support for that part of the business too. So you've got these things happening all at once.
It changed on a dime, though, and it changed on a dime because money was no longer free.
Part of it. Part of it. But I think it was Hemingway said, "How do you go bankrupt? Slowly and then all at once." Then all at once. Right. So it catches up to you at some point and it's over. Right.
And just to, by the way,
really good.
Not to belabor the point, and maybe I'm wrong here. AT&T shareholders, though.
AT&T shareholders.
Yes, own a huge part.
Well, but that was
maybe not anymore. They might have sold.
That was over 2 years ago, and I would be surprised if the telecom holders who want a dividend would have long since traded out of those securities, in my view.
Glenn, you just got back from India.
Yes.
What were you doing there?
I was doing a bunch of things, but I spent a fair amount of time thinking about what's going on in the business community there. Thinking about how to it as an investment opportunity. Because one of the things that's happening now in the world is that the marginal dollar that was going to China is looking for someplace else to go. Even some of the people withdrawing capital from China to the extent that they can are looking at other markets. And India is really interesting, fascinating. So I make 2 or 3 big points about it. One is that they've got their macroeconomic policies really, really right in terms of managing their budget deficits, growing the budget deficit less than the growth of GDP, reducing debt as a percentage of GDP, investing in infrastructure, having a guarantee, having a national sales tax. And so that feels like it's a really positive thing. On the other hand, they've got some very, very serious social issues that are potentially disruptive to business. They've got 230 million Muslims whose rights they're suppressing. They have very broad-based and growing inequality. They have much lower GDP per capita than China. And they've got all the same things we've heard about India over the years, which is corruption, inefficiencies, red tape, and very slow court system that works, but very slow capacity to get that done. And then the other thing, which is really good, is they're having the election now, which is really quite remarkable. They're going to have almost 1 billion people vote. And there's some issues on the fringes around the election, but it seems largely fair and free. So you add it all up, and there is some investment capacity there, and some really interesting things, particularly in the technology community, but it doesn't have the absorptive capacity to take what had previously gone to China. So that's a quick take on.
They're yelling at us, we have to go, but I got to ask you about the Celtics. They've been dominating. Massive wins in the ones that have come through.
Who can I count on every night?
It's a team game, and we play a team game. I will tell you one thing. I'll make one comment about
Jalen. I mean, whenever I bet on it, that's the night they did it. You know, then Derek White gets 40 points or something. You don't have a center.
Yeah, I'll let our coach and our general manager talk about our team, but let me make a comment about the NBA.
I like Al Horford.
Yeah, I like them all. There's a changing of the guard in the NBA. And it's really interesting to watch right now. The stars who we watched in the past 10 years are watching the game on TV today. LeBron James, Steph Curry, Kevin Durant, that whole echelon.
Jalen Brunson.
And now we have Jalen Brunson here in New York. Jalen Brunson, Tyrese Halliburton. We got our guys. We have Anthony Edwards.
Who do you fear?
Luka Doncic. It's a new group.
Who do you fear? And who do you respect? What other team?
Every team right now at this stage is really, really good. And so you got to take everybody very seriously right now. But it's great. It's see these young players, the teams thriving. The game, last night's game here in Madison Garden was incredibly competitive. To see the Knicks come back, it's always great for the NBA to have the New York team do well.
Down to the wire.
So it's really fun. Great time of year.
Glenn, thank you. It's great to see you. Squawk Box will be right back.
Welcome back to Squawk Box. I'm Julia Borston with a market flash on Warner Brothers Discovery. Shares are now down about 2% after the company missed on both the top and bottom lines. Revenue fell 7% from the year-ago quarter on a much larger loss than anticipated. Now, streaming was a bright spot. The company added 2 million direct-to-consumer streaming subscribers, and streaming ad revenue grew 70% in contrast to the 8% decline in TV networks ad revenue. CEO David Zaslav explained the intention of this new bundle of Max and Disney Plus and Hulu that's now in the works.
We expect this product will help increase retention and lower churn, and thus support higher customer lifetime values. And finally, over time, as the bundle gets more traction, we will benefit from increased efficiencies and greater marketing effectiveness. The bundle will go live later this summer, and we're excited about what it could mean for our business going forward.
We don't have details on pricing or a launch date for this bundle, but Zaslav called the price both attractive and reasonable. Back over to you.
Just like we are, Julia. Thank you. Make sure you join us tomorrow. We got to go. Squawk on the Street is next.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are a bit red as the Dow looks to snap the longest winning streak of the year, so far at least. Lots of earning movers. Bank of England holds steady. Jobless claims pop to the highest level since August. Our roadmap begins with a potential crack in the AI stock boom. ARM Holdings notching a surge in profits and sales, but shares under some pressure on weak guidance.
Plus, media moves. Warner Brothers Discovery missing estimates despite streaming growth. Ad sales fell 11%. Airbnb shares are also falling ahead of the open. The company sees robust demand for travel, but its guidance disappoints investors. CEO Brian Chesky, he'll be joining us in just a few minutes.
Let's begin with some of these momentum names today, including one of the beneficiaries of the AI boom, and that's ARM Holdings. Down sharply as full-year sales guidance comes in below consensus, overshadowing a quarterly beat. But shares of the chip designer still up 90% from the September IPO, price of 51 a share. Jim, revenue up 47, licensing up 60.
Yeah, look, I think that Renee Haas will be able to tell a good story. That there was really one question on the conference call by Goldman analyst who's very, very good, which knocked the stock down, which is explain to me the down 7% sequential problem when it comes to the some of the royalty arrangements. And they were basically saying, David, that it was Internet of Things and automotive. Now, that is not unusual. That is what everyone has been saying. Like an ON Semi has been saying that. Texas Instruments has been saying that. So they do have this component that is not wizardry. Wizardry was very strong, if you want to know the truth. And wizardry being AI.
Yeah, explain. Wizardry is AI, is what.
Well, it's the I don't know if you
generative AI and what they're.
Right. I don't know if you caught the excellent interview John Port did with Jensen Huang, but you know he loves ARM. Obviously, he tried to buy ARM. Renee Haas, the CEO, is from NVIDIA, but I just think that this was one where people wanted to sell it. They were looking for a reason to sell it, and they got a reason. And I don't think there's more to it. I really don't. I don't think this was that bad. When you see those numbers that you just mentioned, David, people kill for it. So a sequential down.
I mean, I'm reading Morgan Stanley note here, like a lot of others. Well, they say with a weak Q1 guide that you're referring to with that down 7% in terms of guided royalties, we think management may have flushed out some of these near-term concerns.
I think that's
so
true.
They're positive.
I think that if you had stayed close to the company, you would have gotten that, but the people who didn't stay close to the company weren't rigorous, and therefore they got fooled. It had to do with rigor. It did not have to do with Renee.
When you back up, though, I have to admit, you know, sometimes I forget, and I don't mean this in a negative sense, but this doesn't have that much in revenues. I mean, the multiple of revenues for this thing is pretty darn high,
no,
Jim.
That's a great issue, because what's happened is that Blackwell, which we now know is kind of like Blackwell's kind of like Godot for some people. Blackwell includes ARM, that's the CPU, okay, and the GPU is NVIDIA. Right. And that's going to be the biggest combination that's ever hit. That's the Industrial Revolution combination that Jensen Huang keeps talking about. And so, Carl, you get to a situation where you're thinking about what's going to happen in September, October. You realize that ARM's taking share. And they've got phone, they have PC, they have the world. They're going to be the CPU company. Even though they have a deal with Intel, I think they're overrunning Intel. So I like their situation very much because you got to be thinking about next year at this time. And the billions that are being spent on the data center, when you go into the data center, you got to look at what's in. Oh, it's Vertiv's in there, Eaton's in there, okay? But then, of course, Grace Blackwell's in there, which is NVIDIA, and ARM's in there. You want to be in there, or else you're kind of being left behind.
You're not in there. If you're not in there, then
If
you're
not in there, you're
in there. You're in there. And if you're not in there, then you're not
what
in
you're
there.
saying is you're either in Warner Brothers Discovery TNT or you're in the. No, I just saying that it's just a very strong.
To come back to valuation, though, you're talking about a company that did $928 million in total revenue, up 47% year over year. Yes, but
where were they were 10 years
all right,
ago?
but it's trading at what, 25 times?
Well, okay. It is
12
far
months?
more expensive.
Revenues.
See, it's got that revenue light. It's got that revenue light model. They
Understood.
All they
Right.
do
So a
is
lot of it is
design.
just going right to the bottom.
Right.
Yeah,
So
no, I get it.
anyway, look,
I
I
get
don't
it.
want I don't want to get people excited about a stock that's that expensive. I do want to say that the so-called disappointment had to do with people who wanted to ignore the part of their business that's pedestrian, and we'll get in that with Renee. But Renee did not let people down, lest people think, you know what, this guy in his third quarter didn't do a good job. So anyway, let's just keep that in mind.
We're going to talk to Brian Chesky of Airbnb in a moment.
Yes.
Did you feel the same way about the reaction to that guidance?
Okay, that one I don't understand because I do think that you have this hole in the second quarter, which I don't believe, this little slip. And then you've got this incredible, this is the valley of the shadow of the death, don't fear any evil, and then it's going to fly up at the end of the second half. And I happen to think that Chesky is one of the ultimate, listen, I hope it goes really well, but I'm not going to bank on it. As opposed to he's not under-promising, over-delivering. He just runs scared. I've had him on many times. And if you take a look at the stock, it's just going up, 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 except for right after a quarter, because he's just a guy. It's almost like he's a superstitious guy. And he does want to say, you know what, next quarter is really a blowout quarter. I like him very much. He's done remarkable things, and we're going to love this interview because this is one of the most exciting times for Airbnb ever.
Although, I mean, more macro, Hyatt RevPAR in the U.S. was up just a smidge. Planet Fitness today, obviously what we heard from Disney a few days ago about travel.
We do have a problem with travel. We don't have a problem with international travel, which is a lot of Airbnb, but we do have a problem with travel. And I think he's going to acknowledge that there is a bit of a slowdown. I mean, I'm looking at the TripAdvisor. They have a real problem with travel.
True.
But I do think that if we go back to Booking, Booking's Holdings made it very clear that international travel is very, very strong. The so-called, I hate this term revenge travel, because I don't think anyone's really say, you know, I'm going to show my revenge and go to Iceland with Diana Olaf and stay next to that spot next to that. What are you doing?
What am I doing?
What are you, like, prepping something?
I'm making
He's
faces
gesturing
to
while
our
I'm talking.
producers.
You're gesturing.
Because they can see me even though our viewers
What are you, like
can't.
a third base coach? I'm not. Don't wave me on here.
I'm doing some signs.
It's the Carol Burnett ear tug.
Yes, it is.
I'm not ready to do WBD yet.
Thank you. I
met him at a deli.
What I was trying to do is say I'm not ready to talk Warner Brothers because I wanted to come back to you on valuation on Airbnb.
Right. So
because we just discussed
Airbnb
the
is
multiple
momentum.
revenues for ARM. Let me finish my question.
Airbnb is a momentum stock.
Let me finish my question, please.
Yeah, sure.
Okay, thank you. Airbnb, 41% trailing 12 month free cash flow margin of 41%. They did 1.9 billion in free cash flow this quarter.
And
last 12 months is only 4.2. So
they're buying back stock.
I mean, the multiple to free cash flow is not that high.
Okay, thank you.
When you let me ask my question, you see how happy it makes you.
Okay, you're wearing two suits.
I'm always wearing two suits.
It really scares me.
Very upset.
Carl,
makes him very upset.
I have to look at you because he's still signaling things. But Airbnb is one of the classic growth stocks of our era. And Brian Chesky, if you remember, I mean, this is a man who's just weathered he's weathered pandemics. He's weathered a big downturn in 2008. He always comes out on top. Why? Because he's probably one of the most creative CEOs in the world. And I think we're going to get some of that. And we're going to be overlooking this next quarter after we speak to him
because of the guide about Q3.
Because the things he has in the pipe. Yeah, and I know. Look, I see the RevPAR there, and Marriott didn't do the right number, and we know that there's there's a moderate decline in travel. So I understand why this is down, but he's more than travel. He's experiential, exciting. Take the stock down. Don't forget the Olympics are coming. The Olympics are loved. Yeah,
and you like this new rollout of, is it called Icons?
Oh, come on. That's what I want to talk about so badly because I'm so excited. I was on it with my daughter last night. We were trying to figure out whether to book Kevin Hart.
I'm into the Prince house, but we can fight over it.
Oh, my God. The whole thing's very exciting. When we talk to him, I think people recognize that, yes, okay, so I got that, the negative quarter, so-called negative quarter, I don't have to worry about that now. It's been de-risked. But the things that this man has, he's just a creative genius, and we don't have enough of that in business.
No, we may not. Speaking of de-risked, very much
Where you
unclear
going?
whether or
Where you
not
going?
Warner
Come
Brothers
on.
Discovery has been de-risked.
Oh, okay.
That's all. Real quick, take a look. Of course, the company also reporting earnings this morning. Conference call just completed as well. And the stock's going to be down, though not that big a decline at this point.
Okay.
It's sort of more of the same. I mean, you've got continued declines in the linear networks, not a big surprise. You've got some growth, or at least some EBITDA, adjusted EBITDA at the direct-to-consumer offering in Max, which is just under about 100 million.
And they're raising
subscribers
price
right
in Max?
now. And they're raising some price. Free cash flow was $390 million. I'm sort of looking at what, the adjustments and what was done there. But free cash flow did come in at $390 million. Obviously, that was up a lot from a year ago when they had negative free cash flow of $631 million, I think it was, or something like that. Primarily more disciplined approach to content investment, the timing of production, ongoing working capital improvement initiatives, lower cash restructuring costs, and things of that nature. But Jim, it's nothing you can look at in this report and go, oh, this changes the narrative.
No.
It doesn't.
And at the same time, Comcast, parent company of this network, most likely interested in the NBA contract, particularly because, by the way, NBA is divided among Amazon, ESPN. I don't know whether you think we're getting the A package, the B package, or the C. If we do get it, Comcast. But it leaves TNT in a questionable...
It leaves TNT in a very questionable position if, in fact, Comcast, our parent company, is successful in securing the NBA rights. Zaslav on the call didn't have much to say about it, simply saying, as we've reported, of course, they have matching rights. It's a big decision because it's a big number, and either way, if you're Warner Brothers Discovery, it's sort of a difficult position you're put in. Spending upwards of potentially as much as $2.5 billion a year on the NBA for a company that is trying to generate as much free cash flow as it can, that's an issue. At the same time, to your point, if it goes away, what is TNT?
It's short-term.
For example, they'll say, listen, when it comes to sports, we still have hockey, we still got half a major
Short-term and
baseball, we still have March
problem.
Madness, we still have NASCAR, but that said, the NBA, and certainly as a result.
Let me pause.
I've been watching every night. I'm sure a lot of
let
other
me
people
pause on
have.
something. I want to ask you. You know how the Manning brothers became a company?
Yes.
Would Barkley be able to become a company if this contract goes?
I don't know.
Does he have a change of control?
There's a lot of chatter about his ability to get a good deal.
I think he's one of the great figures in TV, and it may matter.
He's very compelling to watch.
He really is.
It's a good show. I know. We'll see if, in fact, NBC secures it. Again, it wouldn't start until the current contract goes through next season, and then it concludes.
But they
It's
very
about
rarely
11-year
come up.
deals. We reported on this last week in some, fairly extensively. Not much to add at this point, other than to your point. It just points overall to how sports is so important to getting anybody to watch some of these general entertainment networks, and without it, what are you doing?
Well, look, year over year. I mean, take a look at it. I'm still staggered by the Monday Night Football numbers. How just you had the greatest. I mean, this is something that people do watch. Now, the question is $2 billion? You pay $2.5 billion. I mean, there's a level where maybe it's not worth paying.
It may not be. They did also announce with a press release from Disney that they are going to be bundling Max along with Disney Plus and Hulu.
There you go.
Which is something I had asked Iger about during our last interview in early April, because I'd gotten a sense that was a possibility. He didn't.
Is this the lead up to it's called a SOT?
I don't know. Do we have it? Do we want to play it? It was a back and forth. I was sort of pushing him on, is there a possibility of bundling
retail
these kind of
traders.
entertainment services? This is what he had to say.
Meditate for a second. What time we got? We got a few minutes. I'm gonna meditate. Relax. Booyah. Okay, we've got the SPY at a triple top. President Trump pledged to oil CEOs to scrap President Biden's EV policies. Ask 1.1 billion for re-election policies. That's just probably somebody that doesn't know what the frick they're talking about. What are they doing putting this in here? Elections, they're too political. Jobless claims 1.85, a little less, not much. Still low. I mean, not really, 100. What? Jobless claims 1.78 million. Initial jobless claims are 231K versus, so they've definitely gone up. That's not good. So we hit the 1, 2, 3 triple top on the 24-hour period at 517.66. And we got a megaphone pattern. We'll clean this up. Well, let's look at the big picture first. Airbnb, what's up with Airbnb?
May I wake up the musique d'Orsay, or can I drift off in the up house? Because I think we're burying the lead if we don't talk about icons.
Yeah, I mean, absolutely. Icons are the coolest experiences on Earth, and you can stay in the Up House, which we've recreated, the Prince Purple Rain House. And what this really represents, I think, is the beginning of the
I used to love 132.
Because we've been known for stays, But now Airbnb is starting to move into experiences. And we're starting with
experiences.
4,000
my
people
God,
can do these this
please.
year, whether you want to stay at the Ferrari Museum or the X Mansion, which is completely recreated like you're stepping into a comic. But eventually what we want to do is be able to bring the magic of icons to millions of people around the world. I think it's just a sense of like where we're going as a company.
Bad idea. I had better ideas for these guys, like getting involved in real estate and building apartment complexes. But if this is what they're doing, they're just playing games.
We do get a sense that travel has slowed. And I don't know whether to lump you into that, particularly American travel, or just say, listen, you've got to see through this little valley because we've got a brand new Airbnb that's very exciting.
Yeah, I mean, if you think about it, Jim, as you and I used to talk before we went public, we were basically breaking even.
That was a big mistake.
Public, and the big question was, would we ever be a profitable company?
We used to
talk.
talk.
3 years, we made so much progress focusing on this, and now we have 41% free cash flow margin. So today, we are now at the beginning of this next step. And the question is, what's next for Airbnb?
What's going on here?
And the answer is there's going to be a lot more coming over the next couple of years. New products, new services, and I'm very confident that we can re-accelerate growth.
Well, I want to talk about icons again because one of the things that I now find to be, let's say, incredibly important is before I start my travel trip, I have to go to icons to see if there is something that I might want to do. But I also worry if I go into the up house, whether that costs a fortune or whether these are just all kind of...
And to pull out the crystal ball and say this is exactly what's going to... Tricky. We still believe that we're going to have a soft landing. We believe that we're going to see some slowness and whatnot, but you know, it's going to take some time to kind of digest the numbers.
Airbnb is.
What does that look like?
So
for
here's a
soft land?
Airbnb right now had pulled back, and we bounced off this here support level on the daily 4 different times. We got a spinning top, which is, you know, not an inverted hammer. There's an inverted hammer. There's morning star, or a hammer, and a hammer. So we got to find out what we're going to produce after this. They lowered the price target. Still maintains a buy. Hold rating maintained. AMD popped. Amazon, all of them did, all the Apple and Meta. Good morning, YouTube. Good morning, retail traders. We'll see what first pattern. I want the beginners to look for patterns. Right when we open up here on SPX. And spike and pull back and hit the 200. And I'm going to put an alert right off this here peak. Right after that breakout. And the 200 right at open. If we do not hold the 63, you can count on it hitting the 200. On the SPY on the 1 minute. Now I'm going to start using the 2 once we get a little bit further in the day. The 2 minute. I'll just leave that on there for now. Hike. Good morning, Mike. Good morning, Yoko. You met someone who only trades shares 100 to 1,000 at a time in the PM. Probably works in the day. Yeah, we missed out on the hail. I've seen hail golf ball size here, and quarter size. No, quarter size. Round, quarter round, not golf ball, but quarter. Damn, that's a good looking chart. That reminds me of me, Mikey. CLSK popping a little bit. I got the 200 as a pivot point. SMA on the hour. And that's right around 1768. Got a head and shoulders, so it can do double top easily at 1820 free. MSFT. No, let's see, NVIDIA. Some guy was on CNBC this morning. Earnings just released and they're good. Remains to be seen with the drop in price. Guy was, you know how CNBC is. So this morning, guy was talking about the PE ratio, or he said it was 31 times. And the people on CNBC, no, it's not, it's 37. We had a fact checker come in on the video. It's 37. I don't believe any word that comes out of CNBC's mouth when it comes to numbers. We have a fallen wedge on the video. Not much of one, but it is. And we broke out of that wedge. And if you went off the wicks, we're at the top of that wedge, right off the 50, so it's got to break the 50 today on the hour. Dadgummit, I didn't want to see this. I wanted to trade this first thing in the morning. Now it's up here. Well, well, well. Well, AMC's taking a hit. Do. We've got 2 more minutes left. AMD hit the 200 at open. Amazon moving. We've got Hood up $1.20. China, YINN. Carvana's popping a little bit. AMC pulling back. And the video's got a double top coming up with a, so we see if we pull back from button, do not break this. Right there at 9:10:53. Yep, right at it. And there's your 1, 2, 3 dip. Let's see what my average is here. GME, put that on your watch list here. SMCI, we're at support right now, a 1, 2, 3, 4 on SMCI. Meta down, where's Meta? Where'd you go? Meta down a couple bucks. It's popping around big time. So good. Fill working orders. Trade price at 307. Mira. We still got to break that 2030 something. Reddit had that good breakout. Lyft yesterday, and Disney. Man, Disney would have been a catch. We got lower lows. We got a falling wedge on AMD. We got a triple bottom on Meta. Apple needs to break 183.29 on the fib setup that I have. Bounced off the 200 at open here. NVIDIA. Where's my platform? Damn, I don't even have my platform up. I'm not in no hurry today for some reason. SPX can come back and hit the 200 real easy if we don't hold this support right now. So look at your puts. I think we can come back. Let me check this out. Same day. The 5210 or the 5200 times 3. Now I had 2. And the put, that's the call. So we didn't hold. Yep, we've held so far. And the put, I like that 5175, but the 5170. That's on the 2-minute time frame. Okay, the 1 minute. So I have to adjust my moving averages if I change time frames. The 200 is going to act a little bit different. See how much farther we got to go down compared to the 1 minute to the 2 minute? And it did balance off that right there. Okay, put. Take your profit. We're coming to the 200. The 51.70. We're at 420. Profit, profit, profit. Now look at the calls. We got 3 black crows. So I'm out of the put. And I'm looking at the call. What did I say? 5,200. Get 5. Let's take it. Now, like I said, I'm new to trading the 200, so we do have 3 black crows. Yeah, wait till this crow's done on the 2 minute. Then we go to the next candle. I got a 51.76.14 support. Now, there's my hammer. Double bottom off the wick. I'm going to take a risk here. 2.20. That's a 5,200 strike. SPX. Three black crows. Long leg hammer, let's go. Come on and do it till you're satisfied, whatever it is. Do it to ease your mind till you're satisfied. So if you're new beginner as a trader and you're up $50 a contract, make a business decision. The resistance right now is going to be the 200 SMA on the 2 minute. So I'm going to look at the 1 minute because I got to get familiar with this 2 minute. We did hit a lower low. Yeah, I think we're good. We'll take it up to the resistance level of 81.8569. We got a 1, 2, 3, and that'll take you to the 200. We got a hammer. Now this is on the 1 minute, and we got 3 black crows, so it can easily come up and hit each one of these crows as a resistance level. And here's my it's ready. We can probably bust a move here. I got 51.91 on the ready, set, go with a pivot point of 51.87, 86.93. So that's still on my 200 SMA at 51.85. We got 2 hammers. We got a, what is that? It's a spinning top, tweezer bottom. That's what that is, with a higher high. Zippity doo dah, zippity day. AMD is pulling back. Disney will get pumped with the fat cats. This is their baby. They're the big guys are watching this one right now, probably loading up, starting position for swing. We hit my support level, which was 104.76 this morning. I'm still in the SPX. We got to get to that 200 SMA. There we go, baby. Now, if you're new to trading, this is a resistance level. We can break it. We got a 1, 2, 3 confirmation with the 200 SMA. And I think I think the market feels a little frothy. We get one big shot up here, I'm out of the trade. AMC had a little knife this morning. We got a diamond-shaped pattern. Symmetrical ascending triangle. I mean, SPX can drop more. We could hit down here at 51 something. So I'm going to get out of this trade real soon. That's on the two minute. I mean, okay, here we go. Now, take profit. I'm not saying take, I'm just saying be your own boss. Be your own boss. Profit. I like the cues for the sneaky snake strategy, yes. I'll look at it here in a second. Now, I got to get on this other moving average. I've got the 51. We just hit the 51 and the 50. Oh, hell yeah. Oh, that's Disney. Damn it. Disney, like I said, was getting ready to break out. And we hit the 63, so it's definitely an exit idea. This is a 63 EMA. If we break it, we're off to the moon. We break it, we're off to the moon. I don't care about this resistance level anymore. Here we go. $3. 310. Now you're up $100 a contract. Make a business decision. I'm up $500. I'm getting out of this sucker. You can go to the beach. I'll see y'all later. Zippity-doo-dah. That's how you do it. I wrote a song about a girl once that I was dating. She was kind of a dingbat. So I wrote this song, and I didn't tell her what it was about. This is how you do it. You get out of the trade at the 63. I make life easy. $90 contract. Spite VWAP. Dingbats need love too. She wasn't a dingbat by the time I got done with her. Damn, I got out of it. Well, no, I'm okay. I'm okay. It's not moving for some reason. Wow, I got out of it. Huh. Why did it do that? It's hard resistance. That's pretty good trade for the first thing this morning. And look at here. We're breaking out of the snake on AMD. NVIDIA, snake breakout. Now we got to wait for the pullback. I'm going to show you how to trade this. We got the 9 getting ready to cross. Now this is the 1 minute, so I'm going to look at the 2 minute. I just got to. I got a lesson today. I'm teaching myself. I want to look for patterns on the 1 minute and see how they rely on the how they look at the 2 minute. So I'm going to draw the trend lines on the 2 minute, and I want to compare it to the 1 minute. You stupid. It moves over right when I click it. So we're at resistance. We come up to the 9. Now this is NVIDIA. I'm going to go to the 1 minute. I like the 1 minute. I'm sorry. It tells me, see, it's got 3 green candles outside of it. The 2 minute just hits the 9. So if we break the 9, I'd take the trade. NVIDIA. God, darn, these things went to 340. Randy. Shit. Jimmy should have known. Got a hammer on the 1 minute. 3, oh yeah, see, I love this SPX on the 1 minute. With 3 black crows with a hammer on the 2 minute. We got like 2 crows, but I'm gonna count that as a crow with a spinning top, with a tweezer bottom. With the 1, 2, 3 off the wick, with another doji, with another spinning top, another doji, and then resistance would be right here is where I'd get out on the 2 minute. Fuck yeah! I mean, excuse me. Hell yeah! Heck yeah! So that would be an exit idea on the 2 minute. And on the 1 minute, I'd still be looking for a Head and Shoulders. And that would be my exit idea on the 1 minute. A little bit higher. So if we'd break this resistance, we'd shoot up there. And I couldn't see it on 2 minute. That'd been the top of the wick. See, I would have been out of the trade already. On the 1 minute, I would not have been. I'll be getting out of the trade on the 1 minute here in a second. Well, Josh, what'd you think about that? Jay, what'd you think about that? DA, did you like that? Are you live? Can you hear me, DA, on YouTube? I have a trading strategy that I developed for beginner traders. It's real simple and clean. And all you got to do is count to 3, and you can trade with me. If you count to 4, you might make a little bit more. So we have 1, 2, 3. It breaks out, and say you didn't take the breakout. And I get a knock on the door. Jim, we're breaking out of the snake, and we broke out of the 1, 2, 3. Wait for the pullback, my friend. Wait for that pullback. We got an inverted hammer, which is bearish. This thing right here is an inverted hammer. So you're going to come back and retest this trend line, and that's the secret. You don't have to rush. Just wait for that pullback after you break out. And if it respects that old resistance, you get out at the double top and you go to the beach. Like with me. This went to 420. So I left $500 on the table just by showing you guys how to trade. Because I want you to get in and out and take profit, and then once you start making money, you understand. It's psychological. 10-4. And right now I'm psychologically crying big. 150 I left on the table, a contract, and $750. But money doesn't, I don't care about money. I don't even know what money is. I use it to wipe my ass in the morning.
You're pushing your luck, little man.
Woo! I'm so happy. I just like to get out green and call it a day. That's when I started this strategy. I made a goal that I can get out and be done within the first hour of the day. Okay, let me look at my AMC. I'm in that sucker. Oh, it's getting better. God darn it. SPX. You're killing me. 550, baby, go. What I used to call this, I'd come in here every week, and I used to call, I teach myself something new every week. When I first started on YouTube, I did weekly long lessons. I'm trying to think what I called them. Let me see if I have it in the room here. Case study. The last case study I did in here was the path to profit, and I got that from Yoko. The last one I did was a gravestone candlestick, so you can go back and look at them case studies. But every week, to become a better trader, you got to have a case study. Like, I'm going to study moving averages. I'm going to study the VWAP. I'm going to study how to find chart patterns. I'm going to study how to create a good watch list. I'm going to study Pia Sedora in her old films. I'm going to study Raquel Welch. But have a case study to improve be dedicated to improve your skills. I'm going to study candlestick patterns. I'm going to study dojis. I'm going to study moving averages that work for me or you. I'm going to study my stomach abs. Oh, Yoko, don't make me cry. Good job, Randy. So the 2-minute time frame produced 3 black crows with a big long sledgehammer. Then we had a doji, long leg doji, spinning top, and another long leg doji. The 1 minute, we had 3 black crows with a hammer with a 9 over the 21 crossover once we broke out of the 1, 2, 3. I got in early. I recognized the bottom, see? 3 black crows. I mean, that's a pretty good trade. So we have 3 black crows. I'm going to type this in. I'd like to, after I get a winning trade, I want to go back and look at it and see if I missed anything or if I recognized what I recognized, why it was, feasible. So we had 3 black crows with a hammer and the 9 crossing the 21 SMA. So let's go to the EMA. Oh, I gotta look at my AMIs. I got a trade I'm on in. I keep forgetting. This is another mistake. I get to yakking and I'm even on AMC. I'm about to dip. I wish I'd have watched it. Okay. I just got 300 shares left here. And I'm back to even on it. And as we go up, I'll keep adding to the inventory if it decides to break out. Now this is definitely a long shot. Heck, I'm up. I'm up! So we'll chart out. I'm going to chart this out for you real fast. So we got a 1, 2, 3. I'll make it real simple for you and me. 1. We got a 1. This is a risky trade, so I don't want nobody really, unless you want to know how to play a pump. They're $4.5 billion in debt. So that's not a trade I'd recommend. I gotta keep an eye on it, because if I get up here to 340, I might just sell the stuff. And to you guys that are new to trading on YouTube, I'm using the bodies when I'm drawing these trend lines. I don't care about the wick. The wick is an indicator that tells you which direction it might go. And right here we had the bigger wick up in the upper part of this here big long leg doji, so it knifed. I would know that, and I'd know to get out of that trade if I saw that wick. And I got 1, 2, 3, and I'm going to exit that trade right there. That should give me about $90. I've been trading this back and forth. I'm up probably about $400 or $500 since I started trading it. I don't throw a lot of money in something like this. I gotta wait for that 3, and I've got my sell ticket right before I get to the 3. In fact, I'm gonna lower it just a little bit. Oh, I'm gonna lower it to right here, to that double top. See us right in here? We landed on the 51. Now I'm gonna look at the SPX. We're not. Dadgum ya. I should have jumped it. Yeah, that would have been a good trade right there. To the 9. It was off the 63. I really like the 63, Randy, over the 51. So I want you to change it or add it on and do your homework. The 63 EMA. If you take the 51. App, oh man, look at app. Fudge. There's one called app and apps. Oh man. 50% retracement. Anytime you get a big breakout like this, you got to look for that pivot point. That's 50%. And we can drop down to 38 to this previous high. So that's where I'm going to set my alert off that wick. See, that's how I use the wick. That'll get me in a trade before it hits it. That's the 38% pullback on app. Dadgummit, she dropped on me again. You got a lot of pumpers with a lot of money taking this trade right now. And then when they got big money in it, like, you know, I know probably somebody's got at least $1 million in this trade. And when you're up 10 cents on $1 million worth, that's a lot of money. NVIDIA's coming back and doing a double bottom out of the snake. Watch NVIDIA right here. NVIDIA. NVIDIA. Watching NVIDIA. NVIDIA, May, what is today? 17. Let me try the May 10th. I think we can get away with it this week. The 900 strike, or the 910. The 910 at 350, NVIDIA. And I'm using the 10th, May 10th. Strike. What the fuck was that again? 910. $9.10 at $3.50. NVIDIA. We got 3 black crows with a tweezer bottom. NVIDIA. Magnificent. Give me a good grade. Jimmy crack corn and I don't care. Jimmy crack corn and I don't care. Break that 9. Has to break the 9 EMA on what time frame? 2 minute. Damn it, I'm in the 2 minute. I should have studied the 1. We got a 1, 2, 3 bits. My target, the 1, 2, 3. $892.87. We got a 1, 2, 3 on the bottom here, so we're going to have a wet. I'll put the this one here in red, and then I'll put the green for the 1, 2, 3 on the bottom. We got to break the 1, 2, 3 on the bottom. We got an inverse head and shoulders. Inverse head and shoulders. If the inverse head and shoulders. We're getting ready to squeeze. We're going to find out here shortly. Or a 1, 2, 3. And that'll be right down here at my support level. I want it to break. I really do. Now, I'm going to tell you something. Squawk on the Street are questioning here in the last week or two if we're overbought on NVIDIA. Yes, we're overbought. I mean, it's a simple answer. This is the left shoulder. This is the head of a tweezer bottom. Then you got the right shoulder. So we're going to, if we break the 9, we're going to shoot up and hit 1, 2, 3. We got to have a one body candle above this. Okay, I got to watch this. 340. I'm going to add if I have to. We're getting ready to squeeze, that's for sure. Oh, what am I doing looking at that? But I was wondering, it ain't moving. And we got 409, 4 and the 200 SMA long. Break it. Break it. We got SMCI knife. Anybody on YouTube taking a video? You understand what I'm saying here? Tell me if you don't, and I'll explain it to you. The 9 has to cross over the 21. Oh, this is the S. And we hit the 50. So that's a hard resistance. And they got the 51. So I'm going to change charts here. I'm trying to get accustomed to this one. These are the EMA. This is the other one was an SMA. This is an EMA, and that's the 21. So if the 9 crosses the 21, you're more or less bullish to the 200. You got the 50 SMA here on the 1 minute, and you got 3 white soldiers breaking out of a 1, 2, 3, which makes it very bullish. So if we break the 50, I'm pretty much going to say we're going to break the EMA. The SMA is a slower stochastic, so it's harder to break. The 63 is a faster stochastic because it's EMA. SPX, baby. Randy. Man, that's nice to nail that bottom. Did you get it? Good job. Do you understand what I'm doing here? SPX. I can about shit my poo-poo. SPX. Why? What have I ever done to you? I come to work every day. I pay my taxes. I pay them. I pay them. We're in the money, and it's at 7:20. Break it. Break the 51. We broke the 50. The 51 and the 63. I'm gonna definitely put up some kind of thing where I can get a little bit of extra cash from y'all, YouTubers. Oh, I'm looking at this again. PAWN. Now, listen to this. I know it sounds creepy, but I just found it. We were down $4.01. So that used to be my old employee number. And I always take trades when I see 401. We got a 123 here on pawn, but I ain't gonna trade it. Well, we could. It could be a good one. They pulled back on earnings, so they must not have been that good, but we held up to 50 on the weekly. AMC at the VWAP. The 9 crossed over the 21 EMA. And we just got to break the 63. And we're off to the 200 at 898.61. I'm about ready to go get me a bologna sandwich. What you got, Mike? $7? Ooh. Ooh. 10? You gotta be kidding me. I met Sam Walton. Sam Walton comes up to me and he says, "Son, could you tell me where the shampoo is?" And I was doing inventory for Walmart. He was testing me. He said, "Sir, I'll walk you right over there." I didn't know who he was. So I put my calculator down and I walked him over there. And he went to my supervisor and said, "I want that guy to get a raise." I said, "I tested one of your employees and a perfect gentleman." Bullshit. Break it. We're squeezing. We stay above the 9. We're still bullish in the trade. If we break below the 9 with a body candle, I'm going to get out of it. But I don't know if I want to get out of it or not. Might just add on. We got a two-headed snake here. Okay. What the hell, man? I'm getting all these alerts. Yeah. Break it. Old MacDonald had a farm. Me-I, me-I, oh. Let's break it, Mike. What grade do you get? Golly. I think you get more than an A. You get a free trip to Mexico. Jeez. I've created a beast. I've created a beast. I got one for you. I'm going to create you a date. You get a date. You like that? Oh shit, here it comes down. Don't do it. Man, very impressed. Very impressed. You know, I left $3,500 on the table. I think if one took time out and learned these candlesticks, they can become a good trader. I'm gonna go make my sandwich. I'm gonna hold on to this trade. The video at the point of control. Break it. So here's the QQQ. Someone asked me about the QQQ on YouTube. Look at that snake. Breakout, pull back, double top out of the trade. Knife, to my support line. I had a support here for some reason. Let's pull it up and see what it is. Well, I've got to really pay attention to this. Ooh. I've hit the bag so many times, so many times, my shoulders are about gone. Okay, I'm gonna have to put a little juice on this baby. Okay, YouTube, you ready for the trick?
I need it now.
It's my money and I need it now!
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 It's your money. Use it when you need it.
Break it. Damn it, I put the wrong one in there. Man, one of them. I'm up 40 bucks, and you're all up the grand or something. That stupid idiot. I got back in it and stuff, but I'm telling you, if I'd have held them 220s, I'd be cooking on Easy Street. Do I get a grade for catching the bottom, at least? Magnificent? Or did you catch the bottom too? Well. Let's say you did. I'm gonna go make me a bologna sandwich. Let's see if my sweetheart's on television. Oh man, I tell you what, that would have been a nice treat. That would have been a very nice treat if I'd have held them suckers at 5,000 frickin' bucks. Magnificent, are you going to donate to my free vacation this year? I think the room should pitch in. Yeah, Jim, I'm only in here because it's free. I'm a tightwad. The virtual one, you keep saying that. I do that every night. I have had two people outside of the room ask. One wants to take me to Cancun. The other one wants to take me to Mexico.
Whoa, transvestite, back off.
But I don't know. I don't offer sexual favors. No soup for you. That was a beautiful trade, Jim.
No soup for you.
Well, we're going to go to a 1-2 free. NVIDIA. Give me some Mooney. We're at 4 1/4. We got the 1, 2, 3, baby. I did it again. One, two, three, baby. 200 SMA. Easy as 1, 2, 3. $470. I'm up $120 a contract. Should I hold, Randy? Mike, I need your help. You just got out yesterday's at 475. I'm gonna see if I can get the 200 here. As long as we hold the 9, I'm gonna stay. I'm gonna do what I should have done with the SPX, and I said it, and I didn't do it. And that's to stay above the 9. As long as I'm above the 9, I'm staying in the trade. Because I want that 200. I want to get this thing to 550. Now, you rookies, again, profit is the most important thing right now until you get established. I've left a lot of money on the table, so I'm not one to brag. I still play like a rookie. But this time I'm taking it to the 200. Nothing's going to stop me. Except Raquel Welch. Break it. 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 Choo. 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 Just be able to whistle with my hands. Yeah, Sleepy Joe is a commie. I'll never understand why we give money to terrorists. The Democratic Party. And then the ones that vote for him are out protesting because we're in wars. Like you dumbasses. Don't you know the Democratic Party starts wars? Go back and look at history. we started was a civil war to free the slaves. Keep a hold of that 9. If it don't hold this 9, I'm out. We pulled back to the 1, 2, 3 triple top. So this is something I want to teach you right now. This is called a triple top. That's why I call it the 1, 2, 3 strategy. It either, and the triple bottom is always a bullish signal. So you get up to a triple top, that's a little bit of resistance. So that's like an exit idea when you're heading up that way. If you break it and it pulls back to that triple top, what was resistance now becomes support. An old resistance, once broke, will now become support. Double top, triple top, any kind of flag. Once it breaks the flag, that last resistance will become support. Like this could be an ascending triangle with higher, we got lower lows. So, that was my last resort, was to get into the sweet spot at 3. And once we broke the 51, which was the 63, once we broke that 63, we respected it. See how it came back and broke and then landed back on the 63? So that all that time it was respecting that on the 1 minute. Now on the 2 minute, the 63 is much higher. So Jimmy might have got out of that trade a little bit too soon that time on the 63 if it didn't break. So the triple 1, 2, 3, I might be using this 2 minute more often because the 1, 2, 3 and the 63 collided. But then what would I have thought to myself? Now I got 2 reasons to get out of the trade because we hit a resistance of the 63 and the triple top. Okay, I'm gonna go make, I gotta eat. I've been up since 1 and all I've had is a small bowl of oatmeal and a piece, I think I had toast.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. I'm Nicole Petalidis, live at the New York Stock Exchange. Glad you're with us. It's time for the big 3. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to see you both. We're getting closer. I was just looking at the S&P to see the high, which was 52.64. Yep. Okay, we're at 52.04. But, hey, that's 5,200. That was a sort of an area of resistance that everybody was watching. Tell me some of your thoughts.
Oh, my gosh.
Today.
Well, it's very simple. I'm not trying to be stupid. I'm
not trying to be stupid.
Smart guy either and pick the top.
What the hell's wrong with you?
Strong. And I'm a trend trader, and I noticed the last guy was a little bit timid, but the trends are extremely strong. You've got the 10-year note yield at 1 month lows. You've got the VIX at multi-month lows and approaching, the 13 level.
You are an idiot.
5% in the last couple weeks. And if you look at the S&P, look at the price action. We had a dip and now a rip. And now we're above the halfway point of that drop from the top. And every time in market history that we've got above that halfway point,
oh
we've
God, I
been
can't stand
all-time
you.
highs. So a full V recovery targets about 5,700, which was nearly 10% higher here in the S&P. So the trends are strong until proven otherwise.
Trend is your friend.
Don't listen to this guy. One thing that I don't listen to people when they get very enthusiastic at high resistance levels. The guy looks like he rides a bike. He's got a face mask. He wears sunglasses almost all the time. He needs to brush his teeth. I can't listen to it. I don't like that high-pitched voice. He's not...
As well, between 450 and 550 for about a year. And so if it gets above the $5 midpoint, we're going to see a move. We're at 480 in corn itself. Now, the ETF that you can trade, anybody can trade in their account, in their stock accounts, traded about 2050. It's been between 19 and 23 here for the last year of trade, last 9 months anyways. So a break out of the range targets 27. Now, we were at 27 just last July. So there's also a gap up above at 23.5. I've seen my bullish divergence with that February low. It did not make new highs and implied volatility. That's a sign of a sentiment shift. I'm also seeing a lot of leverage buying. The way to play is I'm buying a 19 call. Again, 19 has been that bottom base. That's trading for about 2. An August 19 call has 3 months of time. The expiration break even is about 50 cents higher. It has got time for development, and a lot can happen, obviously, during the course of the summer that's going to affect any plant that grows. We plant the seed, nature grows the seed, we eat the seed.
All right, and I like that sort of...
I don't like it. So he definitely got a bottom here on corn. He's got the right shoulder leans down from the left, which means we could see another pullback to the right shoulder. I'd take it to the 200 if I was to trade it, and that'd be it. And then if it broke the 200, right now we got a death wish, death cross maybe. If the 50 crawls over the 200, that's a death cross, and that could drop down. So I would not take his pump. I'd watch it. I'd put it on watch. We got a weekly bear candle right here. The trend is your friend, then you need to be going down with it, you dummy. The daily, your target would be the 200. 200 there, 200 here. So if you plant a seed, you need to water it too, you dummy.
Don't give me attitude, sir.
He said, I don't want to act like I'm stupid. So you're sure acting like it. Left shoulder, right shoulder. So it's got I mean, the setup's there. We just missed it. So I would set an alert right here off, what is that, the 51. And we'll see where it sets up on the 63. 2020 for corn. Hot corn, what was that? There used to be a song I used to play. Hot corn, cold corn, bring on my demijohn. Don't you remember that song, Mike? Corn. There it is. See if I got one of my friends playing it. We've got String Bean. Mike, get ready. The Osborne Brothers. If you don't want to listen to it, come back in 3 minutes.
Is also the high from last August, and this option would gain 100% if we got to the 90 level.
Come on, boys, make this small.
Okay, I want to hear what Rick Ducat has to say about the Wayfair chart here, the technical piece, Rick.
Definitely a suck.
Yes, sir. Cold corn, you bring on that Demi John. You know what that's about? Corn whiskey, baby. Somebody said Biden would sing. That's, I don't know if I like that. That's an insult to my integrity. You know what? I'm going to wait. I'm going to watch corn. I'm not going to trade it. But I do like to set up. We just missed the trade. It's already too close to the 200 to take it. Come on now. My option's at 420. I'm up $70 still. I'm going to retest double bottom. We're starting on the SPY. Let's see what the SPY 3 WAP. So let's settle there at 63. We've got 1, 2, 3, 4 right here. 1, 2, 3, 4 off of an inverse head and shoulders. So let's put that. I'm going to do something different here. See, that's a rising inverse head and shoulders, and so that's 6. This is the old resistance of a 1, 2, 3, 4. And if I extend this out to the left, Oh, beautiful. Look at that. See that? See how it lines up? That's pretty solid support right there on the SPY. Yeah. I'm just happy with the trade. Can't complain. 220 to 1100 would have been nice. $4,500. I'll be back.
We are seeing the stock under some pressure after its quarterly report. Angelo Zeno is standing by. I want to hear what he has to say on ARM and whatever else is on his mind. Trading 360. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your clients don't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Time for our spotlight. Let's take a look at ARM Holdings. Obviously, there was so much excitement when this listed, and we've been watching it closely. Angelo Zeno is with us, senior equity analyst at CFRA. And while the quarter seemed good enough, they're saying that the outlook lacked a wow factor. And as a result, the stock's down 1.8%. What say you, Angelo?
Yeah, no, thanks for having me, Nicole. So we kind of look at the quarter here. I think you summed it up pretty nicely. There was a nice beat as far as the actual quarter was concerned. When you kind of look at the guidance, I think actually the guidance for the June quarter looked pretty good. It was, modestly above what our expectations were. But I think kind of what really kind of hurt the stock or kept it from, really having a nice move up was they gave fiscal 25 guidance, so for the full year ahead. That seemed a little bit more conservative in nature. The company typically guides conservatively. That's what we think is kind of baked in these numbers at this point in time. But that said, it did force us to kind of temper our expectations. We did bring our numbers in, ever so slightly, and it also caused us to kind of, reduce our target price as well. But when we kind of think about the story for on here, this is a story where the look absolutely fantastic. You've got the royalty business, which is more mobility based. Higher margin,
Okay.
and then their licensing business.
I walk away and I come back another day. Well, we have 3 white soldiers. What's that mean? 3 white soldiers. What's it mean? 3 white soldiers. What's it mean? Huh? Tell me. What does 3 white soldiers mean? It means I'm going to whip ass. So I just sold 5 contracts at $5, and I probably will regret it. Three white soldiers. 3 white soldiers. Two white soldiers with an inverted hammer. What's that mean? I'm the happiest guy in the world. I'm the happiest guy in the world. Snake breakout, pull back, a 1, 2, 3. Breakout with 3 white soldiers. Breakout with 3 white soldiers. Breakout with 3 white soldiers. Say what? Exit idea. Jimmy hit his target. And what do you think about that, magnificent? And we entered here. I mean, who can't get to bottom as good as I can? Just getting out at the top. Uh-oh. Got a phone call from the man. Always clean. This is Jim. May I help you? Yeah? Brandon? Did you just see that trade I took on the video? Well, can I ask you a question? Was that you shitting your pants on the lawn the other day at the White House? It's all over the internet. You gonna hang up on me? What? Don't fuck with me, or I'm gonna come after your band of traitors? Really? Don't mess with me, Jimmy. I'll be coming after you band of traitors. Do I like the spy puts here?
We'll take a look at that. We'll have the numbers, an example trade as well for you here. Trading 360, Schwab Network. We'll be right back.
I'm about ready to partake in my meal. And Lord, I want to thank you for surrounding me with great people. I get goosebumps every time I get into this room and on YouTube, and I'm able to show good green trade. It wasn't that easy when I started. I was never the sharpest tool in the shed. But with your help and Biden's help, I'm sorry he started all them wars. But again, I want to thank you. Amen.
This morning. Diane King Hall is with us, senior markets correspondent here on Schwab Network, taking a look at Warner Brothers Discovery in focus. The streaming partnership is pretty much flat, but there's always a big story behind it. Let's hear the story.
Well, that, of course, comes from that news about the bundling, because the stock was under more pressure earlier in the session, and obviously also you can see the general trend in the market has been this push higher today. We'll see if it continues to move that way. But let's break down the numbers in terms of their latest quarterly report. So Warner Brothers Discovery posted a loss of 40 cents a share. The expectation was
I'm having a bologna sandwich.
So that was actually worse than expected. So
I like eating bologna every once in a while.
Wasn't fully caffeinated yet. Revenue was $9.96 billion. The expectation for revenue was $10.2 billion. So that was also lighter than expected. Now it did add DTC streaming subscribers. So it added those direct-to-consumer subscribers. It added 2 million. Total now 99.6 million. Streaming ad sales increased majorly. So that was actually a strong.
The other day I had tuna and the hamburger yesterday.
70%. That total 175 million for its latest quarter. So that was a huge jump, and certainly pushing more into that. But really what you're seeing play out is this tie-up between Warner Brothers Discovery and Disney bundling their streaming services set to come this summer. So you have Max, Hulu, Disney, all on the same platform. Oh, and by the way, this very much reminds me of cable. But I wouldn't be surprised to see more of that, especially with all the consolidation challenges that we're seeing in the streaming landscape. I mean, look at what's happened with Paramount. So again, the stock right now pretty much around the flat line at the moment. So it's certainly pushed back from where it started the session. Actually, it's turned positive now, up a
There
percent.
you go. So that's good news overall. Look, they're continuing conversations too with the NBA. I mean, that's big when you see about sports. They have gaming.
Absolutely.
And Netflix has gaming. It's amazing how this is all evolving. But I will say, and thank you, Diane, for all of that. I mean, I wanted my MTV, and I will not give up my cable. Just so everybody knows, I will not give up my cable. All right, Diane Cable. Thank you guys. Time now for the disruptors. Senior markets correspondent George Sillis is with us, taking a look at HubSpot. So we see this down just about $1 or so. What's the story here?
Yeah. Well, I think for HubSpot, Nicole, you have to think about the core solutions and products that they actually sell. They compete with Salesforce in the marketing sales software side of the CRM equation. They typically focus on small and medium-sized businesses. But the earnings that they posted were actually quite good, and the stock has been quite volatile around some chatter around potentially Google making a bid for the company. And this has been sort of in the back burner, on the back burner for quite some time for the name. But if you just consider the financial profile and the earnings, they beat the estimates quite handily. They came in at $1.68 in terms of earnings, 40% higher than last year versus the $1.20. For the same quarter last year, and their sales actually came in 23% higher, beating the estimate of $598 million at $616 million. But overall, I think if you look at the performance, post earnings results, and even the fact that they raised their guidance for 2024 from around $6.97, they moved it higher to $7.34. They're still trading around 79 times 2024's earnings. So there's a lot of chatter going on potentially because of Google. Maybe making a bid for the company, because if you look at what's going on in the sales and marketing and media space, there's a lot of competition, including Microsoft and Adobe. And again, Google is well positioned to integrate CRM platforms that HubSpot provides the marketplace alongside its cloud and in Gmail technologies. So, but I think the valuation here is still a little bit rich, and maybe this is why you're seeing some softness in the name, irrespective of the beat and even increasing on the EPS guidance. And a couple of the analysts, for instance, UBS maintains a neutral rating on the stock, and even Barclays maintains an equal rating on the stock with a $575 price target.
All right, so with that, I know you're talking about the price targets right now. It's at $589.90.
Yeah.
What about an example trade?
Okay, so if you look at the price action yesterday afternoon, post earnings, I think that's really indicative of the core fundamentals of the business. Like I said, everything looks good from a growth standpoint and even raising the guidance, but it's really rich, or a little bit rich on a valuation perspective. So today, or this morning, it started to move based on the Google, chatter of acquisitions, but I'm not going to trade based on acquisition speculation, because I've been there, done that. It doesn't necessarily work out in the long run. So with that said, I think we're going to see some balanced price action. In other words, I don't think there's going to be a lot of movement in either direction. So what I'm going to do is structure a put spread for June by selling the 570 put. This is below the current price, and then simultaneously buying the 560 put below that. So altogether, we're selling this for a credit of $3.50 a share, for $350 a contract. So all we need to do is have the price sit at or above 570 between now and expiration in 43 days. So that credit that we receive of $3.50 erodes to zero. So if you structure this trade, because it's bullish to neutral, you have to consider break even, which is at 566.50. And in case the stock falls below 560, that's your max loss position, where again, you're earning $3.50, but you have to consider the max loss, which is $6.50. That's the potential.
Okay, thank you for that. Good to see you. Nice look at HubSpot today, and an example trade as well from George Sillis, our disruptor every day. George is a disruptor as well. 360 round is next. We'll look at Airbnb having a tough time. In fact, it's one of the biggest losers on the S&P 500 today. Our panel is ready.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's tech.
Fuck.
Do you cover other names in this area that you have better than 2-star ratings? Because if people are traveling and people are spending, we got to figure out what the miss is here. So do you have other names that you do like more right now?
Well, let me say that, Booking and Airbnb are kind of, near our price targets at this point. Those happen to be the highest quality names and the ones with the strongest competitive moats. Ones that are attractive at this point from a valuation standpoint, I would point out Expedia. Our fair value there is $178 per share. But there is some hair on that. They've migrated over to a new platform, and there seems to be some impact to share not being as strong as they had hoped, revenue not being as strong as they hoped. But we think that's mostly a timing mechanism, and as you kind of look toward the end of this year into early next year, they're going to harvest the gains.
Are you jealous because you don't have any hair?
Investments that they've made the past few years. So that's a name that we think investors should maybe have out there.
All right, we'll continue that talk right then. Nick, some of your thoughts, please.
There's some hair on that. I have hair.
Yeah, we thought Airbnb's 1Q results were great. You know, the 2Q coming in a little bit below expectations. We actually chalk up the timing issues due to the leap year in 1Q and then the shift in Easter to 1Q. So we think when we actually look at first half numbers as opposed to 1Q versus 2Q, things are actually pretty in line with where we think investors were looking. We think the timing created some distortion in expectations. And, you know, the back half looks strong. You know, there's the Olympics in Paris, Euro Cup. Trends look pretty robust heading into the end of the year. That said, you know, we're still on the sidelines on Airbnb. We think the multiple's quite high. And if we were to kind of pull back more towards booking levels, it'd become more interesting to us.
Yeah, and look, mobile is another part that's growing. Nick, quick thought on that?
Yeah, look, anything that's online and consumer facing, if you can get app usage, that's really good. You can bypass kind of the Google tax or the doorway of the internet where you have to pay to get traffic. And you can really create some really strong brand loyalty and higher frequency the more folks use apps. So really encouraged by the app downloads in the quarter and the increasing utilization.
You know, at some point, good companies go from growth to value. And Dan, you're talking about names like Booking and Airbnb that have seen great growth and are at or near your price targets, and that's why you don't have higher ratings on them to go higher, but that they are both great companies. And we've seen the growth, to your point, I know you have that in your notes too, about the mobile growth.
Lyft.
Is it just they can't
Lyft
grow
has 1, 2, 3.
I mean, I don't understand. Why can't they grow more? Is it more marketing that needs to be done? Penetration is sort of fully loaded? What is that?
I think there still remains great growth opportunities. It's just that the valuation has gotten a little bit ahead of itself and factored a lot of that in. But, you know, to the point of kind of enduring growth, they of course have their core alternative accommodation business, but now they've started talking about over the next 3 years getting into a few new travel-related verticals. And the first of that is experiences, which they launched Icons a week or two ago as kind of their entry into this things to do. And that was really kind of just to get big awareness out there that they're going to be getting into experiences. We think they're going to kind of move down market from these icon high-end experiences to kind of host-related experiences, and that itself can add a few percentage points of growth in a few years for the company. And then we think that there's going to be other vertical opportunities for the company as well. So it's not that we're negative at all on the company's growth opportunities. It's just more of a valuation at this point, and it's a high-quality company. So if it were to pull back towards our 137 fair value, we wouldn't really need much of a discount to start to recommend this for investors.
I understand, and you both noted Olympics, Euro Cup coming in the back half, and maybe we should be looking at more as the first half and second half as opposed to quarters, because you know, this is the tough story part that we are seeing and facing. You know, also the regulatory environment got a little tougher. I mean, I can say just anecdotally out in Long Island, for example, a lot more about you better keep them for 14 days. There's no more overnight, 2 nights, weekends, things like that, Nick. Do you think that played a factor, too, in how they have to handle things?
Yeah, that will kind of always be an ongoing factor for Airbnb. We don't view that as kind of a near-term problem. They have so much growth runway in international markets. On the call, they pointed out Brazil and Mexico, Germany, Italy, Spain, Japan, South Korea. So while there may be pockets of regulatory changes, overall, they have plenty of markets to expand into, including in the U.S.
Yeah, it's great to see you both. Thank you. Dan Waza, Oleka, Morningstar, Nick Jones, Citizens JMP. Thank you, Dan and Nick. That's going to do it for us here on Trading 360. I'm Nicole Petalides. Thanks for being with me. Download our free Schwab Network app. Available in the Apple App Store 24/7, schwabnetwork.com. I'll see you at 2 o'clock for the watch list. Join me then. Fast Market is next.
Lyft, Mara. Oh, Mara hit my resistance level. Mara hit my resistance level. Head and Shoulders on a mega off the 63 EMA. Number up back. I'm gonna make coffee or tea. Bind had earnings, and we hit the 200 on the 1 hour time frame.
That jobless claims number, market reacts a little bit like it did on non-farm payrolls last Friday, that good or bad news and the jobs market is good for stocks.
Yeah, this all started, I believe, with yesterday's 10-year note auction that came in a little weak.
Yeah.
What's the number? Hold on, I'll have it right here. 65.5% was the indirect bidders took.
Yeah.
That's a little poor in terms of the overall auction. So yield spiked, first time up in 6 days.
Right.
Dollar rallied, right? Then they're up this morning overnight, same thing. Bonds are down, yields are up. First time filers for unemployment insurance come in, jobless claims 231,000. everything negates back.
Right.
Dollar comes down, yields come down, bonds rally. It negates that whole move. Okay, now, the cautionary tale here is, are these longer term auctions, 10-year note, 30-year that we're going to get here in about an hour, are they going to be problematic?
Right.
Right? Are they going to come in weaker? The short-term ones are doing fine, but yesterday's fail, that's the benchmark.
Right.
Right? The 10-year note. That's where the most volume is. That's where the most interest is across the board. So there's one problem. Then, problem number 2. If you are missing earnings, they are punishing you.
Yeah.
Now, ARM is actually making a little bit of a comeback here after being down hard.
EPS and revenue were great in ARM.
Yeah, but if that, again,
Spy at the
cautionary
VWAP.
tale number 2, anything about decelerating growth.
Yeah.
If that spreads like wildfire, that's a problem, right? Why is NVIDIA down so much today? Because ARM's decelerating growth.
Right.
If that starts to spread, we've talked about this a lot. Remember streaming? When the growth stopped, look out.
Right.
So just not saying that's happening. We're not willing to go there yet, but that's what you got to watch for.
Yeah, that guidance, especially for the next quarter or two or the fiscal year 24.
Yeah.
That's become problemsome for names, especially like ARM, which is up over 40% this year going into that report. Bar set high. If you don't guide the correct way, even if you beat on EPS and revenue, it might be.
A bit of good news there. ARM's made a pretty nice comeback off the lows.
Yep. All right. Let's bring in our next guest. It's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, wanted to get your take here on the market post-jobless claims because, as Kevin said, yields go down, the dollar is off of its session highs, and that lends some optimism to stocks at this point, right?
Yeah, it does. And real quick, I want to touch, I think you guys are hitting on a good point in terms of tech and the response to earnings. You know, it's not just ARM, it's, you know, we saw it in ServiceNow, Datadog, Duolingo. If that guidance is in line, or even some, like if you look at Datadog, for example, their guidance was above estimates, just not enough.
Yeah.
And stock gets punished. It's pretty remarkable. It makes me a little bit tentative for May 22nd,
Yes.
whether NVIDIA is going to be able to deliver. If you look at the likes of you know the other semis that have reported, AMD, you know, ASML, all those types of guys. You know, NVIDIA is the king, but have analysts caught up enough? And if they only come in with, you know, whatever, $1 billion above estimates on revenue guidance, is that going to be enough? We'll see. Okay. Now back to the markets. Yeah, good point on initial claims. You know, that's interesting to see. They're up highest levels since last August. Still relatively low. Speaking, you know, if we look back at last week, I think that was a check mark for the bulls in terms of Powell and what he said, and then getting that Goldilocks non-farm payrolls number with the lower wages. Having said that, next week is going to be important, of course, CPI, PPI, retail sales. If you look at CPI over the past 3 months, past 3 reports, that's what's really, you know, kind of spooked the bond market and kind of provided, you know, a lot of that volatility for the market. So we're not out of the woods. We don't want to declare victory on inflation and that the Fed is getting ready to cut just because of what happened last week. But that does look incrementally positive. And I think within the CPI, it's going to be, you know, shelter. Maybe shelter starts to cooperate when we get that next week. It looks like from a lot of the charts that I've been looking at that rent has been coming down for those that are signing leases right now. Is that enough to kind of show up in CPI next week? We'll see. If that does cooperate, that could be another boon for the bulls. But technically, we reclaimed our 50 SMAs on all of our major indices. You know, look at the S&P 500. We're basically, what, 50, 60 points away from our all-time high back in late March. And so those are kind of like the two areas of technical support and resistance. 50 SMA on the downside, all-time high. On the upside, maybe we kind of just wait on, we're going to get PPI first on Tuesday, then CPI. But maybe we're kind of waiting on that data before we take our next move, you know, 2% higher or lower, whatever the case may be.
Yeah, that 50-day moving average in the S&P 500, good base now. You know, lending maybe support Kevin for to get back to all-time highs, and it hit just over a month ago. But that seems to be the trajectory. It doesn't seem like individual earnings names are affecting the overall sentiment in the market this month in May, as we had a nice rebound from those the April sell-off. But at the same time, you know, in this lower volume and liquidity seems to be dried up a little bit, that, hey, you know what, maybe the next stop is that all-time high.
Well, the market certainly seems, with lack of real macroeconomic numbers, you know, the Fed's talking, but they're not making any headlines, right? Neil Kashkari did say we might have to raise rates, but we're probably going to lower them. That didn't seem to make any real headway with the market. I'll still keep with my theory for this week. The market's drifting. Mm-hmm. It's not really, you know, surging towards anything. And Nate's right. We got to wait for data next week. It's not going to be this week. There's even less on the calendar tomorrow, other than a bunch of Fed speakers.
Yeah, and consumer sentiment data, which has been weakening.
I'm not a big fan of consumer sentiment data.
Well, the Fed is.
Not enough of a sample size. 400 students. Again, University of Michigan has 51,000 students, and they survey 400. Come on.
Yeah.
I like that. These guys got an attitude. I like that.
Consumer confidence sentiment numbers, you know, to wit here, Nathan, when you look at them, the Fed looks at that type of stuff. And we've seen those pull back a little bit. I think the linchpin for this market, and to get back to all-time highs, is going to be retail earnings next week, because the consumer is under pressure from a lot of different sides. Even though we've seen that pullback in crude oil, Nate, is that the linchpin where, hey, the consumer's going to have to make some hard decisions, because if they want to keep traveling and stuff, you know, they might not be able to.
Yeah, of course, the consumer is so important. And I know you guys are going to be talking about rural Caribbean later in the show. And, you know, if you look at that data point, you would think that, wow, the consumer's doing great in terms of the demand there. And then there's other conflicting data points. You know, we talked about this last week, Starbucks, McDonald's, Planet Fitness, even talking about it this morning in terms of the consumer. They're looking to raise their monthly membership to 10 to 15. So, you know, one would expect, though, if we're in restricted policy, that you start to see non-farm payrolls come in at a 6-month low and initial weekly claims come in at an 8-month high. And then you start to hear some cautious commentary in terms of guidance from some of these consumer-focused type companies that I referenced. You would think that, you know, this is what would be indicative of a slowing economy, that it is restrictive. I mean, the whole idea of, you know, in years past, when you go into an economy that's running too hot, the demand's really strong, therefore inflation is there, the Fed raises rates, they're doing demand destruction, therefore begins to hit demand, hits corporate profits, they do layoffs, it shows up eventually in the unemployment rate. So, you know, we can't have our cake and eat it too, to some extent. I think what the market probably wants, based on the price action we saw from the non-farm payrolls and the initial weekly claims, just, you know, that you mentioned this morning, is that cool data, but not cold data. Let's get some evidence that that the cooling of the demand is enough to get inflation to cooperate to the Fed's target, but nothing's falling out of bed here. And I'd say right now we still kind of need more data points on the consumer. I'm not quite sure that they're getting hurt. And we've talked about those tiers. If it's, you know, bottom tier, middle tier, upper tier, you know, high-end consumer with a lot of disposable income, probably doing fine. Middle tier maybe starting to get hit just a little bit. And we know the lower tier has not been doing well. But to what extent? So I think we're still kind of feeling that out.
Inflation,
Airbnb, we mentioned earnings. Yeah. That stock's down over 6% today. Pretty good report, but then you look
at a little bit of guidance.
Weaker guidance moving forward. And that's a concern. ARM, you mentioned also, Kevin, Roblox getting destroyed today. People aren't staying on their platform. But these are concerns because they're individual growth stocks, a lot of these names.
And remember, as we get to that second half of earnings season from mid-May on, a lot of retail, a lot of look at the U.S. consumer. And so if the trend starting in McDonald's and Starbucks, and, you know, the list is starting to get longer, Tom. You know, if the U.S. consumer starts to double clutch on spending, they've been a big part of what's kept this economy going. Leisure and hospitality jobs, low levels of jobless claims and overall spending has been good. If that stops or weakens, it's just another sign. Let's face it, right now, the totality of the data has turned mixed. I wouldn't call it weak yet, but we're getting some weak signals from some parts. And the U.S. consumer that's been so consistent throughout this entire thing, showing some warning signs.
Yeah, Nathan, who wins in that? Because we've got Walmart, Home Depot reporting next week, but you look at Lululemon down 31% so far this year. Nike's getting hammered. Kevin mentioned Starbucks. These are like discretionary spend items. Are the winners going to be Target and Walmart and the grocery store chains? Because the inflationary pressures are hurting people. They're still taking cruises and flying everywhere, but they're pulling back on the things that were high growth in the discretionary sector.
Yeah, normally, Walmart and, more recently, Walmart's been kind of doing a lot better than Target, fundamentally speaking. But normally those types of companies, your Dollar Generals, your Walmarts, those types of names begin to pawn shops. If you can remember back in the day, when you're going into a recession, you can start to see some of the pawn shops kind of tick up in price action. We're not to that extent, but
that's a snooty way to say it.
I think we're gonna have. We'll see what Walmart reports next week. So we're gonna get to hear what they have to say in terms of the consumer. But even a Walmart may not be immune if the consumer is pulling back. I mean, we talked about DoorDash, for example, last week, and you might pull back from that, and then the consumer might pull back to where they're cooking at home and not even going out if they're looking to save money there. So. Who wins in this type of environment? Yeah, you just probably need to stay away from discretionary, and oftentimes you go to what the market perceives as safer areas of the market, such as technology, such as AI, those secular growth stories.
There's always negativity about all of a sudden.
Whatever's happening in the economy because of where we are in the.
You're not falling for it, are you, Guy? You've been listening to CNBC. And we're bringing all the dirt bags on today, or what? If you don't know that inflation's up almost 20% still, and you're now kind of concerned about the small guy, hey, I'll tell you a secret. I'm gonna stop going out to eat. I cook all my food. Today I had a bologna sandwich. Yesterday I had hangers. The day before that I had a tin of fish. And the day before that I had a turkey.
Nothing for you.
It was delicious. I didn't have your dirty hands in it, that's for sure. Calm down, Jim. Dadgummit, it broke the 50. Oh. We're patiently waiting. Let's see what this chick has to say about my Tesla.
I mean, we know that there's been some pushback in terms of Tesla's presence because of the data it collects in terms of having any ability at all to penetrate certain sectors of the market in China. And so you have the Chinese EV makers maintaining their positioning there. The China story certainly matters. So hopefully for Tesla's sake, they can kind of stake more claim there, but you're right, the news flow hasn't been great for Tesla. And this latest black eye with the Department of Justice, this was first reported by Reuters, looking into whether
It's a scam.
there's a fraud issue here in terms of what the company has said about autopilot and self-driving features, if they actually do what they say they're doing. If they're not really fully autonomous, I mean, that is just a difficult wall for the company to climb and a wall for the stock to climb. You've got a wall of worry there.
Yep, definitely. And
I just don't understand our government, man. When it comes to this thing, it sounds like they have no common sense. Yeah, let's go ahead and get it on out there so we can kill a bunch of people when it's not ready. It's a good idea, Biden.
We choose truth over facts.
That's right. I remember when they first made the computer. No, it had all kinds of problems. They were so expensive. I couldn't afford one. Then later they came out with the Apple flat top. I said, I gotta have that. Still $1,700 back in 2004 or 5 or something like that. 6. I still have it. I stuck it in the closet. I thought it was burned out, but I plugged it back in about 5 years later, and I said, what? The thing still worked. So I got a computer that's over 20 years old, or at least 20. Or close to it. Sucker didn't do what I wanted it to do. That's a big bear flag. And we got a 1, 2, 3. I just don't like it when these guys talk about my Tesla. I'd be totally different than what they are. I wouldn't be comparing them to any car company. Play me another me, Mike. Yabba dabba doo. Very good. I'll turn it down just a little bit. I keep bringing it up. I missed a good trade right there. I was wanting to get this double bottom, or the 200 on the 1 minute. Now we're up here squeezing. I'd almost get a put here, but man, if we broke that 50, I think I have more leverage over the 50 than I do the triple top. This is on the 2 minute. In the 1 minute, I wouldn't be as bullish. Well, I don't know. We're still above the 9. We broke the 50. Now that 50 drops down. We had the crossover here on the 21 on the 1 minute. Right there. So we go to the 2 minute. Yeah. I don't think I'd have took, well, maybe I'd have took that trade there off the 9. If I learned how to trade this strategy. But I always say wait for the pullback. I don't know if I'd have took that or not. I know I would have on the 1. Took that crossover, and that's a lot cheaper. I'm still waiting for my 200, and I ain't going to be satisfied until I see it. Okay, I'm going to take a 15-minute nap. Squeak low. Double bottom at the 200 SMA now. I got a confirmation. So we got bond action at 1. Whoops. Jim, is it true that in high school you were voted the most likely to talk to the TV? Well, I was the well best dresser there. And I slept with more women than any other guy in high school. So I was going to be a hooker or a pimp. That was a good question. Me and Gene Simmons had a lot in common. Oh, I can't. What am I doing? I can't see nothing on that chart. It went back. God darn it. They fooled me. It was a little too soon. We got auction activity here in 23 minutes. So the bonds were weak yesterday. Is that what he said? We don't have nothing in common. There's your 1, 2, frickin' 3. I didn't want to see that. I was going to jump in. Pilly sticks. Now I got my 1, 2, 3. Breaks out, I'm going to jump in the sucker. And I'm just upset that it didn't. 52 tens. Three. have no ready, set, go. It's kind of skipped it. We got the 1, 2, 3. Bring it down. Bring it down to the 200 for the double bottom. Continue the triangle. I'm anticipating the 200 SMA. I'm not stopping right here, you circuit silage. But I have to. I want to make this perfectly clear with everybody in this room. You ready to hear this? This goes for you, Randy. I did not hang at Diddy's house. I'm in charge until you get back? Okay. Sounds like a fair deal. Save's got some volume here. Sasquatch adjusts price target on Save to 3 from 4, maintains a negative rating. I don't know if I don't want to take that. God. I don't know if I'd take that. Well, it's cheap. So the next, we got Head and Shoulders up here at 5207. And SPY still says it's finished. I kind of feel like that too. Let's try to find something else. Firms on here. A-Lab was a new IPO. AC/DC's on here. Rock and roll. There's CCJ Carvana. Oh, God. BKKT. Okay, what do I got here? New feature and popular demand. Trend Spider. Sure Trading World. Automated scans. Seeking Alpha. Tom Pearson at Tasty Live. Where am I getting all these damn alerts from? Reddick. I must have signed something I didn't want to get. Hey James, there is something brand new. Oh. Oh, why didn't I see this? Head and Shoulders, I'd have jumped in that trade. I didn't see it. I was focused on the double bottom. Bad job. And to the 200. Oh, that would have been a good one. I didn't even see it. Well, I missed this one. God damn it. Is tomorrow Friday? Shoot. Well, well, well.
Young lady who was
Johnny!
A couple of kids, recently went through a divorce. So she had a lot of questions when she came in.
You're growing up to be a fine young man, Johnny. I remember when I had to leave home because Dad was an alcoholic and left Mom, I had to be the man. And yes, you are my younger brother. And I want to let you know that I am now a multi-millionaire, and I want you to live the lifestyle that you deserve. I know you lost your leg, and you lost 5 fingers, and you only have a few left, and you're half blind because of the war. So I'm going to put you up in a nice little house right off the beach with Mom and our little sister, and you'll have everything you'll ever need.
Alongside Alex Coffey. Alex, some strength today throughout most of the major indices here. Modest strength, but it's been such a quiet week. It almost feels like it's summer trading. We're only in May here.
AVGO triangle.
I think that's sort of what we're seeing. We're seeing a market that's in a positive.
The 2-minute time frame is going great. YouTube. I'm compromising, going back and forth, trying to figure out which one. The 1 minute, there's definitely a couple times where I would have took the trade sooner. And I think when it comes to the 2 minute, I got to maybe just look for a trend more than just kind of a pattern, but I am finding that both of them work pretty good. See, like the 1 minute, the 200 would be right here. And the 2 minute, the 200 is a lot lower. So, I mean, that would be a huge drop. Although we did bounce off that 200 first thing this morning. So it's still a reliable, and it's definitely hanging out right here on a triple top breakout. So I don't know, that might be a good idea. We came back and retested the breakout of the triple top. Now the one, let me put that price line right here. I want to see something. See, if from switching, who asked the question? Miles? From switching from the 1 minute to the 2 minute, my moving averages move around on me. So that's what I'm looking at. I'm looking at which one hits the moving averages the most. Is it the 2 or the 1 minute that I can rely on? Now, this is the chart I shouldn't be working with right now because this is the SMA 21. It's breaking out to a double top. I might swing it. I mean, I was asked if I would swing SPI and SPX, and you know it's against my wishes all the time. Now we got the double top. I really want to buy the put here. Oh, it's so stupid missing that trade. Oh, and it breaks. Oh, God. Suckers. And the 2 minute. See, there's the double top on the 1 minute. See, the bodies of the candles are even different. So I draw price line up. It moved on me. 5208.07 and the 2 minute. I would have got out earlier. Would have got out a little bit earlier on the 2 minute. Let's look at the put. We got an inverted hammer. We see what this is. Okay, get ready, put. The 9th, the 5200 put at 210. SPX, Lotto, put, strike, 5200 at 210. Fudge. Don't break. Well, that really looked like a fallen star right there. Shooting star. It's an upside down dragonfly. 5209.68. The 1 minute would have took it. Oh no. Gosh, come on. Buy and made and walk away. This coffee, man, this instant coffee is powerful. Brilliant. I'm gonna sleep like a baby. And we still got 3 more hours. The ladies on the 3 I'm here never seen anything. You got a spinning top and a hammer, and an inverted hammer, and a spinning top on 3 minute. And we got 17 minutes before the fat cats get back. Actually 12. Might have some bearish divergence. As the price goes down, so does the volume. If the price was going up, well, I don't know. I guess it looks a little bullish. The last green 3 candles. Drop. Drop in the name of love. I did not hang at Diddy's house. Come on, big knife. Ooh, the dragon awakens. Crane shares CIO names 5 reasons to invest in China. America overbought. Should be one of them. China. One reason, global investors changing sentiment. Policy reform and market improvements. Economic recovery and consumer confidence. Where's number 1? Government support as a catalyst. Are you freaking kidding me? China? It was China that destabilized the economy. What the heck? This guy gets an F. Attractive valuations. I heard they're getting better. GDP exceeding expectations. And here's my money. We are now at 260. Washboardjim made a business decision. Are you proud of me, Mike? Good. Jimmy's winning. Jimmy's winning. Jimmy's winning. Let's see the 63 EMA. Back right there. That was gross. That's very unprofessional, James. Such a pretty world today. This is on the 3 minute. I was looking at the 3 minute. Dadgummit. I gotta go back to the one or I'm gonna screw myself up. I can't believe I did that on the 3 minute. Oh no. It's still okay. The 3 minute would be number 4. And the 1 minute would be the 200. So we're all good. We're all good. We're all good. But just drop it on down to 200. There we go. Got it. Jingle bells, Santa laid an egg. I'm up $100 a contract. Oh, 380. Excuse me. Nailed it. Anybody take that trade with me? Beauty, beauty, beauty. Anybody take that on YouTube? Them puts? You see the message on my chart? I did not hang at Diddy's house. So this is the 200 SMA. Once you hit that 200, you want to get out of the trade. This is a hammer, big old body hammer. I mean, that has a lot of lift to the upside. The buyers were in control. The buyers were in control. Big bodied hammer. The tweezer bottom with a doji spinning top with a tweezer bottom off the 200 SMA to take the trade. But that candle is bullish. It's like this one here. Big old sledgehammer. Then you come in here with 3 white soldiers right after it. So it hits the 200 and comes back and retouches the 200 SMA for a booyah bounce. I mean, that's beautiful. I didn't have enough, I didn't think about, I should have jumped in it. I heard Drake's in trouble now. I never hung out at Drake's place either. Them guys, they like them chicks young. Yeah, billionaires. If I was a billionaire, you think I'd be chasing after some 14-year-old? That's what I thought. You got these guys chasing these young chicks. It's disgusting. I guess they kind of took the clue off Bill Clinton. And Diddy, you got that big old gut on him. I don't think he could take a belly punch for being a gangster. That's probably where I'd sock him one, right in the gut, if I ever saw him. Right there in the chest, right there above the gut, right next to the kidney. I think we can break out. This thing's a monstrous today. The legs on the 3-minute. You've been trading for 8 years, Yoko? That's good to have somebody with some experience in here. What am I doing? Spy. I think you're just now starting to watch them. A spinning top, hammer, and an inverted hammer. A spinning top, inverted hammer, spinning top, hammer, inverted hammer, 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 inverted hammer. Oh boy, that was good. Did I not say we were going to pull back to this trend line? Did I not say that? Or did I say it? You did, Jim. Hello? Jim, I got in that put. You said we were going to pull back to that triple top trend line, and I didn't believe you at first. So I went in the bathroom and took a big shit and come back out, and I set my stop there off the 200. It was my favorite trade of the day. Trade of the day. Did I say turd? I meant trade. Yes, I like my chicks like Nancy. Anybody that can give me some insider trading, I'll do anything for. Mannequin. That includes Nancy. Kathy Wood. Her and I are still at it. And then I'm dating Johnny Depp's ex-wife. She's hard to handle, I'm telling you. I woke up one morning, she was squatting down on me, and I thought she was going to shit on me. Woo, Jim, you still have it. Me and Zach Morris called that same put out at the same time. We didn't know it. He has an indicator that tells him to get in the trades. He's getting good. He's getting a lot better. Okay. Go get some water. For every caffeinated drink you drink, you need to chug it with some water. Okay. Now, since YouTubers, we made an excellent, beautiful trade on this thing this morning. Off the 200 SMA on the 1 minute. Now, if you look at the, wait for that pullback. We had the double top pre-market right here, and then it pulled back and hit the 200 on the 1 minute. On the 2 minute, we started breaking to the upside, and we pulled back and we hit the 200 SMA with 3 black crows. So I would have definitely took that trade. I would have took it off the next candle. It's a spinning top, tweezer bottom. So I would have took that trade. I would have took that trade. And then, check this out. This is neat. I got to look at this. This is neat. I just now noticed this. Let's go to the 2 minute, 5 day, 2 minute, 2 day. Oh, fudge, man. That's a beautiful setup. Look at this. So yesterday, pre-market, we had an inverse head and shoulders. And we traded that pretty good yesterday. And then from the double top, triple top, it pulled back and landed right on that right shoulder. And see, I didn't notice that earlier. Well, I might have. I can't remember. But that's, you know, pre-market. So you know, and you started moving up, and you broke resistance. So I'm bullish. I'm bullish as of now, pre-market, because of this breakout off this shoulder line of an inverse head and shoulders. So we come in here at open. Then we have a 1, 2, 3, and we break down with 3 white soldiers, and we land off the 200 SMA with a spinning top on a tweezer bottom. Then we lead out with a doji. It runs up. Now I already created this here bar. I already created this bar from this pre-market run off this inverse head and shoulders on the way up. So I follow that up. We have another head and shoulders. I missed Jim. Man, I saw the black crows this morning, and it was landing on that 200 SMA, and my mother had me go in there and make her a cup of coffee, and when I come back, it already boomed. But then I saw a yin-yang. You know, you talk about the yin-yang. What was resistance now becomes support. So I jumped in that trade. I seen this hammer, and I figured, what the heck? I got a yin-yang going on here. And I jumped in the trade, and I sold it all the way up here at the top. Thank you very much. What was resistance now becomes support. So you broke up the double top, and I get a knock on the door. Jim, should I take the trade? We just broke resistance. No, let it pull back to the yin-yang, the previous high, and then take the trade off the 21. You'll hear me talk about it a lot. So we extend that line all the way up to the top, and we create a head and shoulders. There's the head, there's the left shoulder, and right shoulder. And we pull back. We pull back to the 63, not once, not twice, but 3 different times. So we have a 1, 2 bits, and a freebie. Right there. I'm up here at the double top. I buy the put. I take it down. We create that third boom boom. You know that's a 1, 2, 3. Takes it to trade. Beautiful 2 minute. Now 3 minute. Nobody walks you through this shit like I do. YouTube, so I want to raise. I want $1,000 from each one of you. Now. Okay, so we're on the 3 minute. We come back and we hit the 200 with a tweezer bottom. Still holds that inverse head and shoulder. Still have the trend. 1, 2, 3, 4. On the 3 minute. Off the 63. So that's a good strategy. What I'm trying to get at, it doesn't matter what time frame you use. You just got to rearrange and look at them moving averages and be consistent and trade that same time frame over. I can adapt. That's why I go back and forth to different time frames, like the SPX. Let's clear this up. I don't want to use the SPX. I'm going to use a SPY. First time frame I'm going to go to will be the yearly. And I want to see where we are at the yearly. And I look at it and I say, oh my God. Irrational exuberance. And I say, well, I got to look at the weekly. Because this looks pretty irrational to me. Not the yearly. And the yearly. Everybody that was in this room last December, I said I've never used a yearly time frame ever. Never in 20 years. And we had a triple top on these candles, and I did never see. You ain't seen nothing like that. And COVID, the war, the recovery. And it all landed on a triple top on the yearly. And we've held that support. What was resistance remains support. So I go to the weekly now. And the weekly, I identified the bottom on the SPY with these 3 black crows and a Harmony inside candle. And then we had a nice pop, and we're still moving up, and we're getting to my resistance level. Now, I've sat here and chalked this out. This resistance line from that body and that body of that candle. And that's on the weekly. Up, right there. Somewhere around 519.47. You see how it lines up with the body of that candle? And almost the body of that one, and definitely the body of that one, and we still run into this one. So that's probably one of the strongest resistance levels on all these candles right here. This one doesn't line up with nothing. This one doesn't line up with nothing. This one lines up with this one, almost that one, and that one on the bodies. So we go to the yearly. Now I want to go ahead and I want to draw the support line, which is the 9. If we break below the 9, then our next support will be back here at the 21 on the body of that candle. So I'm putting the 9 above this here dragonfly. And that's going to be our support to hold, 511.54. Now I'm going to go to the yearly. We had a nice little snake breakout, pulled back, 1, 2, 3, boom. To resistance, 519.47. 1 minute, 519.47, 519.47, and we're trying to get a little bit above it. So after I do the yearly, I'm going to go to the 20-day 1 hour. We got a double top. We hit that 519.47 right here. And now we're exceeding it with a new high. So it's a new high. It could be just a little bit of irrational exuberance. So I can come in here tomorrow. We've had 1, 2, 3, 4, 5, 6, 7 days to the upside. That's a bit. I think that's enough. If we break the 7-day to the upside, then shoot, we've had days where it was 14, 15 days this year, continuous run before we had any kind of pullback. We're on the 63 hovering it right now. So we could easily come back and hit this 200 and be a strong buy. The old resistance will now become support at the 200 SMA. But every time I change time, the moving averages will move around and change on me too. Like the 200 could be support in this time frame, and then I go into a 30-minute time frame, and it could be the 63. So whatever time frame you like to trade in, just get accustomed on how you want to use them moving averages. I look at a yearly chart, I say this thing looks very bullish. I look at a 20-day chart, man, this thing looks oversold. 20-day 1 hour, that means it might be a great buy. We've got a triple bottom. I'm right here. The yearly chart looks very bullish, and I come in here and I see the SPY at a 1, 2, 3 with a capital M, as in mighty might. And then I count a 1, 2, 3 here, and I go, damn. 1, 2, 3, boom. 1, 2, 3. 1, 2, 3, boom. So I take a trend line on the SPY, and I go from that there to that right there. And look at, we hit there, we hit there. So what was resistance now becomes support. Left shoulder, head. Watch this stock fall down and be dead. Right to the 200 SMA. So I got a confirmation on the right shoulder with the 200 SMA on the 1 hour time frame. I'm going to set an alert right here. Then we got this then we got a confirmation of this here previous high and that previous low. So that's the pivot point on a 20-day time frame. Lands right on the 200. So this here shadow is going to be your support area. And that's how you chart it up. You want to set an alert right here on that previous high. I'm ready for it to pull back. I think we've had too good of a run, 7 days. If you can count to 7, you can go to heaven. 1 bis, 2 bis, 3 bis, 4 bis, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 7 down, 7 up. 1, 2, 3 off of inverse head and shoulders. Pulls right back to this here trend line right here. And we catch it and run it back up. So we're up here at the top. I called it to the 200. 1, 2, 3. Boom. If you can count to 3, you can trade with Uncle Zimmy. If you can count to 4, 1, 2, 3, 4, you might make a little bit more. So I take that body to that body. We come down. I was able to count to 3 and get out of the trade. Please take a look at AMD. Thinking about taking some calls. Georgia? It'll be my honor. Okay, got a clear slate. First thing we're going to do is look at the weekly time frame. I have 136.56 to take this trade off the 50 SMA on the weekly. This could be a shoulder line of a head and shoulders. I think I'd wait. I'd wait for it to pull back to 136.56, maybe, off the 50 SMA on the weekly. But let's look into another time frame now. This tells me that we broke support. Which was right there at 157.34. For it to gain respect, you got to get it back above the 21 or above the 9, and then I would take the trade, like right here. Just looking at the weekly. If it broke 157.34, I'd call it bullish. But on the weekly time frame, I like to use these candles too, because it's a week long. So the resistance channel is the body and the top of that wick. Now we're going to look we're going to look at the yearly so I can get a second opinion. Now we could draw a line down here to the 200 and we'd have us a 1, 2, 3. So I have 2 reasons to take that trade down here. If we don't break that resistance level that's on the weekly, you can run it back down to that 200. So I'm bearish. As of now, I want it to pull back and hit this number 3. So I'm going to go to the 90-day 1 hour or 4 hour. I got the same scenario. So I'll go to the 90-day 1 hour. This looks a little bit more bullish because we got a falling wedge. We've got a falling wedge, so it'd have to break the 200 before I'd take it on the 1 hour. 20-day 1 hour. It's a falling wedge, so it looks bullish here. We'd have to break the 200. I'd actually have to break the 50 before I'd want to take the trade and have it some support off the 50. Let it break out and then maybe pull back and hit this trend line, like one candle up to the 50. Don't take it yet because you don't know if it's going to break the 50 or not. Let it pull back and hit the top part of this trend line and then take the trade if it respects that trend line. What was resistance now becomes support. And if you can count to 4, you might make a little bit more. 1, 2, 3, 4. 1, 2, no 3 yet. Maybe, no 3. Almost. But they don't count. So now I go to the 3 minute or the 5 minute. I'm getting burned out. It has to break the 200 before I'd take the trade and run it up to a double top or a head and shoulders. There's your head and shoulders right there, so it ain't much of a break. I'd rather see it pull back a little bit more on that weekly. I'll do it daily. Set an alert right above that. Oh. Here at the double bottom. So that's the way I feel about it right now. We're under the 9, so we're bearish on the daily. If it could pull back just one more time, man, I think we'd have a good breakout. On what? On spy? Oh, Jimmy noticed. What you talking about, man? What you talking about? You're welcome, Georgia. I would buy a Tesla, but I'd have to have a place that I could park it. I wouldn't want to leave it out in the rain. I'd have to be a garage car. All them electrical components in there. I'd have to have a garage. Okay, 2 more hours left, and I'm gonna go walk around the building. I'll go go lift some weights. Man, I'm talking way too much. You thought that was funny? You thought that was funny? What'd you think, Johnny?
I don't know no snakes.
Spy on the 200? Brandon says I'm not messing around. All right. Let's drop it. It's time to drop. If you can count to 4, you can make a little bit more. Wubbits. Tubus. Freebie. And Forum. Winham. Chibbits. If we fail here, we drop pretty good. Randy. If we drop below this line here, we got a pretty good drop. 10-4. Needs to break. Okay, here we go. Okay. Has to hold. This is the sweet spot. Inverted hammer. Tonight's Thursday night. Oh, Cinco de Mayo. Man, I got a story I can tell you about Cinco de Mayo. Pepsi Cola, Florida or Texas? Whatever state it was. I got drunk one night and got lost. I used to inventory AutoZone's auto parts. We go around the country, and we got drunk one night, and I end up sleeping on a concrete wall, and a cop hits me with a stick, and he says, grabbed me, and said, "Don't move." I said, "What?" He says, "Man, you're sleeping on a pier here. I mean, the water's right below you. It's about a 20-foot drop. You can fall right into the ocean." I said, "I'm drunk, sir." Go there and hide under them bushes and sleep it off. Just get away from this here water. Before that happened, went to a parade, the Cinco de Mayo parade, and I walked up to these fat Mexicans, and they were going to beat me up and rob me. And so I ran and I ran and I ran, and I was in good shape back then. I was so tired, I just finally ended up on this pier, concrete wall. I woke up the next morning just in time to get back to work. "Where were you last night?" "I was sleeping under a bush." I'll never forget that, though. I was going to let them Mexicans get to me. If you know Mexicans, they can fight. I'd rather fight a black guy than a Mexican. Okay. Oh, chicken train. lay my head down for. I just got to get away from this for a second.
Empower your portfolio with the Schwab Network.
I just got through talking to somebody.
Available anytime, anywhere, on any device for free. Schwab Network.
I just got through talking to somebody that has a lot of money. Millions, more than I'll ever think about, probably. And all he trades is a SPY. That's his main one. The SPY is easy to trade. It's the easiest stock out there to trade. I've been trading it for 2 years straight every day. That goes back to my theory of having a watch list of just 10 stocks and just companies that have money, billions in the bank. And trade just them 10 when they're ready. That's what I've been doing with the Tony and Jim watch list. Almost every stock in here has billions in the bank. None of them are bankrupt. I don't have to worry about bad news coming in. Except some of these that I've added on, like Reddit, Lyft. All the rest of them are money makers. We're heading to the Donald. I thought I had the Donald on here. SMCI, NVIDIA, Mara, TSM, Shop, UAL, Lilly, Google, Spot, QQQ, Disney, WFC, BA, Meta, Netflix, Apple, GME, Baba, Goldman Sachs, Morgan Stanley, Lulu, and the Donald. They all have money. So I come in first thing in the morning. I want to see what's running. They have volume highs. I took NVIDIA today. I could take this every day and trade it. We come in here this morning. We had that big old frickin' knife. That was like a gift from the gods. It was a gift. NVIDIA is my #1 trade right now. GME. That was a good trade for a couple days. I'm in this one here long, AMC. If I can get $5 out of it. Eventually. I might be in it for months. Apple. We've got an inverse head and shoulders. We have a 1, 2, 3. Come in this morning. Tweezer bottom. Off that 1, 2, 3. SPY. We took this one. Nice little breakout, and then we had that pullback to the 200 first thing this morning. With this bullish expansion pattern 1, 2, 3. Boom off the 200. Come in this morning. We had a breakout. Pull back to a double bottom on the QQQ. Snake, breakout, pull back, higher low, boom. Snake, breakout, higher low, boom. Shop. Kind of a shitty stock right now. I'm waiting for earnings. This is day 1, 2, and I got tomorrow and Monday to take this trade. I wait 3 days on bad earnings. I don't take the trade on bad earnings. I don't take the trade on bad earnings. GME, been very good, fun stock to trade. Disney, they've been yakking about it. It had a huge pullback. I talked about the 104.76 yesterday. We bounced off the 104.76 yesterday, and we did the same thing today. Double bottom. I'd have took that trade. Every stock on this trade I could take. Every morning. Google. We got a double bottom. We had a nice little breakout to the upside, and then it sold off to a double bottom, jumped in the trade. Snake, breakout, pull back, boom. Lift. They were pumping it up yesterday. We had a 1, 2, 3 break. Come in this morning. We got a big knife. 1, 2, 3. Out of the trade at the 63. 1, 2, 3, 4. I decided to make a little bit more. WFC, big old run yesterday. I missed the trade, and I come in this morning. I hear a knock on the door. Jim, that WFC that they were pumping yesterday, check it out. We opened down with a gap. What are you talking about? Inverse head and shoulders, left shoulder, right shoulder, and the head. Breaks out with a hammer, run it up to the 63 and get out of the trade. Instead, we got the 9 crossing the 21, and I think we could run it up to the 200 and get out of the trade. Boom. Baba. This China is very hot right now. We had a huge breakout on it yesterday. This morning, it was too high to get into, so I get a knock on the door. Man, Jim, Baba broke out this morning, and we just had a huge knife. So you got to be kidding me. Man, this thing's on fire. Snake, breakout, pull back, boom, to a double top. I'm out of the trade. Meta. I come in this morning, I alerted Meta right out the back gate. I said, watch Meta. We had a fallen wedge, fallen expansion pattern. So we draw in the chart. We look at the 2-minute. I take my trend lines. I run it to the next body of that candle. Let's do this. So we got 1, 2, 3, body, body, no body, body. One. I can do the same thing in the morning. I can do the same thing the day after. I can do the same thing the day after that. It all does it the same thing every single day. It's so easy to learn. 1, 2. One, 2, 3. We broke out. We pulled back. We created an inverse head and shoulders. Same trade every day. Snake, breakout, pull back, retested the shoulder line 2 or 3 different times. Boom. Broke the triple top. 1, 2, 3. Boom. One, two, pulls back, hits the 63, comes up and breaks the 1, 2, 3, retests it. I missed the breakout, Jim. Wait for it to pull back and retest that trend line. Boom. Scalped it from here to here, or you got in it down here on the shoulder early. We have a bull flag right here. That's a bull flag. Next one on the list, the Donald. Get a knock on their door. Jim, the Donald's on fire. It is. Kind of a tough one to read right there, but I don't know. I might have took it, but I definitely would have took it off the 200 once I started seeing these engulfing candles. Probably would have skipped that one today. TSM come in yesterday morning. We had a big knife on it. It ran all the way to the top. We got out of the trade on a 1, 2, 3. Come in this morning. I was able to count to 1, 2, 3. We got the snake breakout, pull back, higher, low, boom, to the 200 out of the trade. It's that simple. Next one on the list, Morgan Stanley. Off the 200 first thing this morning. Boom. SMCI. We had a huge knife on the SMCI today. Snake, breakout, pull back, higher, low, boom, out of the trade. Read it. First thing this morning. Oh, I love my stocks. Snake into a wedge. Snake, breakout, into a flag. Boom, 1, 2, 3 out of the trade. Boeing with that shitty news. Still running. Makes no sense. 1, 2, 3 out of the trade. Off the 200 SMA with a fallen wedge. UAL. We get a knock on the door. Jim, I got a 1, 2, 3 here. Should I take the trade? Well, if you notice on that last 3, we did break out. So this is the sweet spot. You know how to count to 3, right? Oh yeah, I can count to 3. You know how to count to 4? You might get a little bit more. Breakout, pull back. I'm watching. All of a sudden, I'm in the sweet spot. Pulls back with a higher low. Boom to the 200 out of the trade. We took it at the 1, 2, 3. Symmetrical flag. Goldman Sachs. Jim says this thing's way overbought. He doesn't want to trade it. Netflix. Come in this morning. Snake, breakout, pull back, higher, low, boom to a double top out of the trade. Lilly. 1, 2, 3 out of the trade. Comes back, has a little snake. Jimmy jumps in it. Realizes it couldn't break the 50. Pulls back again. Adds on. Snake, breakout, pull back. Out with a little bit of profit. So that's one bad trade today. But he got stuck in. One trade out of all of them. So I got to look at the big picture here. So I'm going to go to a 5-day. Oh dang, Jimmy sees a fallen wedge. If you can count to 4, you can make a little bit more. If you can count to 3, you can trade with me. 1, 2, 3. 1, 2, 3, 4. Boom. Sweet spot. Sweet spot. And Spotify. Snake, breakout, pullback, higher lows, inverse head and shoulders. Decide to take a trade once the 9 crosses the 21. Run it to a double top, and I'm out of the trade. So two trades I would have not took today in here. The Donald and oh, I missed Lulu. How did I miss that? No, I got Lulu. So I come in here in the morning. First thing I do is pull up the red, and I see which one's the one that's hurting the most. You know, NVIDIA. Here we go again, see? Jimmy wasn't paying attention. Left shoulder, head, right shoulder, take it to the 200 SMA, out of the trade. TSM, I want to draw my 1, 2, 3 up here. Snake, breakout, pullback. All we got to do is break this resistance, and we have a 1, 2, 3. We break this resistance. We could have a right shoulder right there. Jimmy said this had to hold. Jimmy said this had to hold. 1, 2, 3, breakout. And I extended that line all the way down. Look at that. Right to the penny. There was this guy I used to watch on Stock Twits. And he had the ugliest charts. Let me see if I can find this on TrendSpider.
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
Call Washboardjim at 1-800-888-8686 for a 10% deposit. 1, 2, 3, 4. If you want a little bit more. Up 230%. You can't get away with that. Do you see what I see? I see a head. I see a shoulder line right there. Boom. Left shoulder, right shoulder, right shoulder. Boom. Perfect. Sweet spot. on the inverse head and shoulders. The second shoulder is the sweet spot. That's right, brother. Rinse and repeat over and over every single day, the same tickers. I can go eeny, meeny, miny, mo, catch a ticker by its toe. If it can count to 3, let it be, but if you count to 4, let's get a little more. Airbnb looking for an entry. More of a pullback. Let me see. I think it had earnings, right? 3-day rule, Florence. 3-day rule on bad earnings. Let's see, I'll look at the stock, Airbnb. I'll tell you where I'm waiting for it. So we had earnings. They weren't too good. When earnings aren't good, you want to give it the 3-day rule. You got to read the earnings. If the earnings aren't up to par, give it 3 days to rest. Then you can build an egg's nest. So I'm going to pull up the wrong chart. I got to get these off of here. Move this one over here. What was it again? Airbnb. We want to catch it at 130. This is the flag. So we got a 1, 2, 3. And you can trade with me, and if you can count to 4, you'll make a little bit more. So we've hit 4 times up here on the top. We had a breakout. We have an inverse head and we have a head and shoulders. We want to keep a higher low, so we want to do a double bottom right here and set that alert right at 134.47. We don't want it to pull back one more time, because that'll keep us within the sweet spot. If we do pull back one more time, it has to bounce up. So 141.12 and 134.47 is what you got to wait for. Wait until then. Wait until you get in this channel. Just give it patience. Give it patience. This is the second day, and maybe tomorrow we might take it. Tomorrow morning. When it pulls back, it's got to pull back to this channel. That's a double bottom. And that'll be off the 1, 2, 3 with a higher low. And that's where you want to take that trade. Right in that channel. Start off at 141 and really add on at 134. 135. That's what I'd do. I'd wait, set you alerts, and I'll let you know when it's ready. Is that fair? I'm going to send you the chart too. That's a bear flag. go rest myself. Sometimes I leave here and I don't want to hear a word. I don't want to say a word. Like the rest of my day is just pure silence. And all I do is read and do charts. And it's called my time. That's why I get out here at 3 and you don't see me anymore, or 4 o'clock. I got 2 hours, maybe 3, and then I go to bed at 6. And I wake up exactly at 1:30. It don't take much for me to jump out of bed, get in the shower, turn on my steamer, cook the coffee, have a breakfast. If I move to Hawaii, this is perfect for me, this time period. Because I'd be getting up it'd be like 7 o'clock here and 1 o'clock in Hawaii, 2 o'clock in the morning. So I'd get up, have my coffee and breakfast, and start trading at 3 in Hawaii. AM. Then get done trading, and it'll be noon, and I'll be out at the beach. If I move to Hawaii, it'd probably be, I was going to buy land on the Big Island. Land is kind of different there. You buy what's on top of the land. The land itself still belongs to the government. At least that's the way it was back then. I'll probably move to Maui once they start to reorganize it. Rebuild it. Honolulu's nice too, though. I mean, I can handle that. If I see the 9 start to move up and touch up to the 21, I might call it out, Airbnb. Damn, SPX. Gosh. They're not paying very much. Well, the 5210s did. We had the 5200s. Man. I really... Oh. Maybe if I was paying attention to the chat, I could have probably seen some of you guys say in the stock, you idiot. Here's 3 white soldiers with an extra one to boot. Now, if we took just 3 white soldiers here and pulled back 1 candle, I think we would have had a little bit, we would have got to here. The fact that we had 4 might have been a little bit too much more. That's a perfect spot to take that trade. Look at that hammer. Nice little hammer down there. I got all the wicks on the bottom. Bullish. trying to think of another one that I used to trade a lot. Stem. Something ain't right with this. This goes way back. Stem cell, unless they got rid of, I bet you stem. Did I just see the Democratic spokesperson? Oh, these Mexicans, man, this is a good. These guys can fight.
Auto Trader Private Seller Exchange is a safe and secure.
Oh no, not bare buckle. I can't watch this. Okay. Phew. Come on, a clean fight, guys. Just go in there with a good right cross. The guy with the t-shirt's gonna whoop his ass. See, he's got his hands open. Boxers don't do that. You gotta, you ain't that good. Get that finger out of the way. He's hugging him. Okay, stem ain't the one. So I'm watching bowling start to bounce. This one chart looked like a cigarette. Oh my gosh. I can't believe that's moving up there. I put the trend line in here. No. 1, 2, 3. Damn it. No. 12.50. Oh, that's $1,000 a contract from the bottom. $1,100 a contract. No, 1,000. 30. Now it's 1,000. 12.30 is 1,000. So I settled for less than 800, and I could have had $5,000 profit, not counting what I put in it. Magnificent. What am I going to do with myself? I'll never get it. Damn, right to the penny. Right to the penny. Rub it in. Rub it in. Watch your mouth, Randy. Wash your mouth out with soap. There it is. 1, 2, 3. You can trade with me. If you can count to 4, you might make it a little more. 1, 2 bits, 3. Oh, I've been shebagled. Sometimes you gotta update that YouTube when you're in here, because you could be more than 15 seconds behind. Now, YouTubers, this is just for educational purposes only. I hope you make money. If you can count to 3, you can trade with me. We got 8 minutes to power hour. So I'm going to write a song. I wrote a song. Let's see if it comes up in here. I was sitting down making some silver dollar porter. And I wrote this song in about 5 minutes. It's one of them 5-minute songs.
Mowers are here. 0% financing available for qualified
About
buyers.
making beer.
My man Ezra, flying without a net so that he could order himself a ice cream, please.
Hello. This is Boil Your Wort Right by Washboardjim, which is I.
That's my dog.
Boil your wort right, boy. Boil your wort right. Can't wait to taste it when the time is right. Gathered some my friends, boy. We all shared around the friends table over, and we all hopped around. Boil that wort right, boy. Boil that wort right. Can't wait to taste it when the time is right. In the malted barley, measured pound by pound. Another friend came over and we all shared around. Boil that wort right, boy. Boil that wort right. Ain't wait to taste it when the time is right. So I sparked my dreams, boy.
Out every last drop. Turned on the cooker and I added a little hops.
Boil that
wort right, boy. Boil that wort right. Can't wait to taste it when the time is right.
Thank you for
The homebrew, it really meant a lot. Next time you come over, we'll smoke some of my pot. That wort right, boy. Boil that wort right. Can't wait to taste it when the time is right.
Thank you for
The homebrew, it really meant a lot. Next time you come over, I'll share some of my crop. Wort right, boy. Boil that wort right. I can't wait to taste it when the time is right. When the time is right. When the time is right.
Boil That Wort Right by Washboardjim.
One of 20,000 songs that I wrote.
Have a great day. Right now, get $50 off per axle on standard brake service at Firestone Complete Auto Care.
Damn. How dare you? Two more minutes to power hour. These things are at $1,410. That would have been $1,200 a contract.
Next time you come over, I'll show you some of my crop. Can't wait to taste it when the time is right.
puts. Man, I can't believe I got them 5200s at $2.10. And that's what I get for hanging out at Diddy's house. $14.50. I gotta do better. That's leaving too much money on the table. I didn't care if it was up a couple $100, but when you go up $1,000. Oh God, here's Brandon. Always clean janitorial. I like to keep places clean and safe. May I help you? This is Always Clean Janitorial Business. May I help you? This is Always Clean Janitorial Business. May I help you? They keep hanging up on me. I'm going to walk over this chart again today. Oh man, inverse head and shoulders. It takes you right straight to that there support level. There's it, pull back. I'll be right back. We have, it's power hour, 8 minutes. Let's see if I can argue with CNBC here for a second.
Income consumer and going into the next couple of weeks, that's certainly something that we're going to watch.
I mean, online retail was a big blow up over the last few days. So,
Absolutely.
you know, there's a big divergence between the winners and the losers within the retail. Maybe we get more clarity on that next week. Let's bring in Chris Heisey now of Maryland Bank of America Private Bank, and Joe Terranova of Virtus Investment Partners. Joe, a CNBC contributor. Welcome to you both. So, Chris Heisey, I'm reading your notes. You seem pretty bullish to me.
Yeah, Scott, we try to parse through all the data. We've got the best consumer data out there.
The best? Bank of America?
The consumer. We still see very good signs with the consumer. Is it slowing down? Absolutely. Is it worrisome? No. Most of it in the job market is driving that right now for certain income cohorts. The wealthy have created a lot of wealth since 2020. The shortest span ever, the largest amount of wealth created ever in that shortest span. But what's important in all of this context is, are we in the early stages of a long-term bull market or not? It feels
That's a bullish setup. We got a dragonfly.
But we are, in our opinion, and it's because the wall of worry is still high.
Or a hangman,
Profits
but that'd be at the
are
top.
above their long run rate. Sentiment, as I mentioned before, pike that I need to be worried about. And finally, you're starting to see this basing out of small caps. And Kristen just talked about it before, and Joe's been talking about this for a while. You've got much more industry group
double top break
participation, across the board. It's not just the Mag 7 or the Fantastic Four. In fact, there's well over 150 companies in the S&P 500 that are driving the performance.
Joe, maybe the most controversial take that Chris has is this idea that we are in the, what he says, early portion of a decade-long bull market.
Bullshit.
I say that because I think the prevailing view among most is we're late cycle. He would have you believe otherwise. What say you?
He would. To look out over the next decade and to gain a clear understanding of what direction we're going to go in is very difficult for me. I'm sorry. I'm just being candid.
I agree with you.
I can't go out that far.
We're too far in debt, okay? We're way too far in debt to think 10 years that we're going to have a bull market, because that's bull crap. We have too much liquidity in the market right now, and there's going to be a point where there's going to be none.
For the next decade, I just can't. I can't look at it that far.
That's fine, but you know, when people say we're late cycle, that doesn't necessarily imply that we're going to be okay through 2025. That means that this bull market is going to be
overheated
fairly soon.
So here's why, and that's an excellent point. And here's why I disagree with that, because I think you have to look at how far we've come. Yeah, there's a great song by Matt.
Way too far, way too fast.
We've come. But I just want to.
He says, how far have we come? Way too far, way too fast.
Sitting here with me on a Thursday in early April.
Companies don't turn around in a year. Maybe they brought the market down on purpose. Through constant agging on rate hikes, and they gave Pow the strings to go for it. I'm even thinking if they start cutting interest rates, I don't know. But I don't know. I think too much liquidity.
10-year Treasury has declined 30 basis points since April 25th. And yes, the mega caps have supported earnings growth for the S&P and for the NASDAQ itself. So I think
he's in it for himself, Powell is. He doesn't care about anything else. He wants his balance sheet shrunken a little bit because of government overspending.
Agree with this notion that we're more early stages of a bull market rather than late stage?
I think we're certainly not in a late stage. I think when you look at the leadership and what we just talked about this rally having the potential to broaden out, that we're seeing earnings broaden out, that wouldn't happen in a late stage of a bull market. You'd actually see the opposite in terms of the leadership narrowing. Right. And I think you do have to take a step back, and I've said this a number of different times, but like, what do we know to be true? we know that there's significant amount of cash on the sidelines. Just $6 trillion plus in money market funds alone, even more than that when you look at deposits. And so you have a lot of cash on the sidelines. We saw that recently in terms of buying the dip.
Maybe when the government starts putting in that liquidity, some of these $6 trillion sitting on the sideline might throw it in finally. Let the private sector do the work.
It's not exactly a linear trajectory down. It can be a little volatile. That's actually a pretty conducive setup for risk assets.
I think your late cycle, when behavior, speculative behavior, gets so complacent, and the areas of the market that right now are rightfully correcting, the emerging growth stocks, they are correcting. Generally, what you see is those stocks go parabolic at the end of the cycle. What we're seeing right now is indicative of a healthy marketplace, a marketplace that wants to pay the premium for the...
He said they go parabolic in a cycle. Well, didn't we just have a huge parabolic run? 400, 500, 600%. I mean, the NVIDIA from 5 to 9 in months. Mister from 5 to 2,000. SMCI. You got NVIDIA 100 to 900. Don't you think we already had what he just said? And we're starting to cool off?
For the right reason, because you know that the Fed wants to cut. They feel confident that they can cut because inflation's coming down. You get the earnings story that Kristen is talking about. I guess those are good reasons to stay bullish.
Certainly in the shorter term. So let me put a few things in the context.
What's that mean?
What's that mean? Hear you. Real loud, Siri. Call 911.
2 years, because you've got a business cycle, you've got an economic cycle, and you've got market cycles that
he's one of toupee.
Pierce through both of those. We're going to go through, as Joe said,
he's one of toupee.
Late, early, mid cycles in the
market. That thing's popping around on him.
The incoming data. What I meant about the long run bull market is it's driven by more demographic factors. It's driven by the sheer wealth, the size of the millennials, the Gen Z. They will have no choice but to invest. So you have higher demand for investing. You have lower supply for equity overall, given what's going on.
No, you have no choice. This guy's a nut. We have choices in America.
Clear, transparent themes.
Don't tell me what I got to do.
Now, what do? You use the yields.
I close my business down and retire, buddy.
Like this, and cash on cash is an extraordinary, powerful movement to take that cash,
I agree with that,
on your cash or fixed income, and reinvest back into equity hedges, even if inflation doesn't come all the way down to 2%. So I think this is a time. Turn the page back to 1990s. We had an incredible decade. Yes, there were early, mid, late cycle movements, but through the decade, we had a pretty good run.
Kristen, what about the small caps that Chris was talking about? Year to date, it's such a dramatic underperformer. Is the Russell, for the obvious reasons of higher rates, loaded with regional banks, all the things we've discussed for forever at this point. Is now the moment, finally?
I actually think, like, within small and mid cap, if you look at the profitable growth pockets of that market, that's a much more attractive place to be in terms of playing this catch up and playing a broadening out versus going into something like the Russell 2000 that, to your point, you're going to be exposed to some leverage, you're going to be exposed to.
And that is, on one hand, easing the equity markets are rallying, fixed income markets are rallying, spreads that are at all-time high. And I think that's a policy mistake by the Fed, because it's going to come and bite them back. It is going to be much more difficult for them to fight inflation. And we had essentially a client briefing 3 weeks ago where we said, because of the way the Fed is easing the financial conditions and essentially keeping its balance sheet size to be too large, they are they're making it much more difficult on themselves to fight inflation. So I'll keep an eye on the CPI release next week. We have been seeing for the past 3 months, the CPI has been coming hotter than expected. Always there is an idiosyncratic explanation. You know, housing inflation is relatively high. I don't think all the elements of housing inflation has been captured and reflected in CPI, so that component of CPI is going to stay high. And as CPI continues to have these hot prints, that might be a counterbalance to their quantitative, to the lack of quantitative tightening, which is going to push the rates higher.
It's an important point on housing because it's a bit contrarian. I think one of the strongest, or maybe not the strongest, but the most common argument I hear for further disinflation is that rents are going to be coming down as we've seen a little bit of cracks in the job market, and that rents surged in such a way post-COVID it's basically unsustainable. It calculates on a slower rate of change than other inflation metrics. What's your response to that, that those rents are going to come down, Ali?
No, they don't.
It's a very good question.
Rents don't come down.
There are different sectors
I've never
of
had
the
a
market.
rent.
Not all
Hey,
real estate
Jim,
are the same.
you've been such a
And
great
we have
tenant.
Historical supply of multifamily housing hitting the market. It's
I've been renting for a very long time, and I've never had one say, Jim, you've been such a great tenant, I'm going to lower your rent. No, Jim, you've been such a great tenant, and you paid on time, I'm going to raise your rent another $100 this year. That's the way it always is. They never lower their rent. I don't think they do. I've gave discounts, but nobody's ever come to me and say, hey, Jim, we're going to charge you only $500 this month.
Of COVID, and there is, I think, some catch-up to do. And again, today, when you see that if people are making
my
decisions
rent went up $200 through
renting
COVID
versus purchasing a home, renting is far more attractive given where the mortgage rates are. So
and it ain't gone down yet.
It will take a
It
lot
went actually,
for rents to come down. And
I had to con them to keep it the same.
Fed makes mistakes, I think, that are adding fuel to the fire by slowing down the pace of quantitative
That's a stupid
tightening,
question.
the harder it is for rents to come down. Essentially, the inflation that we are facing, the deficit spending, all of them are going to create pressure on rents. And we are so far not seeing evidence of housing component of inflation coming down.
If that's not going to come down the way folks hope, then it definitely reduces the potential for overall disinflation, because we're seeing pretty serious stickiness in some of the more staple-like non-discretionary items. They've maybe stopped going up, but they're not really coming down. So where does the math leave you all in terms of like the floor for CPI or whatever inflation metric you prefer? What might we expect to be the short-term floor, maybe like here to the end of the year?
I would expect to see prints closer to 4%, especially some of the base effects is going to kick in the second half of the year. And it has been interesting few months, because every time there is an inflation release, CPI release, market sells off. Every time there is other kind of releases, earning release or employment numbers, the market rallies. I think we might see that tug of war between, on one hand, inflation causing a little bit of, I wouldn't say alarm, but wariness, and pushing the probability of rate hikes lower, rate cuts lower and lower. If anything, there is a possibility that with a couple of more hot inflation prints, we could see a rate hike being on the table as opposed to a rate cut.
So in short, because we're out of time, you think the market's wrong here the last week in repricing the cuts back up after the data we got?
I think it has been a little bit too optimistic in terms of repricing the cuts. On the other hand, there are obviously some technical reasons. If you look at the options market, before there was a 30% chance of rate hike implied in the rate option market, and now that has gone significantly lower. And then there are other factors that could be impacting the market for rates. Because, for example, when Japan intervenes in the FX market, what do? They sell their treasuries to essentially buy yens and sell dollars against that. So when they are doing their intervention, that is creating supply of treasuries. So some of the intricacies and technicalities that come from the currency intervention could also be pushing the back end of the curve wider, and maybe some.
Okay. SPY. Chart shared from Chandler. La 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 la. Now, I think for the first time, I'm actually seeing big money manipulating the market. $6 trillion on the sideline, huh? If $6 trillion on the sideline and we're at these all-time highs, a lot of people missed out. So again, the hedge funds, if that's what they say is holding all the money, they're going to be losers again this year, and the individual traders are going to be making a killing. $6 trillion, man, that's more than I've ever heard sitting on the sideline. That's funny. I'm about out of it. Save had a nice little breakout today. $387 we go higher.
We're more mid-high end in terms of the product we've been developing and we're aiming at, and that's expected to be released and announced at Computex, which is the big computer trade show in Taipei that happens at the beginning of June. We also got some other great products coming out. We have a mobile controller that'll be coming out very soon, so that'll allow you to play with your iPhone and it's coming out by SCUF, so it's going to have the great SCUF controller innovations like our PC and our console controllers from SCUF do. So that's coming out very soon, hopefully within the next couple of weeks. And our move towards really a lot more customization, the ability to really make the products look like the consumer really wants it to. Just something that's black or silver or white or something. A lot of people today want more color and more personalization, and we have the technology to do that, to let you really personalize your whole setup so that it's really unique for you.
All right. The simulated racing industry, sounds like you guys think there's a lot of potential there. Certainly looks pretty cool from what I saw, but I'm gonna have to get a bigger apartment. Not quite as easy to fit that rig in there. All right, thanks for the heads up.
We have a rig set up upstairs. It's sort of like people that are into cars and into racing, and I'd say my boss Andy Paul, who's our founder, is definitely a car guy. I'm not as much of a car guy, but it's a spectacular looking demo rig we have set up here with basically our 3 flex monitors. So we have pretty much 180 wraparound monitor experience for people using that.
Yeah,
so quite excited about what we have and obviously look forward to the future as well.
All right, we'll keep tabs on it. Thanks for the update. Appreciate it, Mike.
Great, thanks for having me back, and maybe I'll talk to you again next quarter.
All right, sure thing. Thanks a lot. Michael G. Potter, Chief Financial Officer of Corsair Gaming. All right, riding the downshift in consumer spending for big ticket items in your computer, but maybe riding the upshift for the simulated racing market. When we come back with consumer sentiment tomorrow, we're going to take a look at the world of credit and see what's at stake. Be right back.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Roblox shares are plummeting, nearly taking out their previous 52-week low. The first quarter update, however, was mostly positive.
Roblox?
Adjusted losses totaled 43 cents a share, which was
Or
narrowed to
BLX.
53 cents per share loss the street had been
You might have a
expecting.
trade here.
Daily active users rose 17%, and hours engaged.
Yeah, they said this thing's really gonna
The
fly.
trading platform also posted bookings growth of around 19% from a year ago. Total revenue climbed 22%, totaling just over $801
They're
million.
pumping the crap out of this.
Well below the $920 million consensus. The company's
CNBC
CEO
was.
did admit they saw less growth in the quarter. He attributed this to shipping a new batch of tech in the second half of last year, as well as some non-optimal content introduction on its platform. And even though shares have eased a bit off of their session lows, the stock is still pacing for one of its worst days in over 2
remember
years. For more on the story, check out the Schwab Network app or visit schwabnetwork.com.
Yesterday I talked about the guy from Wall Street that knows when to exit a trade. So I'm sitting here listening to CNBC one day, and Rob Block said a triple top. We're going to break. We're going to 60. If you can count to 3, you'll learn how to trade with me. And you'll exit a triple top at an all-time high, or whatever, yearly high. We're going to break this channel and move it up. If you can count to 4, you might make a little bit more. So let's wait. Let's set an alert for Roblox. Right there. Nobody will. If you can count to 3, you can learn how to trade with me. If you can count to 4, this is 5. It might be a goner, but we'll wait, and we'll get it here at this double bottom. Set an alert right there at 25.64, and that'll be a strong buy if we hit that. If not, I'm going to keep it on watch. I will not buy it here. Earnings sucked.
Erred in allowing credit conditions to get too easy last fall, and we're now bearing the brunt of that. Things sort of reaccelerated in Q1, and so to slow things down again, the Fed's going to have to really tighten the reins and keep them tight here for a little while.
Where does that take you as a portfolio manager? I think up until now it's basically been higher quality, right? Being in the places that are least susceptible. But what if we really start to break down? Is there a situation where the quality spectrum is vulnerable, or do you get to go out and just outright short, bet against companies you think that are going to break down? Where are we at in that part of the cycle?
Yeah, great question. And up till now, you're right. Up in quality has been one of our preferred allocations, but also credit marks have been wide open, and so selective lower quality borrowers have actually.
Okay, I'm going to raise it up. I'm going to try something new here.
Finance maturities.
Let's talk about this.
or
I got a
do
new
other
idea
things,
here.
Corporate transactions to sort of push out that maturity wall. So lower quality.
Okay, I went to that weekly and I charted that support level. And I'm noticing here on the monthly, each one of these represent a month. So that's still bearish. So I'm going to take and put another price line right here at 28.27. Now, I want to see if I can catch the knife on the body of this here monthly candlestick. At 28.04. I think I set the alert above that. Okay, what's going on with my computer? We just all of a sudden went flat. Dadgummit. Anybody having problems? Anybody having internet problems? I mean, Ameritrade problems? Could be internet. Yeah, it is. I think. No. Connected. It says I'm connected. What was I looking at? I can't remember what I was watching now. It wasn't tight. Dadgummit. What was I looking at? Anybody remember? Firms up 9%. Time to sell. Let me look. Are you looking just as a day trade, or you too, Percy? Yeah, we're at the 50 SMA on the hour. With an inverted hammer. Sell signal. Then catch it back off the 200. Could be a gravestone. That's a gravestone. Yeah, I got problems. Put a new ticker in here in a minute. We got a shooting star on X. Yeah, I'm not having good internet connection here. I hope this don't mess with my videos tonight. Da 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 da. Got a rising wedge with a 1, 2, 3 on the SPY. So tomorrow's support will be the triple top. Let's find tomorrow's support. So we got triple top. And we got a head and shoulders. That's our low. Right there. No lower than 516.33. And then we'll keep whatever we close at tonight. You'll draw your trend line up here, and you always remember that VWAP. So if you come in tomorrow and you want to take the SPY, possibility of catching it off the VWAP could be pretty good. This is bullish. And there's 200 SMA. Make it bigger line. Did you see the message just get on there just now? That was like 20 seconds. I can't trade when I'm skeptical of my surroundings. Puts are neither lotto and 30 cents, not me, no. No, I wouldn't. Not until we broke that triple top. That was support. If we broke that, I would do it all the way to the 200. Right? But we can't do it until we break that channel of resistance, which now is support. like I said, for any beginner trader out there, all you got to do is trade the SPY with me. You make money every day. I know too many people that are trading it right now and making a lot of money. Millionaires. All I trade anymore is a SPY. I bring in about 30, 40,000 a day. There's a big breakout. They're so easy to chart. I've been charting for 20 years. I know what is easy and I know what ain't. So I'm gonna stick my, for people on YouTube, copy and paste my current watch list right now. Copy and paste it and write all these stocks down if you're not getting into it yet. If you don't have a strategy, you'll watch me trade every one of these every day. They're always in the news. They're always talked about on CNBC. They're always talked about on Schwab. You're always updated on what's going on with them. Might start trading the QQQ. I haven't really traded it much. Now I know a millionaire that trades only the QQQ and the TQQQ and the SQQQ. I can't get this thing to work. This sucks. ProShares Ultra QQQ. I forgot I got another back. I can use this. He's traded the QQQ for ever since I've known him. A lot of traders have like one go-to trade. Mine was Tesla for so many years. I'm making a lot of money with Tesla. Now it's NVIDIA, SMCI, SPY, and the SPX. And this guy trades this one here all the time. Had a huge gap up. Yeah, I shall pull back. You got the SQQQ. When the market's going down, this thing will fly. That's bear. 4 more minutes. Back to even on my trade on AMC. Trying to determine if I should get out. I'll give it one more day. Kind of leery of it though. We broke below $3 and I didn't like that too much today, but that could be the flush out of rookies. Say I'm tired of this. I have to watch first after hours, see. Here comes the flush, 358. I could lower that down and get out of it. It ain't nothing, no, 300 shares. My $1,000 limit. For something that I'm not really I'm tired. So I'm gonna have I want the room to grade me. Magnificent. You've traded with the scanner. With me, with trade ideas. We know that we don't want to listen to me talk all day and argue with CNBC. So I eliminated that. Is there anything else I can do to make it better? I thought today was very constructive. Oh man, I'm not even on voice. Guys, how long have I been gone, man? I've been talking up a storm. Wow. I wasted all that energy. Now that you can hear me. It's 3 o'clock. That's funny.
Watch my mother go through.
I'm sitting here talking. So I want to... Magnificent? I thought I was about ready to lose Magnificent a couple weeks ago. Because he got tired of hearing me arguing on CNBC and getting frustrated. And it wasn't helping anybody. Who wants to listen to me debate liberals all day long? Especially when you're progressive. So when I first started, we had trade ideas, and I was able to call new high, new lows. This setup's ready. We got a low float. Let's dig it. And I didn't want to have to worry about coming up with the money all the time to pay for the scanner, so I got rid of it. It was like a big pain on my ass, begging for people to pay for the scanner. So I got rid of it. Then I went back to the old days of watching CNBC, but they've changed. They've got more political and a lot more liberal. They used to have a 50-50. You know, they'd bring in the conservative CEOs and bring in the progressive liberals, but there's very few conservative CEOs out there these days. I don't think I can name 5. So I got rid of that. I didn't want to argue with CNBC because I don't think politics should mix with trading. And I started watching Schwab, and I like Schwab a lot. Schwab, I can get trade ideas. They chart it out. I can get a second opinion, and I can get an honest opinion because they're not pumping the stocks. CNBC pumps stocks. They were pumping all these freaking highs on this irrational exuberance, saying we were going to go higher. We're going higher. And I wasn't going to have it. And I was starting to get irritated. They called 6 rate cut. The market tells them this, the market tells them that. That's bull crap. I don't believe that one bit. I don't think the market's forward looking at all. It's in the moment. So I'm going to keep it like this for a little bit. I think I've got better in trading, and I want to thank Magnificent for, bringing it to my attention. Some people have different opinions. Some people have different personalities. Some people can get offensive. Some people just love it to death and giggle all day long listening to me yak, 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 yak. So sitting here talking to myself all day long, I get kind of wore out by the end of the day, and I just go into a different mode. I sit here and I watch, I love watching YouTube. I got certain channels I like to follow. I love watching this little thing right here. Let me see if he's on here. Well, no Pablo. Hey, did you hear what the lady from New York said? She said blacks are too stupid to know about a computer. In the Bronx. The kids are too dumb to know what computers are. Black kids. And she's a big liberal. Oh, this is Walter. It's not Pablo. I seen a guy on YouTube that lost a ton of weight. I think they're racist as could be. Using someone's skin color to get ahead in life. There's Pablo. I love watching this. This dogs.
Revenue looking for 967 million, 986 million. Street was looking for $1 billion for that estimate. Full year guide.
Pablo, stop trying to run away. Lido, get in the bath. No, stop it. Stop trying to hide.
Bro, I didn't even die for like 3 seconds.
I'm going to die to have a heart attack. It's the first thing he thinks about food.
There's a bug. There's a bug. Do you not care? She gonna get it. Safe. Right, listen to me. It's 5 on each plate. You've got to finish your plate and you're the winner. You do not steal off the other person. Do you understand me? 1. No. 2. 3. No, you're cheating! Sleep, he's out. He's not moving for nothing. I wonder who I'd give this treat to.
Oh yes, oh thanks.
Share your food.
Oh yes. Oh no. Oh yes, sir.
Share your food.
Oh yes, so tasty.
What is wrong with you?
But I'm
strong enough to care. He ain't heavy. He's my bulldog.
While he's sleeping, we'll do a quick video. Back always.
While he's sleeping, I can finally do my solo career.
The Amex Business Gold Card. With flexible spending capacity that adapts with your...
That's Pablo. So, I appreciate everybody, and we'll catch y'all later. It looks to me like I'm even on my stock, on my AMC. SPY, yes. So YouTubers, I hope you're getting better at trading. Well, you're welcome there, Kenzuko. Nope, I don't watch movies, and I don't watch TV. I haven't turned my TV on in 4 years. I got sick. I tell you what, I turned my TV off. I liked one show and one show only. And now I can go to YouTube and watch it. And this is all I wanted to watch every Friday night. It'd keep me out of the bars. And it made me feel good about myself. Cops.
Due to the graphic nature of this program, viewer discretion.
So they discontinued it because it wasn't politically correct. And I said, I've had enough. I said, I'm tired of wokeness. So I just shut off my TV. I don't go to the movies. I don't have nothing to do with Hollywood. I'm a protester. So no, I haven't. I'll go to a jam session, or I'll play music, or I'll just sit here and watch my videos. And I don't go to the bars much anymore. But I haven't turned my TV. It sits up there in the corner. I haven't turned it on in 4 years. Cops was my favorite show. What you gonna do when they come for you, bad boys? So, that's it. We'll come in here tomorrow. Today was an excellent day. It was a really great lesson to learn. And let's go over the SPX one more time before I call it a day. I mean, this is something that you really got to be knowledgeable about. SPY, is a trade that's a lot, it doesn't cost you as much, your gains won't be as big, and your losses won't be as big. So that's a medium kind of media that you want to be in. If you're a beginner, if you want to make bigger money, then you do the SPX. So here's the SPY. We had a resistance level from yesterday, and we had a triple top as we come into the morning. And we broke and we fell back. So we had a bullish breakout. We came back and found support from the pivot point of the inverse head and shoulders yesterday. And then we bounced up and we hit the triple top and we pulled back. So first thing this morning, I looked at two different time frames. I pulled up the 2 minute. And we had 3 black crows off the 200, which is a perfect trade idea, with a tweezer bottom, with a spinning top, a doji, and then a bang. So as long as we broke that triple top and respected it on the pullback, you were still good. We respected the day opening high right here. So the resistance channel to break was the triple top from yesterday. And when we come in here and we counted to number 4, we made a ton more. So remember, we hit the triple top, we had a bullish divergence to the upside. We came back and hit the 200. We knew this was a triple top here, and it had a 1, 2, 3 here, pulled back to the 200. If you can count to 3, you can trade with me. And we pulled back and hit that 200 on the 2 minute. I was practicing today with the 3 minute. We have a triple top come in this morning. 3 minute, landed off the 200 with a tweezer bottom. 3 minute time frame. 2 engulfing candles. Pull up Google engulfing. These are engulfing candlesticks. These are, like big candlestick. You have 3 engulfing candlesticks, and we have 1 to the upside. 2 engulfing candlesticks. Boom. 2 engulfing candlesticks. Boom. I mean, they need to look bigger than that. So that would have been a trade too on the 3 minute off the 200 SMA. Now, many traders use the 5 minute. 5 minute off the 200 SMA with a 63 crossover on the 5 minute with a hammer. So you could have took that trade. Tweezer bottom. That's it. I'm gonna go get I got that thing cooking in the oven. I got a chicken pot pie. I love these pot pies, man. I'm gonna go tell you which one it is, and I'm gonna get out of here. It's called a Boston Market chicken pot pie. They cook, and it takes about an hour. It's got 9 grams of protein in it, and I love the gravy on it, and the crust is perfect. So that's what I like. I eat probably 1 a week. that's it. I'm going to get out of here. Really appreciate it. I might set some kind of funding down here in my content if y'all feel generous. And I'll get on out of here. It's all about chart patterns, moving averages, and being in the now.